Okay.
Five.
Shares of Marriott falling sharply. The hotel giant reported a profit of $2.26 a share. That's 5 cents lower than expectations. Revenue came in at $6.26 billion, slightly below the estimate of $6.27 billion. Worldwide, system-wide revenue per available room, a key metric, grew 3% over the prior year, but that was below expectations of a 3.5% increase. Marriott also lowering earnings and revenue guidance for the full year. It's a pretty big sell-off, 3.6%. Looks worse than it is at 9 points, but it has been doing pretty well, as you can see, for the remainder of the year, but down today.
Low-cost European airline Ryanair reporting half-year results this morning. Profits falling by nearly 20% from a year ago. The company citing cheaper summer fares. The company also trimming its passenger forecast because of delivery delays from Boeing. Joining us right now to talk about all of it is Ryanair Holdings Group CEO Michael O'Leary. The Irish budget airline group, which is Boeing's biggest customer outside of the United States, operates Ryanair, Ryanair UK, Malta Air, LATA, and Buzz Carriers. And Michael, thank you so much for being here.
Great to be back here, Becky. Good to see you.
So the stock is up this morning by about 0.5% on the news. Profit was down. That wasn't unexpected because of what happened with fares over the summer. Where do fares stand right now?
The fares declined this summer by about 10% in the first half of the year. It surprised us. I mean, it was weaker than we thought it would be. But I think a lot of that was to do with this dispute with the online travel agents who boycotted us last year. That hit us through the summer. We responded by lowering airfares, filling up the planes anyway. Most of those online travel agents have come back online on our terms. The price declines are moderating into the third quarter. Forward bookings into the December quarter are strong. The price decline is going to be less, we think, between 0 and 5%. And you know, the frustration we have is still the Boeing delivery delays. So we've now had to trim back our traffic forecast for next year from 215 million passengers to 210. But I think that means there's going to be upward pressure on pricing through the summer of 2025. We'll have less capacity. We'll be delivering less growth. Demand is strong. Interest rates are coming down across Europe, and I've been reasonably optimistic, which I think why the share price has responded well to the call this morning.
It almost sounds like you think the Boeing delays are good news for profits. You don't have to pay for the new planes coming in up front, and you're going to have less ability throughout the entire industry.
It's a strange way. I mean, speaking as a shareholder, I think the Boeing delays are good for our business. Speaking as the CEO who wants to continue to grow and take share from competitors, the Boeing delays are bad for my market growth ambitions. We got stuck this year. Boeing left us 20 aircraft short. We recruited all the pilots and the cabin crew, so the costs were a little bit higher this summer than we had. We've lost 5 million passengers this year because of those delays. We're going to lose another 10 million passengers next year because of these delays. But I speak weekly with Stephanie Pope in Seattle. I think she's doing a great job. She's there, she's on the ground. There's someone you can actually lift the phone and talk to. They're having a vote tonight. Hopefully they'll vote in favour. I mean, a 38% pay increase. They should take it and run. But we want to see Boeing back making aircraft as quickly as possible. We still have 29 aircraft deliveries in advance of summer of next year. We think we'll only get half of those, maybe 14 or 15 aircraft, which is why we've walked back our growth for summer 2025. We'll get the remainder in time for summer 26. And then the big issue for us, I think what I'm most heartened by is, even during the strike, they still work on the MAX 7 certification and the Boeing MAX 10 certification. She's pretty confident they're going to get those both certified in 2025, and then we take the first 17 of the MAX 10s in time for summer 2027. These aircraft have 20% more seats, burn 20% less fuel. They are going to rocket fuel our growth and our cost advantage over every other airline in Europe for the next decade.
We just had an analyst on who covers Boeing and said that every month that they are on strike means a delay of probably 9 to 12 months before you actually get the aircraft that are not being put together. That's how big the whipsaw is. If this doesn't get passed tonight, would you change your tune about what you're thinking?
I wouldn't. I mean, if it doesn't get passed tonight, I think it's going to delay by another 2 or 3 weeks. And I think there's a reasonable prospect it gets passed tonight. I think the pressure is on Boeing, certainly from the administration here, to get this thing fixed. I'm not sure fixing it tonight is going to make much difference to how people vote tomorrow. But if it doesn't get fixed tonight, then I think it won't get fixed for another couple of weeks. We're coming into the end of November, Thanksgiving, December is Christmas. This is not a great time of the year anyway. We've pretty much decided that we're not going to see our 9 Q4 deliveries until Q1 of next year. I don't think if the strike drags on through November, I don't think that'll make much difference. It will delay, however, how many of the summer 2025 aircraft we get. So if it delays much more into the end of November, I think we won't get 15 for next summer, we might only get 5 or 10.
You're a tough negotiator. You have been with Boeing in the past, and you have called them out when you thought the management was not doing the right things. I hear a little bit of negotiation in what you're describing right now. How does that impact you? You're not going to be getting what was promised to you. How do they make good on that?
To be fair, they don't. We get some modest compensation for these delivery delays, but it's small beer compared to, like this year, we've lost 5 million passengers. No amount of compensation would make up for the profit we would have made out of those 5 million passengers this year. Next year, we're going to be 10 million passengers down on our original targets. But look, we are where we are. We got to work with Stephanie Pope, Kelly Ortenberg, the new management team. Must say I'm impressed by the job she's doing. The fact that she's there, she's on the ground, she's trying to fix the issues. I promise I'm going to go out and to Seattle, meet with her, talk to the teams sometime in January or February next year. Mm-hmm. We need to get Boeing back up and running.
Yes.
But, Boeing did get an awful lot of unfair criticism at the moment, some of which they deserve, but Airbus's production is just as badly disrupted as Boeing's is. Airbus have engines that have to come off the aircraft to get repaired, but Boeing gets all the negative PR. It's unfortunate, I think they are, but Boeing are at a low point now. I think Boeing will come back strongly in 25 and 26.
When you say Stephanie Pope is there and there's somebody at least who will answer the phone on the other side, was that not happening before?
No, unfortunately, I think the people who were in Seattle weren't in Seattle under the previous administration. Now, I accept Dave Calhoun, who I dealt with in Boeing before. I think he did a remarkable job. He got the MAX ungrounded. But having his management in Seattle weren't ever in Seattle. They were sales guys who were on tour around the world talking to customers. We need people who are in Seattle fixing problems, and I think I'm very heartened by the job that Stephanie Pope is doing. I'm working closely. I speak to her weekly. We have a kind of Friday afternoon call. Sometimes the news isn't good, but at least she's doing her best to get the thing solved. She can do nothing until we get the labour thing resolved. I hope it gets resolved in November. But one way or another, it means Ryanair's going to be will carry about 210 million passengers next year instead of 215, and that should be good for pricing. The big, I think, news that shareholders took from our conference call this morning was the fact that our unit costs this year are flat. So even though we've grown by 10 million passengers, we're the only airline in Europe where unit costs have been flat. Everybody else is struggling to maintain are struggling with cost increases. So the gap between us and every other European airline is widening. And if we see any upside in pricing next year, I think that's going to flow straight through to our bottom line and to shareholders.
You mentioned that most of the online travel agents have come back in. Booking.com has not yet.
No.
How much of your travel are they responsible for?
They're tiny. Booking.com are not big in Europe. There's two who haven't come back in. Booking.com, who are tiny in Europe, and eDreams, Spanish OTA. They're bigger in Spain, but in our overall universe, they're still pretty small. But I don't think their models can survive. When we have over 90% of OTAs now distributing Ryanair fares at Ryanair prices, it's very hard to see how Booking.com and eDreams can continue to survive inflating Ryanair prices, which means they're going to keep losing market share to their OTA competitors. The critical thing for us is we will fight with the OTAs on every beach, in every hill, in every field. We will not ever let somebody get between us and our customers. I started off in this business back in the 80s and 90s when the GDSs were, charging 10% for distribution and travel agents another 10%. The internet came along. We've taken that 20% back. We're never giving it away again because we want to pass it on to customers in the form of lower airfares.
I don't think I'd ever want to be on the other side of the negotiation table from you, Michael.
And I would say much the same with you, Becky.
Michael, thank you very much.
It's great to be here. Good to see you.
Thank you.
Okay, coming up, two more big interviews you do not want to miss this morning. Both have plenty to say about the election. Billionaire hedge fund titan John Paulson is going to join us in just a couple of minutes. And then at 8:30 Eastern Time, media mogul, senior executive at IAC and Expedia, Barry Diller, will be our special guest. Squawk Box coming right back after this.
CNBC.
Legendary music producer Quincy Jones has died. Jones worked with stars including Frank Sinatra, Will Smith, Michael Jackson, Ray Charles, Frank Sinatra. Some of his greatest achievements came with working alongside Jackson on his off-the-wall Thriller and Bad albums. You might also remember We Are the World. He died on Sunday night at his home in Los Angeles, surrounded by his family. He was probably one of the best-selling music producers in the world over all this time, and had more influence on the music industry than just about anybody living today. Jones was 91 years
He
old.
was a musician too, and he played trumpet.
Yep.
He backed Lady Day, Count Basie. I mean, Lionel Hampton. I'm just looking at some of the stuff. He had a scholarship to Berklee College of Music up in Boston, but left to join Lionel Hampton and tour with him. So
His impact beyond. I mean,
91, like packed with. I mean, all the way to Michael Jackson, from Billie Holiday to Michael Jackson.
Frank Sinatra.
Yep. Coming up, a shakeup in the Dow with NVIDIA knocking Intel off the list, and then Dow coming out of the Dow. It's weird, symbolic. This chart may explain the move, as you can see. Perfect time to get into NVIDIA, right? And out of Intel probably is, though. And there's no way that red line's going up to that blue line, ever. We'll have more on that in today's Movers next. Squawk Box coming right back.
Five.
And welcome back to Squawk Box. I'm Dominic Chu with your check on your Monday morning movers. We're going to kick things off with a look at the Dow Jones Industrial Average and its big shakeup. The 30 stock benchmark index is removing Intel and replacing that stock with rival chipmaker NVIDIA. The Dow is also adding paint manufacturer Sherwin-Williams and booting out Dow Inc. S&P Dow Jones Indices, which manages that average, said the changes were made to ensure a more representative exposure to the semiconductor and materials sectors. The changes are set to take effect before trading begins on Friday. Shares of NVIDIA and Sherwin-Williams are up on the news, while Intel and Dow are just lower. Now, shares of Viking Therapeutics soaring this morning, up around 18%. The biotech company reported promising results from a trial of its experimental obesity pill. The medication could help Viking Therapeutics compete with drugs from Novo Nordisk and Eli Lilly, which have to be injected rather than taken orally. And then let's end with a check on Apple. Those shares are down just around 0.5% or so, due in part to Warren Buffett's Berkshire Hathaway selling off another big piece of the stake in the company. The firm cut about a quarter of its holding in the iPhone maker. That's according to Berkshire's quarterly results that were released on Saturday morning. Berkshire's stake is now down 67% since it began selling those shares about 4 quarters ago. Andrew, so a lot of movement in the Dow Jones Industrial Average. I'll send things back over to you.
Thanks, Tom. When we come back, an exclusive interview with billionaire hedge fund titan John Paulson, who is backing former President Trump. We will talk to him about that and so much more when Squawk Box returns in just a moment. Welcome back to Squawk Box. Our next guest is billionaire hedge fund titan John Paulson, who's also backing former President Trump. Joining us now in an exclusive interview is John Paulson, founder and president of Paulson and Company. John, it's great to see you this morning. It appears that the race has tightened based on both some of the polls and then the betting markets. I know you're very close to the Trump campaign. I'm curious if there are any numbers that you've been looking at specifically or have had access to that others might not, that you might be able to share with us about how you're thinking about where things stand right now.
Yeah, good morning, Andrew. I agree that the race is very tight, but I'm optimistic that the president will win. He has strong support across all segments of Americans, so I think he will win, but we'll have to see the results after Tuesday.
As an investor, I'm curious what you've done with your portfolio and how much you're betting, if you will, that he does win. Folks like Dan Loeb were out just even a couple of weeks ago suggesting that they believed that he would win and therefore was rotating their portfolio to things that they thought would benefit in a Trump administration. Have you done the same?
We haven't really adjusted the portfolio yet based on the election outcome, but depending on who's elected, I will have adjust the portfolio. You know, under Harris's plan, you know, she wants to raise taxes on capital gains, raise taxes on corporations, raise the marginal tax rate, and she also had this plan to tax unrealized gain, which seems improbable, but it's something to be concerned about. So I'd be concerned about being long equities if Harris wins. On the other hand, Trump has a very pro-growth agenda. He wants to reduce government spending, reduce the regulations, support domestic energy and manufacturing, keep taxes stable. So I think under Trump it would be more beneficial for the economy and more beneficial for the stock market.
And do you believe, I mean, we've talked, I know we've debated the issue of tariffs many a times with you and talked about potentially the inflationary pressures of that. I think one of the real questions is if in fact those tariffs were to go into effect and perhaps be used as a negotiating tool or whatnot, whether the offset, which would be perhaps either more drilling or things of that sort, would it really actually offset the impact of those tariffs? Because you look at a lot of economists out there who have suggested that they won't.
That's a good question, Andrew. I think you have to look at the overall economic plan. And I think under Trump's overall economic plan, inflation will come down and we'll have a higher growth, lower inflationary environment than we would have under Harris. The biggest contributor to inflation is high government spending. And spending under Biden-Harris has been pretty much out of control. The deficit this year increased to almost $2 trillion. It's up 14% over last year. And there's no plan from either Biden or Harris to stem the control of government spending.
What did you make of what did you make of Elon Musk's? Right. No, I was going to ask you what you made of Elon Musk's comment that he thought there would be a temporary hardship given the ambitions of the administration to cut spending, potentially some of the inflationary pressures and other things that basically that maybe the transition on the other side might be better, but that there would be pain in the middle.
Well, I think big transitions are never easy, and you're right to bring about the modest inflationary impact from tariffs to the more major negative inflationary impact from cutting spending. So Musk, at the rally, he estimated that there's as much as $2 trillion in government spending that could be released. Even if the number is half that, that reduction in spending would bring down the deficit in half, from $2 trillion to $1 trillion, before offsets resulting from higher revenues from tariffs. So that will have a major impact on inflation. And if you can bring inflation down and increase wages, real wages will increase, which will benefit all American families.
John, we'll know tomorrow. Well, we won't know, but it finally happens tomorrow, the voting. But that doesn't stop both camps from giving little indications of things that they're seeing internally. I don't know if you must be following it very closely, as close as you are to the Trump campaign. I'm just wondering whether you can give us any color on Wisconsin. I'm told that maybe Wisconsin's closer than people thought, but given what happened with Iowa and that the Des Moines Register and the Seltzer poll showing Vice President Harris actually up in Iowa, so I don't know what that says about Wisconsin. I don't know what you do. Pennsylvania is probably the most important state, and for a while it looked like it was firmly, or at least likely, that Trump might win, but there's some inroads made in early voting, supposedly by women. I've even heard Virginia and New Hampshire, according to sources, that the Harris camp is concerned about those two states. Do you know anything internally from the Trump campaign?
Yeah. Hi, Joe. Yes, it's clearly a very close race, but I have seen some private internal polling that was done over the weekend after the Iowa polling, and it shows Trump leading in almost all either leading or tied in all the swing states. So I'm cautiously optimistic that
that's not Atlas. That's internal Trump. That's internal polling from the organization, because Atlas International, which some people like, other people, they say it was good in 2020, but other people don't like it as much. But he was ahead in all those swings or tied as well.
Yeah, there's different pollers, but this was private polling outside the campaign.
Hey, John, I wanted to ask you about Fannie and Freddie because it's been a big topic of conversation for a long time, and I believe you own still some of Fannie and Freddie. I don't know if you saw there was a report out by Cowen. They're saying that they believe that actually Harris may be positive for those who want to recap and release Fannie Mae and Freddie Mac, and suggested that they believe that actually in a Trump administration that they didn't believe this was a priority for Trump. Have you talked to Trump about this?
I haven't spoken to him specifically about it, but you're right to bring this issue up, Andrew. The Fannie and Freddie have been in conservatorship since 2009, 15 years. It was supposed to be temporary, but after Mnuchin left the Treasury, they've retained all earnings, so they're now pretty well capitalized. Combined, they have about 150 billion of common equity. So I think it's likely, whoever is the next president, that these will be released back into private ownership, and the government will be the biggest winner because they'll own 90-95% of the common, and when they sell that common, that will raise, in today's terms, about 150 billion, which will increase as time goes on. So I think both administrations will want to take the opportunity to access that value for their own.
And you still own some of that, right?
Well, we haven't commented on what our ownership stake is. We do report all required public security ownerships when we file our 13Gs every quarter. So we haven't, since Fannie and Freddie are preferred stocks, we're not required to file those positions publicly.
Hey, John, what do you think of the job that Jay Powell is doing at the Federal Reserve? And if you were Treasury Secretary in the Trump administration, how do you think you'd work with him?
Well, right now the Treasury position is open. We're really focused on the election right now. There's a lot of good candidates out there. I think Powell has done a good job. The only criticism I would have is that he was too late to stop quantitative easing and to raise rates, and he's been a little bit behind the curve in bringing rates down.
Hey, John, I don't know if you saw, but there was a piece in Fortune magazine late last week, and we had Doug Parker from American Airlines, formerly of American Airlines, on, Jeff Sonnenfeld, Bob Diamond, who was on earlier, all of whom authored or signed this piece suggesting that they were voting for Kamala Harris because they believed that former President Trump was too big of a risk to the country. What do you tell those people who say that?
Yeah, I would think just the opposite. When you look under Trump's 4 years of presidency, we had no wars around the world. We had peace. We had an extremely secure border. We had low inflation. It was 1.9% versus 5.7% today for Biden. We had real wage growth. of over 7%. It's declined under Biden. So we had a less regulation, a boom in energy. So we had a very pro-growth economy, peace around the world, rising real wages. So I wouldn't be concerned about those issues at all.
Well, what about, I mean, I think one of the things that they would say is there's a character question, and I'd ask it maybe in this way. You hire people come in, do job interviews with you. If someone walked into your office and, as former President Trump did this weekend, was pantomiming oral sex effectively, or someone sent you a tape of Jeffrey Epstein saying that this job candidate was a close friend of his, what would you do? Would you hire that person?
Yeah, Andrew, I can't speak about that particular issue, but I find Trump a very caring person. He cares about the American people. He works incredibly hard. Personally, he's a very warm and kind individual. I can see why he's angry. He's had to spend over $200 million a year defending himself against government lawsuits, almost all of them totally spurious. So I think there is a sense of anger in him about the weaponization of the Justice Department on the state and federal level, pursuing him as a political opponent. And I can understand his anger about that.
Right. We're going to have Barry Diller on in a little bit, and one of the things I know he's concerned about, but I know a lot of business leaders who are voting the other way are concerned about, is the possibility of retaliation against them individually for not if they were to speak out. In fact, that was the undercurrent of the Fortune article. These were a lot of former CEOs of Fortune 500 companies saying that they were speaking in some ways on behalf of current Fortune 500 CEOs who felt that they couldn't speak out. What do you say to those people who feel that way?
I'm so surprised to hear that, because it's just been the opposite. When President Trump was president, he didn't go after anyone. He didn't go after Hillary Clinton. He could have, but it's just the opposite happened.
Well, but he tried, and his own Department of Justice wouldn't.
I don't think so. I mean, look at the facts, Andrew. Hillary wasn't sued by the Justice Department. She wasn't sued by any states. Trump's allies, Bannon, went to prison. Other people have been prosecuted. So I think the opposite is true. If you're the Republicans in general are not weaponizing the legal system to go after political opponents. It's been the opposite that has been occurring.
John Paulson, we look forward to talking to you again, and we'll see what happens with this election, and we do hope to have an opportunity to just continue to discuss where we are, and hopefully we'll know a lot more later this week. I would say normally I hope we know by Wednesday, but I don't.
No, you don't.
I don't know if that's realistic.
You definitely don't hope that.
Thank you, John.
Thank you, Andrew.
We got a quick programming note. As we mentioned earlier, we'll speak with media titan Barry Diller about the election as well. On the other side of this, 8:30 Eastern Time, he'll be with us. Squawk Box coming right back.
Still coming this morning, don't forget about the Fed. Chairman Powell and company meeting after Election Day with a decision on Thursday. Steve Leisman is going to find out the Fed's potential rate path next. Squawk Box will be right back.
CNBC.
There's the election this week, but also a small matter for investors of a Fed meeting. Senior economics reporter Steve Leisman looks at the debate on whether the Fed should cut rates after what we've seen as far as a surge in bond yields.
Yeah, Joe, this is interesting here. Some have looked at the recent surge in those bond yields and concluded the Fed shouldn't cut rates this week, but that might miss the real debate going on in markets. It's really a debate over your favorite topic, Joe, the terminal rate, or that is where the Fed ultimately stops. Since the Fed cut 50 bips in September, the 10-year yield has surged 80 basis points, an unusual move with more cuts ostensibly on the way. But while that's been going on, take a look. The probability of a 25 basis point cut this week has remained remarkably steady, now at 98. It's been north of 90% the whole time. Chance of December is now at 80% or north of 80%. It's January and beyond. That's where the debate is about where rates are going. And that's part of a longer term debate that's been going on about the Fed. If you take the October 25 contract, take it as a proxy for the terminal rate, that is where the Fed stops. It's up more than 80 basis points from 282 to 363. But notice, it's still 100 basis points lower than the current rate. So the market still has lots of cuts built in, just a lot less than it did before. Behind the yield surge, we've had some better growth numbers, somewhat firmer inflation, and of course policy uncertainty with yields rising with the improved chance of former President Trump to be reelected. In fact, Wells Fargo, among others, this chart is making the way around Wall Street, has for a couple days now. The 10-year yield increasing with Trump's chances of victory in prediction markets. It could be expectations for higher growth, could be expectations for higher deficits, or both. Assessments, of course, of Vice President Harris' plan show less new additions to the fiscal deficit, but continued high levels of red ink. The election uncertainty adds to the market's uncertainty over what is that terminal rate. It's really hard to predict monetary policy if you don't know fiscal policy if a big change is coming. But that confusion should not, at least for the moment, extend to the idea the direction of rates remains lower regardless of what the 10-year has done. Had a nice chat with Michael Ferroli over the week, on Friday at JP Morgan. He says the market now is much more aligned with the Fed, which is once you get through this November and December, it's like an every other meeting kind of thing for next year
That's
until
what
you
Roger
get down.
Ferguson said this morning.
You know, I heard Roger steal my entire line of thinking at 6 a.m. and I wondered about turning around in the traffic and coming back home because what Roger said is what.
If we talked about Jim Grant and what he said when he was on, did you see that?
I did, yeah. Which part of it?
The part where you have a 40-year biggest bull market in
And now the bond
history.
goes away.
Does it end in just a little whimper where and inflation's definitely
You know, Joe, I don't know.
bad? You don't think we can?
I don't know if I want to make huge conclusions over. I feel like the bond market, and Rick has always been very good about this. Finding the new range, right?
Yeah.
You were down at 360. Now you're back up at 425. That seems or feels like the top of a new range here, and maybe it comes down a lot of talk about settling down at maybe 4.
You know, I've got a bunch of questions about whether the Fed can ever rein in some of and reimpose fiscal austerity at some point. So
Well, that's a big debate. That you know, are you on Joe's side now on this?
I
That the
just want-
Fed should control Congress?
No, I
Well,
just
they
have a
need
huge
to.
question about whether if you think the Federal Reserve's actions that were taken in a time of
Right.
emergency, if that enabled fiscal austerity to get thrown out the window, is there a way to wrap that back in when we're no longer in a crisis?
Well, I mean, the Fed is going to keep. Okay, if the Fed keeps rates at a place what is neutral, that is balancing the supply of credit and the demand for credit, and the government borrows a lot, that neutral rate should be higher, at least the long-term and medium-term rate. So in that sense, what the Fed is saying to the federal government is, if you want to borrow more, all things being equal, those rates will be higher.
Is that what the move in Treasury yields?
I think that's part of it. Look, the growth numbers have come in better. You're at 2.83% now. The jobs numbers have failed to, the weekly jobless claims have been pretty strong. Most people are looking through, I saw a little bit of softness on Friday in those jobs reports. So did some other folks. I thought that even if you added back the strikes and the hurricanes, you still were in the 100,000 range, which is definitely lower than it had been before. So yes, the market has been adjusting. And it's adjusting to the possibility of higher deficits pretty much no matter who came in. But the numbers for Trump are quite a bit higher. But then you kind of get into the Paulson explanations, which are all these guys coming on and saying Trump has said this, but he's only going to do that. And that's really part of the calculus of what he can accomplish. The thing that I've been most interested in, and I would say concerned about too, is the tariff stuff he does not need Congress for. The tax stuff, both Harris and Trump, they have to go through Congress for that stuff. The tariff stuff, because of national security provisions in the tariff law, he can do on his own.
You know, just if we're at 23% spending, and it just got to come down, and that's why it just got to.
The argument, look, Katrina's telling me we got to go, but here's the deal. The argument is that the Fed are the only adults left in the room, so they ought to impose some form of austerity on the government.
I should not be paying credit cards for everyone I know in my family, but there are still some things that are out there. Now, once they spend it, I am good for it, but I am allowed to say, can you please?
But Joe, under your construction, you have your kids regulating your spending.
Yes.
That's the construction you're talking about.
True.
If you have the Fed imposing
can I
austerity
try
on
to
Congress.
influence them to not spend as much? That's not.
No, you can influence them. Yes, you can say.
Okay, that's
look,
all I'm asking for.
that's a really
That's
good
all I'm
point. I
asking
think
for.
Powell can and should speak up a little bit
Okay,
more.
there you go. Well, you've never said that before.
I've said that.
Okay. I didn't think so. But I don't, sit here and write down everything you say, like you do with me.
I don't write down everything you say. I barely listen to it. No.
That was my question.
That was your got me, right.
Thanks, Steve. It's 8 a.m., 8:03, almost 8:04
It
on the
is.
East Coast.
You're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Futures this morning are mixed. Dow looking like it's down by about 13 points right now. S&P futures up by 6.5. The Nasdaq up by 12. Let's get right over to Mike Santoli. He's been watching the markets. Hey, Mike.
Kind of a quiet open, but obviously the market has entered its sort of cautious wait-and-see mode ahead of the election, and also an earnings season that has been just fine in the aggregate numbers, but not really dazzling. If you look at the chart of the S&P 500, we're at levels in the S&P that we first reached around 6 weeks ago, although still up 20% year to date. The trend is still solid below the surface. The average stock is actually kind of corrected a little bit more than the headline index. So you're in this mode where you've been sort of just consolidating for a little while. You guys talking about what's been going on in Treasury yields. Very interesting interplay of the S&P 500 and the 10-year Treasury yield. This is year to date. I wanted to highlight it that there's no consistent specific relationship between these two at all times. You see the beginning of this year, both were going up at the same time. Yields up, stocks up because economic growth was strong. And then you entered that real vertical move in the spring in 10-year Treasury yields, and it was like an overheating scare, and the stock market backed off. Then yields came in a bit, market gets relief. And then recently, you see stocks and bonds going up together until this point where we're at this level where it seems as if the sensitivity of stocks to a further fast rise in yields might be a little bit more negative. So we'll see how it goes from here after that little pullback in yields on that somewhat soft, noisy jobs report the other day. Finally, the changes to the Dow Jones Industrial Average. Today, you guys have been talking about it. To the extent that any bump in NVIDIA and Sherwin-Williams today is about going into the Dow, it doesn't make a lot of sense based on history. This is Salesforce.com relative to ExxonMobil since Salesforce replaced Exxon in August 31st, 2020 in the Dow, and you see that the company that was kicked out, Exxon, has vastly outperformed Salesforce. That's somewhat consistent with what's gone on historically out there. Doesn't mean it's a kiss of death, but it does mean there's not a lot of money that flows into these stocks just because they're in the Dow, guys.
Yeah, Mike, that was the point that Joe was making earlier. Yeah. NVIDIA, after seeing all these incredible gains, has it seen the gains? Are there more gains to continue?
Yeah, in fact, I just took a look. In fact, Salesforce was up like 300% or something in the 5 years before it went into the Dow, and Exxon had been cut in half in those 5 years before. So clearly there's a little bit of momentum chasing that goes on in these. It doesn't mean NVIDIA doesn't belong in the Dow. It's a massive company, but you know,
better representation.
I'll take NVIDIA.
But it's a better representation of the overall chip market for sure.
For sure.
And the importance.
Intel's not going to $3 trillion anytime soon.
No, that's exactly right. So it could be the right decision in terms of representation of the market and the economy.
Or
yeah.
$8
trillion.
Even, yeah.
We'd like to get to 100 billion.
Right.
Yeah.
It might be there. It's close.
I think it is. Mike, thank you very much. We'll see you just a little later. Right now, for more on the markets, we want to bring in Lori Calvasino. She is the head of U.S. equity strategy at RBC Capital Markets. Lori, typically on a week like this, we'd be talking all about the Fed and what it's going to do. We'd be really focused on that. But because it's an election week, maybe we have other things we're focused on. What are you watching?
So look, we're still plowing through earnings season, and you know, I read so much about the election and earnings calls the last 2 weeks. I'm looking forward to when we actually get past the event to see if the company tone changes a bit, because I'll tell you, Becky, like all this anxiety, all this angst that's weighing on investors, it's weighing on companies as well, and I'm seeing that loud and clear in the transcripts, so I will be very interested to see if that does change later this week.
What are they waiting on? What do they want to see, and what might they do as a result of whatever?
You know, I've asked that at certain conferences that we've held and haven't gotten straight answers, but the best I can understand, and I did have one company tell me this a few weeks back, they're just waiting to get past the event to see what they're dealing with. And we've had some companies come out and, you know, sort of say, look, we can handle either administration. You are seeing some commentary on tariffs. You're seeing a little bit on taxes. Obviously, you know, the sort of stimulus packages that have been passed by the current administration, those are coming up in conversation a bit, but it doesn't really seem to be any one issue when I've tried to poke and prod on this. It really does seem to be just getting past the uncertainty
Does that mean companies aren't doing things that they might otherwise? They're waiting to see what happens before they decide longer-term plans?
I think probably so. I am seeing some companies say that that's what their customers are doing, both corporate customers and consumers. More so on the former than the latter, to be honest, but we are seeing companies, and to be honest, we even saw this in the last reporting season, some companies saying it's taking longer to get deals through. It's taking decisions longer to get made, and I'm seeing that commentary really escalate in recent weeks.
Do you think that there is some watershed moment that comes maybe Wednesday or Thursday of this week if we know who the next president's going to be, or is it more complex than that?
I think it's more complex than that, and I sort of share your concern because I think whoever wins, right, it's going to take some time to see what policies they've been talking about are a priority. I mean, we've got this enormous menu from both candidates, and they're not going to be able to do everything. I think, in one of the earlier conversations, commentary about tax, right? I mean, that does have to go through Congress. So both candidates can say, I want to do this, I want to do this, I want to do that. But the reality is it is going to have to go through Congress. And so, the corporate tax rate on the Harris side comes up quite a bit, 21 to 28. Mm-hmm. We have modeled that out. It would be a significant hit to S&P 500 earnings. But do you really think we're going to get the 28%? It's going to take some time to figure that out.
Okay, so we're talking about maybe more than 3 months even. The inauguration isn't until January. And then, or do you think this all gets gamed out in the next couple of months?
I think you're going to have some short-term reactions to the event. And then I think markets are probably going to put some of this stuff on the back burner. I mean, and we do know that tax policy is going to have to be dealt with either way. It's going to take quite some time to figure out. I do think that at the end of the day, markets, again, stocks can really sort of navigate different environments. We do know that when we talk about issues with our analysts, they're a good proxy for investors, they're a good proxy for companies. They're sort of the funnel by all of this getting pulled into one place. When we've done some survey work, it's regulation, it's taxes, it's trade and tariffs. Those are the big issues.
Lori, very quickly, if companies are waiting to see what happens, do you think investors should take the same approach?
I think they should. I've been telling people not to trade the event this week. I'm more interested in whether or not we have any big gaps up or down, and then coming in and try and take advantage of some of those opportunities.
So if the market sells down, you'd buy. If it trades up, you'd sell?
When we model out next year, we come up with 6,200 on the S&P to 6,500, depending on what the earnings environment looks like. We need to see the starting point, of course, but I think if you put politics aside, the economy is pretty sound. Valuations should stay pretty elevated if we do get those Fed cuts.
Okay. Lori, thank you.
Coming up, we're going to speak with former National Economic Council Director Gary Cohn and former SEC Chairman Jay Clayton. Don't go anywhere. Squawk Box. Going to be right back. We're just one day away from the election. Joining us now are two people we've spoken with regularly through the campaign. Former National Economic Council Director under President Trump, Gary Cohn. He's now IBM Vice Chairman, and former SEC Chairman under President Trump, Jay Clayton. He's also a CNBC contributor, and these guys are smart. And Jay Clayton just basically told us who's going to win the election. Whoever wins Pennsylvania.
I think it's hard to win the election without winning Pennsylvania.
Who's going to win Pennsylvania? That you have no idea, but you do know that it's an important.
Given it's my home state, I think look, if middle of the state turnout is high, Trump wins.
Gary, you've been in this business so long with Goldman Sachs and everything else. Did you see a Trump trade, and then did you see the reversal of a Trump trade last week? And what the hell was that? Or is it all just on the margin?
Yeah, I think it's all on the margin. I think people are trying to attribute certain things that I think are going to naturally happen in the market to a Trump trade. So a lot of people are talking about what's going on in the yield curve as a Trump trade. I don't think what's going on in the yield curve or the steepening of U.S. Treasury markets is a Trump trade. I think it's a normalization trade. I always say we all forgot what normal looks like in a yield curve. We historically have a positively shaped yield curve. Over the last 20 years, we forgot what a normal yield curve looks like. We've had a flat or an inverted yield curve for the last 20 or so years. We're now getting a yield curve back to what it should look like, putting a risk premium in the longer dated treasuries. And I think we're going to put a bigger risk premium in because of the deficit we have. And I think what's going on now is people may be thinking that the Fed is not going to end up at a terminal Fed funds rate of 3%. Maybe we end up at 3.25%, 3.5%. And if we need 125 or 150 basis points of steepness between Fed funds and 10 years, well, 10 years has to go up. If we're 3.5 plus 125 or 150, 10 years is too low. And I think you're seeing that reprice right before our eyes in real time. And I don't think it's really a Trump trade. I think it's a realization of where the real economy
is it a good thing, a bad thing, or is it a reimposition of some sort of forced fiscal austerity when it comes to what's expected from government?
I don't know if
That's something we've been discussing. The balance sheet's different, right? I mean, our balance sheet is not in as good a shape. You've had super smart people on here, Tudor Jones, Stan, tell you that this refinancing wall that we have coming up and what we've got to do in terms of refinancing our debt is vastly different than things we've faced in the past. 60% of the debt comes due within 5 years.
Would you put more stake in the betting markets or in the polls? And here's what I was saying. So if it's 58% someone's going to win the election, would you get on a plane if it was a 58% chance that it wouldn't crash?
No.
Neither would I.
No.
Betting markets. So they used to underestimate Trump because people wouldn't admit that they were voting for Trump. So that's been the way it was in 2020, 2016. Now they could have overcorrected for that because they put in different models. Do you think either polls or betting?
22 was overcorrected, right?
Overcorrected. Are either one of them any? Do you have any idea what's going to happen tomorrow? Either one of you.
Let's recognize what I think a couple of your guests have already said, which is the Trump voter is a different voter today than the Republican voter of 20 years ago. In fact, the Trump voter of today was a Democratic voter of 20 years ago.
Many of them.
And going back to Pennsylvania, if you get those people in the middle of the state, blue-collar jobs, middle-class people to turn out,
right,
then Trump wins. And it's very hard for pollsters to do that because it's new. It's not patterns that you've seen in the past.
Can I ask you about the Trump trade for a second?
Sure.
It goes back to the Musk comment that we were talking about earlier, this sort of temporary hardship idea with a sort of a glorious future on the other side of that. If you were actually playing that trade, that I thought actually was a very honest moment for Elon Musk to allow for, what does that actually mean in the marketplace? Meaning, if you really are going to slash and burn government, which, by the way, we may very well need to do, and given the bond market, it might help on the other side of that too. Like, all of those things are true, but as an investment theory, as a theory of the case on an investment, if you were to take out millions of government employees basically at one shot, for example, or there was going to be some kind of inflationary period for 2 or 3 years as we try to bring manufacturing back to the U.S. for certain types of products, and those products now cost more. What does that actually do to the stock market?
So look, it's a good question, and I think the reality of this is This is an evolution. You can't necessarily go in and skinny the government overnight. And if you understand the government policies and procedures, you know, the budget process starts with OMB. OMB sends a budget to the House. The House takes the budget. Usually, they throw it in the trash can. If Mick Mulvaney's there, he calls for a vote.
Right.
He always forces a vote. Then the process starts, and so the House works through a budget. Congress decides where they want to spend money and where they don't want to spend money. Once it gets through the House, it ends up going to the Senate. The problem we have here, and this is a fundamental problem, is that each and every one of those House members is running for re-election again starting Wednesday, because they have a 2-year cycle.
Right.
Yeah.
So the idea that they're going to come in and they're going to start cutting massive amount of jobs, especially in their state or their district, who are voters for them, I think the possibility of that happening rounds up to zero.
What can you do with executive order? What could be done?
What could be done with the executive order?
Yeah, in
Look,
terms of
I think this is a pretty noble cause that we got here. I mean, it's great to do this. I also thought, to Andrew's question, Musk recognized something when he laid this out. He said, you know what, we're not going to just let him go. We'll give him 2-year severance. This is about reinventing the government, but not about hurting
If you
government
don't
employees.
do it quickly, you lose momentum, though.
Right.
Oh, I think if you're going to do
You have to slash and burn. It
I think
doesn't
you-
work otherwise.
You can slash and burn, but you can slash and burn humanely. You can do so with large severance package. I'm willing to pay for a severance package to reinvent government. I mean, I think everybody should.
What's to stop a next administration from coming in and saying, okay, we don't like that. We're going to ramp it back up. We don't think you have the proper protections because you slashed this agency or this group or somewhere along the line. So you offer a 2-year severance package, and then they all get rehired.
This is another thing that we talk about all the time. What metrics are we using to measure the effectiveness of agencies? We do a really, really bad job on that. I think in addition to looking at what needs to be automated, you need to look at how you measure government effectiveness. And measuring government effectiveness by amount of fines is really not a good way to do it.
Unfortunately, it's probably all in the eye of the beholder, right? And depending on the party that you're talking about, they have a very different view of what these agencies are doing or should be doing.
Go ahead.
And look, and I was going to say the other thing that Jay and I wrote about recently is, look, let's say we want to move all this manufacturing back there, and we do. Let's say we do. The process to do that, the federal government can mandate it. The state and city and local governments have to issue the building permits.
Right.
And historically, we've seen the propensity for them wanting or able to do that to not be very high. You know, the process to go get a building permit, especially for a house, is really hard. Think of what it is for a manufacturing facility in your county. A lot of the places in America don't want manufacturing. Now, there's certain states that are going to want it, but these manufacturing facilities are not going to be as easy to build. They're going to need energy. We know we're a power-starved country already. We're continuously drawing on the power grid day by day with our electric vehicles, with our data centers, and now we're going to put manufacturing in there. Something is going to break. You have to build the infrastructure to support everything you're trying to achieve.
And to Gary's point, and if you don't have permitting reform as part of this, you're not going to deal with housing. You're not going to deal with energy. You know, those are two of the biggest drivers of the economy.
Can I ask you, just because it's in the headlines and you're in this world, we were talking about manufacturing. We had a big conversation earlier this morning about Intel and what's going on there, government picking winners and losers. You're an IBM guy. Maybe you have a sense of how to think about what's happening at IBM, this article that suggested that maybe the government's going to have to give even more support to Intel.
Intel. Said IBM.
No, I said he's an IBM guy.
Yeah,
So he lives in this universe and is very aware of these issues. Just how you think about this morning.
Well, I think we need to think about it as citizens of the country. I think this is a universal issue. If we learn nothing else in COVID, we learn that we have a supply chain that when it shuts down, certain vital components of that supply chain really shut down the entire country. We learned that chips are probably one of the most important things in there. Not only for our everyday living, because we've now decided that everything we own has to have a chip in it, from a toaster on up. You can't have a toaster that doesn't have a chip in it. To our industrial complex, to our military. You know, you launch a smart missile, it's got 300 plus chips in it. So we know there's a vulnerability to the chip market. We know that we're dependent upon foreign countries to import chips. I actually do not like the government getting involved in industrial policy. I actually supported the CHIPS Act because we cannot be in a position where we are dependent on other countries to send us chips so we can defend ourselves, so we can supply products to our citizens.
Is it your brilliant idea to give it to Intel?
No, I have nothing to do with this. It's the Commerce Department, and it's this Commerce Department.
Can I ask you?
But the whole idea was to create public-private partnerships, which to me is the right thing to do. The government was handing out, they weren't small checks. They were $5, $6, $7, $8 billion checks, but they were $5, $6, $7, $8 billion checks to stimulate the production of chip foundries that cost $30 or $40 billion. It still meant that the private side of industry was going to have to put in sort of 70 to 80% of the money to get these foundries
Do you think
built.
they picked the wrong company? I mean, Intel, by the way, just kicked out of the Dow. That was sort of how this conversation began, and trying to understand whether there should have been another company that was picked as the sort of main winner.
Let me make a point here.
Intel is an American chip manufacturer.
Right, we don't have many others.
We don't have a lot.
Let me make a point here. That's a great advantage America has had for 50, 60, 70 years. We've taken a lot of people from the private sector and put them into government.
Right.
This idea that you shouldn't have private sector people in the government is totally belied by this issue. If you're going to allocate that capital correctly, not everybody has to be from the private sector, but you better have some people that understand what Gary just said in order to make sure that those issues are thought through as you allocate
I see
capital.
we need to go, but so this is just a rhetorical question. You think you can? You think you can humanely?
Does that mean we have to answer?
You don't have to. You think you can humanely send 10 million people back to where they came from if they're here illegally?
We were talking about this earlier. The answer to that is it's an incredibly difficult.
And how much does that cost, and what does it do to the labor market?
But then why did you let them in the first place?
I know.
If you know,
could stop letting. You could try to stop from here, but what do you do with the people who
the
are?
question we had is how many of them are actually working now?
Probably a lot.
I don't know. We don't. Do we know? Do we know? I mean, the people who advocate for it say they're working. Do we know?
It's rhetorical. So.
Well,
I asked one.
Sounds like the answer is we need to find out if they're working, and if they're working, that will impact the answer.
That will impact the answer.
Thanks to it says here. Thanks to Gary and Jay.
Thanks, guys. Coming up, another big interview. Just big interview after big interview. IAC and Expedia Chairman Barry Diller is going to join us on his take on the sprint to Election Day. And speaking of Election Day tomorrow, a programming note. Here's the plan, guys. CNBC is going to be live all night long. We're going to have the results as they come in. We'll have Lionel Richie playing them and reaction from the biggest names in business. It all starts at 7 p.m. Eastern Time tomorrow. And then wake up early with us because we're going to be joining the broadcast at 5. We're going to be starting the broadcast, I should say, at 5 a.m. Maybe with some results if we find out about Coming up in just a moment, a can't-miss interview. IAC and Expedia Chairman Barry Diller is in the house at the table. Stay tuned. You do not want to go anywhere. We will talk elections and... Welcome back to Squawk Box. Another big guest joins us right now on set to talk business and tomorrow's election. Barry Diller, IAC and Expedia Chairman and Senior Executive. You have been quite outspoken about this election throughout.
My sins.
We've now spoken to a lot of different folks on all different sides of the aisle. And I'm curious where you think things stand right now. And
Sure, if I know. I'll tell you what, I am incredibly optimistic. I'm optimistic for 28.
For 28?
Yep, that is where my optimism lies. Because if Trump prevails, it will reform the Democratic Party, and I think that would be extraordinarily healthy. And on the other side, it will send him to the dust heap of history, which is what I would prefer, but that's a personal characterization which is not befitting the level of this discussion.
Let me ask you a question about your willingness to speak out the way you have as publicly against former Vice President former President Trump.
Consistent.
Excuse me?
Going fairly way back.
Well, no. I ask because we were talking with Jeffrey Sonnenfeld last week, who has this piece, Bob Diamond, who was on this morning too, signed it or authored the piece, and a lot of them said that Fortune 500 CEOs may be voting for Kamala Harris, but do not want to say anything publicly out of fear, and whether that's a distinction or difference from the way the world worked a decade, 2 or 3 decades ago.
Yeah, I think that, look, there's reason, there's rationale behind being somewhat afraid because of the retaliation comments that have been made by the previous President Trump. So I can totally understand why people are worried about that.
But CEOs don't want to speak out about anything.
Well, of course they do. Well, by the way, in a way, Why should they?
That's what I mean.
I mean, I think that they can sometimes make distinctions when there are great events at work that they ought to speak on.
Right.
But generally, those CEOs represent their companies, and their companies should be apolitical.
Is this a great event
Yeah,
that should require it?
this is a great event.
It is.
I'm afraid so. Or not I'm afraid so, I'm glad so. I actually, the one thing I really want, really badly, is for it to be decisive. I want it to be over tomorrow night.
Right.
I want it to be over, and I want a 5-point spread.
For whoever wins.
Yes,
Yeah.
now I know that that's probably unlikely, but oh my God, for all of us, wouldn't that be the best possible
But
thing to happen?
a great-
Absolute decisiveness.
A great event, but still, it's such a close election. If you're running a public company, half of your customers are going to
But
be
you should,
against
even
if
if
you
it,
speak
you know,
out.
when you do have, it's going to be what, 70-30 on some issues, 30,
Right.
30,
But it's
70.
just-
So anytime you take any position, if you're in charge of a public company that
Right.
sells to consumers, you've got
tough.
no business taking positions.
That's what I mean. I don't think
Again, unless it's some,
there's a lot of there are a lot, maybe less this time, but there were also very few CEOs that would speak out for Trump 4 years ago. Very few that would speak out for him because it's
certainly a lot of them are piling on now.
a few.
What was your reaction? I know you're friends with him to the Washington Post and Jeff Bezos' decision not to endorse the candidate.
I think it was absolutely principled. I know Jeff very well, and I talked with him about it. The mistake they made, and it was a mistake admitted by him, was timing. And the reasons underlying that timing were mechanical. They weren't determinative. They made a blunder. It should have happened months before,
Right.
and it didn't. And that's the issue with it. But I absolutely, first of all, I thought for those who wonder about why he did it, whatever, he did write a really extensive piece, op-ed in the Post, that I think explained it.
You think he wishes he didn't buy the Post?
That I don't know.
When you think about the economic side of this, you know, we had a conversation, I think, in Paris, where I asked you about the regulatory environment. Lena Khan, you made some comments about Lena that you were, I think that you took back to some degree.
Well, because it was stupid. It was like,
Right.
I said she's a dope just because my flip brain went out on it, and I certainly shouldn't have said that.
But
For one
Well, those
reason,
things always got
she's-
arrested for trying to come on the set, wasn't it? By the
She's not
French
a dope.
by the French police. She almost got right, just trying to get to where we were. with
Yes,
our
this is
number.
true. But she also did something quite extraordinary. During the shutdown of MGM Resorts, which we own a big position in, she happened to come through the doors of MGM in Las Vegas to register. And this was when everything was shut down. They were doing everything by hand. And she comes up to the desk, and they say, we want your identification, please. And she said, well, I don't have to do that. And they said, well, you really, you have to do that. And she went through this registration process, and 3 days later, MGM got whatever the official thing is, an inquiry about them taking terrible advantage of people who were coming to the FTC caused an action against MGM because she didn't personally like that these people who were frantically trying to help people asked her for something.
Wait, you have to show your identification every hotel you ever.
I don't know. I'm just telling you what the.
Crazy.
The reason I raised
Yes.
the reason I raised Lena Khan is
But
that,
anyway.
you know, we have
That's just a little anecdote,
There
just
are-
for the tastiness of the moment.
Yeah.
Barry, there's a whole bunch of folks, including John Paulson and others who've come on who are supporting former President Trump, who say, you know what, that they're disregarding the character issue, which I think is the main issue for you, and they're saying, from a policy perspective, economic policy perspective, regulatory perspective, taxes, go through the list, that they believe that he will be a greater
Yes.
benefit to the country than her. What do you think about
I
that?
listened to Mr. Paulson, who, listen, I certainly understand what he's doing. He's running for Treasury Secretary, so he's running for office. He's not like a dispassionate person. He's running for office. But I'm amazed that when the character issue is brought up, that it is not responded to. I mean, that whenever you ask this question or press it, there's basically no answer other than that he's a kind and emotionally available person. But every statement he makes is not one of those. So I don't know how you just discount it.
And therefore,
So,
Well, you know, I always have this argument with
I know you.
there's whataboutism, and I can point to character issues. I don't want to even get into that game. I don't want to get into that game with Joe Biden, with Kamala Harris,
But don't you, in a way, at least have to this extent, which is, I'm not extolling candidate Harris, and I'm not saying anything about her, quote, exemplary character.
or Joe Biden.
But here, or Joe Biden, but they are and have always been decent people who went into public service. That was what they did.
I don't agree.
You don't think that?
No, I don't agree. I don't agree how they got to where they are. I don't agree in terms of Joe Biden. I've looked at his entire career. It's littered with character problems all the way back to plagiarism, to cheating.
Wait a minute, isn't there a difference? I mean, you know,
between that and what? Being with a porn
Isn't
star?
it-
I mean, I don't care about that. I don't care about...
It's not, I don't care about the porn star either. What I do care about is the statements that he has made that I didn't.
Half of those have been taken out of context half the time. The one about Liz Cheney that was just that, the one about the bloodbath, the media does it constantly, Barry.
Well, forget the media. Let's not do what the media.
Did you vote for Bill Clinton twice?
Oh yes, yes. And by the way,
No problems with character issues there.
as far as his decency,
Yeah, as far as Juanita Broderick or Paula Jones, I can name
why are you talking
Kathleen
about?
Wood.
Why?
Because there's good character
Wait a second.
issues.
No,
You
wait a
had
minute.
no problem with Bill Clinton's character issues?
Wait a minute. With regards to sexual escapades,
That's what we talk about with
the
Trump all the
sin
time.
of man, with what guys do.
Okay, then
Now, I'm not
let's move on to the other character.
I'm not
You're
justifying.
talking about January 6th now, or which character issue are we talking about? Because usually we talk about E. Jean Carroll.
No,
or
I'm not talking about.
Stormy Daniels.
I think all of that's hooey. I
Okay,
think that
then which
lawsuits.
character-
I think
then
most
pick
of those
your
lawsuits
characters.
are wrong. But I think there's just simply no question. I mean, how can you even actually argue it? You can say, actually, I don't care because as president, his record as president is that none of those terrible things happened last time, but they may happen this time. So you have to deal with that.
You mean in terms of not leaving office or?
Well, in terms of anything, in terms of all, you stack up the statements.
Then
Just-
the people, Jay Clayton, Gary Cohn, John Paulson running, maybe you have a one-off for each one of those, but it's a very close election. Then we're back to where you either are judging half the country as either being stupid
No.
or being non-virtuous
I
or
judge them.
amoral.
I judge them as progressivism and elitism gone wrong for a long period
No,
of time.
but people who are able to
And I-
know
and
all
I
that,
understand that
everything you
bitterness,
know
and
about Trump, everything you know about Trump, many people know everything you know about Trump and still choose to support him.
Yeah.
How?
Because I think they're bitter about the way this government for the last 20 or 30 years has actually, I think, misappropriated progressivism in many
But you
different
don't think
ways.
they're
And I think that's valid.
You don't think they're bad people for supporting someone so amoral or flawed?
No, I
Okay.
don't. I think, but
That's where I get it.
but I do think that that actually what I would like to happen, and I have no ability to change anybody's anything, but for people who are worried, because I think most people who are voting for Trump are going to vote it on for economic reasons and worries about
I think it's because it's binary.
and worries about this administration. Please split your ticket. Vote Democratic and split your ticket so that the economic part of this can be protected. Then we get the best of a fairly poor period, meaning we don't get him, because I do think it's a bad thing, and we'll live through 4 years. And what will happen out of that? By the way, I'm kind of okay either way. I'm really not, but I say it. But I think that if, in fact, Trump wins, the Democratic Party will redo itself and put up a solid candidate in
Do you
28.
think the flip side is true if the Democrats win, that the Republican Party changes materially, or that the...
Yeah, oh.
You do?
He's 80, he's 78.
No, I don't think that Trump would run again. I just wonder whether you think, whatever you think the remnants of the MAGA movement are, whether that becomes the central tenet of the party, or the party itself shifts.
I don't think it's a movement. I think it's him.
I mean, even...
So I think if he disappears, there is no movement.
Barry, it's not just economic issues. I look at the way we have handled Iran in the Middle East for the past 4 years has been a pig, whatever you want to call it. It's been an absolute disaster, and that's why we're in this mess right now. When Trump was there, it ended with the Abraham Accords, moving the Jerusalem for the embassy.
A lot of silliness with the North Korean leader.
Okay, then you're back. Now you're back
a
to
lot
the
of
superficial
Putin- a
thing.
lot of
The
Putin-
world
by the
was
way,
a much safer place. Barry, a much safer. And
by the way, the world was a much safer place because Ukraine and the Middle East blew. And who would have predicted that?
You
And
can't
who
say
would have
that it's not.
prevented
You
that?
can't say it's definitely not linked. You can't.
All right, maybe it's
the
linked or
weakness
not.
and
But by the way,
the withdrawal
I
from
pray- I
Afghanistan.
want two
The
things.
withdrawal from
Joe, wait a second.
Afghanistan. How about the border?
I would like two things.
How about the border?
I would hope for two things.
Which are?
One is that she has a Republican, for sure, as and somebody with real foreign policy chops as defense. And I would like Elon Musk to be asked, given that he is an American patriot, to come into this administration and cut costs.
Well, that's
Do you
because
think
the one
either of those
thing
are likely to
he is really good at is that.
Do you think that either of those are likely to happen? Have you been given any?
Well, I do think she has said she will appoint a Republican to the cabinet. Now,
Not as.
I hope it's not for Commerce Secretary.
And you would like to see her appoint, if she wins, appoint Elon Musk?
Absolutely. Call him and say, you know what, Mr. Musk, you are truly a great cutting executive. Look at what he did with Twitter.
Right.
Come in, help our government. You've got absolute authority. Cut everywhere that makes sense.
By the way, what do you think about his role in this election?
Well, I've said before, I think he is a deserved megalomaniac. He deserves to be a megalomaniac because because of what he is able, what he has accomplished, and able to be accomplished, enabled. And I think that his, therefore, coming on center stage and jumping up is like weird but okay, because he's a megalomaniac, but he deserves to be.
What do you think? Are you talking about the elites and everybody else in this sort of divide? What do you think about just this perception now that there's, frankly, billionaires on each side of this campaign that are, and that the candidates are sort of marionettes of some sort?
What I don't understand for anybody with wealth, anybody with real, that kind of heavy wealth, how they could do anything that benefits their sole economic interest as a means of judging anything is beyond me.
Do you think that's
to
true?
make
'Cause I'm
another
not-
dollar for a rich person?
But do you believe that? So a lot of times you hear Democrats or folks on the left say, you know what, the folks who are supporting Trump are doing it for their wallet. It's all about the money. That's all it really is. Is that what you think? Because I think when I've had conversations with these folks, unless you think I'm completely Pollyanna-ish about this, that there are so many other issues that not only that they point
They're
to, but
voting
that
their economic interest.
you think that's all it is?
I don't
Well,
say
that
it's.
can't be right in-
I don't say
in a
it-
blue state, Barry.
Wait a second. I
Can't
don't
be
think-
right in a blue
I
state.
don't think that's all it is, but I think it's the vast majority of it. It can't. These are people who do understand the differences, the issues of character and other issues.
I could argue it's about power. I mean, look, proximity to power is power, and so some of those folks who've aligned themselves.
They're all delusionary.
Right.
Anybody who thinks that because they do anything, they are going to be able to influence or be close to quote to power, close quote. They might get invited to a state dinner, but that's about it.
Many are voting for what they see as everybody's wallet because real income rose much more quickly during the Trump administration. Than real income is still down from when Joe Biden took office.
Yeah.
People feel like they have less
By
money.
the way,
real income was surging.
Look at this economy.
For me, Barry, I had to pay you can't be talking about me because I had to pay much more after 2017, much more because of not being able to the salt cap and everything. So it has nothing to do with my. But I do believe, just maybe you don't think Trump is a Republican. In general, I would like free markets more than socialism. I would like less government intervention, less regulation, lower taxes, lower corporate taxes, lower capital, all those things. Not about my wallet, because I think it's better for everybody's wallet.
Yes.
It's not personal. I think so. I don't think you should
I understand
discount
that, but I was using this argument as a class of billionaire, which I don't
As a
think
what?
a class of billionaire, which I don't think you've risen to yet.
No, but you have, but we're not allowed to say it.
Barry, does Expedia and Uber, does a tie-up make sense for Uber?
Okay, as an industrial combination, sure, but it's not going to happen.
That's
full stop.
So
it's not going to happen.
You're saying it aloud. Okay, that's good that we're getting it from the horse's mouth. We talked to Dara on the broadcast last week, and he didn't go full on that it was not happening. He just said
it's not.
If it makes sense, why is it not going to happen?
It's just not going to happen.
Let me ask a different question.
Okay.
Yes, ma'am.
Do you think that there's a sense that this company will get acquired or merge with somebody else at some point?
Expedia?
Yeah.
No, I don't think so.
Because?
Well, I shouldn't say one. First of all, I don't think it's in Expedia's interest. Expedia is now beginning a period, I think, of real growth.
Okay.
And is now, for I think the first time in some time, has now got a great leader who's doing every right thing with the company. So I think if ever there's a wrong time for Expedia to actually exchange its shares, it is now. So that is the big reason. And the small reason, which is whatever, is I don't want to do it.
Right.
And it's not I don't want to do it because I don't want to do it.
Right.
I don't think that Expedia should be sold, and I have enough shares, voting shares, that I probably can't get anything done, but I can certainly stop something from being done.
Would you be interested in a beautiful basket of shiny cable companies, all put in one little entity to be able to
I hope they don't do it, because I don't think I think Comcast is better with them. But if they do spin all these off, that would be a really solid enterprise.
Why do you say you hope that they don't do it?
Because I think that they're so well hedged. This is a company that's got really the best hand, because they've not only got the great. This is my
Call
wife.
coming
I
through.
guarantee you.
It's Brian Roberts.
Stop talking.
Brian Roberts.
You want to take it?
No, I think you should say hello to Dion. Hi.
Hello, Dion.
I'm on camera.
Hi,
We're
Dion.
on TV right now. We'll call you back.
You are?
We are.
You're on TV?
We
Yes.
are.
You see right now.
And
You've been on?
She's in Venice. She's in Venice.
She's on
No,
Dollars.
in Athens.
Oh, in Athens.
Oh,
Athens. You were in Venice 4 hours ago.
I know, I just arrived in Athens.
Okay,
But
bye.
so what is going on?
The question of the world.
So you were saying that you hope that they don't do it because this is Comcast spinning off the
because I think they're so well hedged in so many areas of media that I think those balances are really good for each other. And I do not believe, listen, cable is going to continue to decline. It ain't going to decline to nothing. There is going to be, we are in a process of rebundling. We've gone from bundling over here with full cable, right? To this period, which is about probably a 10-year arc of going to direct connect for individual services, which, let me just make the, which we will watch this, we will get right back to total rebundling. So when that happens, all of these, not all of them, the key ones, your CNBC, the other key cable properties will be part of a reconnected bundle. So I would never get rid of them, but whatever. It's not
Barry, I think advocates would say that they're thinking that the spinoff could actually be the bundler of those things, but that's a longer conversation for another day. Barry Diller, thank you so much for being here. We will see where the election heads, and hope to talk to you folks afterwards.
Thank you all.
Thank you.
Thank you, Barry. go this morning. A few top stories. Striking Boeing union workers voting today on an improved contract offer. It includes a 38% pay increase over 4 years. That's up from 35% in the last contract offer that was rejected just a little less than 2 weeks ago. There are other sweeteners involved in this as well, including a higher immediate cash payout to all of the workers. Warren Buffett's Berkshire Hathaway unloading about a quarter of its remaining stake in Apple in the third quarter. That news coming in Berkshire's latest earnings report that was released over the weekend. You are also talking about well over $300 billion in cash on hand right now for Berkshire Hathaway. And TGI Fridays filing for Chapter 11 bankruptcy protection. The restaurant's executive chairman blaming COVID-19 and the company's capital structure for its financial challenges. The bankruptcy process only affects 39 corporate-owned restaurants. Hundreds of franchisee-owned Fridays are not affected by this news. Very quick final check on the markets this morning. The Dow and the NASDAQ have both turned lower at this point. You've got the Dow off by close to 60 points. NASDAQ looks like it's down by about 15. S&P is hanging on, but just barely. It's up by 1 point. We do have not just the election this week. You've also got a Federal Reserve meeting and a lot of earnings that are still going to be coming in, affecting potentially all of these prices. The 10-year right now is sitting below 430 at 428. The 2-year is at 413. And then if you take a look at oil prices, we are seeing higher oil prices this morning on the idea that OPEC is not going to be increasing supply anytime soon. WTI is up 3% this morning to $71.53 a barrel. Well, here we go. It is election eve today. We hope you go out and vote, but we appreciate you being with us today. We will see you right back here tomorrow morning.
Vote.
Right now it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Coming off a couple weeks lower on the S&P, heading into an historically eventful week with an election, a Fed meeting, plenty of travel and media earnings. Yields are lower across the board, 10-year 4.28. Our roadmap begins with the big week ahead for investors as we go into the final hours of this 2024 presidential campaign and the potential for another Fed rate cut this week.
Plus, Gen AI momentum. NVIDIA is set to replace Intel as one of the 30 blue chip stocks in the Dow this week. And a setback for the future of the nuclear-powered data center. Federal regulators limiting how much power Amazon can use. This would be from a reactor in Pennsylvania, Susquehanna. Nuclear stocks. I didn't even know we could say the words nuclear stocks, but let's just say some power company-related names are getting hit on this.
Let's begin, though, with the markets on this election eve. Plenty of stats rolling around this morning, Jim, about what happens to stocks in the the 6 months following an election.
I know. Yeah, and I just think that it's odd that it doesn't matter who. I also think that this Iowa news kind of flipped a lot of stocks and then flipped back, but Iowa news that it looked like, a state that is a Republican state may switch.
Right, you're referring to a specific poll by a very well-known and well-respected pollster that showed in a dramatic fashion Harris was leading when, in fact, she had been trailing significantly previously. Yeah, no, a lot of people pointed that over the weekend. Unclear, though, exactly whether it's right and what it would mean.
Well, look, the futures were up, and I thought that was because of Iowa. Then the futures are down. Maybe people forgot about Iowa. I mean, one thing, Carl, I hate to say this because you are captaining you're the anchor for a night that may last a week, maybe last 2 weeks. I just don't get any sort of clarity that this thing is over after the election. It just doesn't seem possible when you have one candidate who does not accept defeat.
There is a broad expectation, and the Times wrote about it extensively over the weekend, that Trump will declare victory at some point on election night.
Right, I mean, but unless it's a blowout.
Unless it's a decisive win, one way or the other.
Right.
But let's assume it is as close as the polls would indicate, but that Harris ultimately prevails in a close electoral college. Trump is expected to contest that.
Yes.
What will be the impact in the stock market if that goes on for quite some period of time, and there is some unrest associated with it, perhaps as well?
We have some bizarre bull market where it would just be dependent on some stocks go up more than others. I don't see this market going down on that.
You don't?
No, I see the market going down on Treasury auctions. That's where I see Treasury auctions are.
But that said, the inflation trade has been the trade that many have focused on if they've been expecting a Trump victory.
Yes, absolutely. Because the tariffs don't make
If
up.
Harris were to win, would would you have the 10-year come down?
Yes.
But I think many people still expect the market would also come down, in part because of the likelihood that Trump would contest the election.
Well, I think that, look, the president doesn't do that much versus earnings. I mean, earnings have just been, that's what's been controlling things. All I'm saying is, yes, there would be disarray politically, but if we have good earnings, the buyers can't resist. No buyer says, I'd like to buy Viking Therapeutic, but I can't because Trump may contest it. It just doesn't work like that. Well, either the buyers are too stupid or we're all just in a cloistered in our own little world.
On that point, we're about 70% of the way into earnings. 78% are beating by an aggregate 7.1%. Historical average is 4.9. Thank you, Binky Chada. It's been a good quarter.
Oh, no, it's definitely been. And I think that you can, it's almost hard to find losers. Some of the health insurers, but in general, there isn't a group that didn't have some real standouts, except for the drug stocks, which had the majors were led down. Merck wasn't that good. Lilly was the most convoluted. Look, I own Lilly for the Charitable Trust. I went over it again this weekend, and it was like they were trying to do some sort of backward hurdle and they didn't make it.
I think Lilly's closing in on a 20% decline from the Q3 highs.
Again, it's my trust. It should. I mean, I want a do-over. I still don't understand what David Ricks was saying. I know that Viking Therapeutics has some sort of 100 meg you can do oral, which is surprising. You can do 100 meg, but Lilly's supposed to have trials for everyone.
What?
No, Viking has
100 meg oral.
Well, it's
they don't
very
have it on the market.
No, it's a small sample. I'm saying that when you have a Lilly, which is hobbled by its own, we can't do anything because there's a shortage. It makes it so everybody, it's free fire zone. And so this trial by Viking, which is a very small group, suddenly people are worried that could be beating Lilly out. Stock was up 17 at 4, and now it's up much less because people realize it's a small sample. But I'm saying that it's very hard to make a pill that could have that much power is what I'm saying.
Right, but we also know Lilly, not to mention Nova, they're all working on oral indications, oral drug, the same drug delivered in that fashion, as opposed to obviously right now you have to do it intravenously.
This is the problem. I got no certainty. I always thought that Lilly was ahead on everything.
Yes.
I don't think they're ahead on anything because nobody said anything.
What?
No, because go back over the call. Why not say that you're somewhere? We're ready to manufacture. We've got it. Look, here's how the call should have been. Here's how the call should have been. We're ahead of everyone. We've got a manufacturing mode. We're not worried about the FDA shortage. The numbers will be up very big next quarter. That was what I was looking for. First, I thought
the old under promise, over deliver. What about that?
That's something that Ned Ashkenazi practiced with Alphabet. I'm saying that it turned out that the chief financial officer led to some stability there. I like David Ricks very much.
You've really been upset about that call.
I'm furious about that call. No. You kidding me? I think Lilly's ahead. I think Lilly has an oral pill. I think that they have great visibility in terms of their manufacturing. And I thought that Zepbound was doing well. I was rolling all three horses.
I keep trying to draw you back into this discussion regarding RFK Jr., who is again a topic at these rallies over the weekend, who's no fan of obesity drugs, who's no fan of vaccines, who's no fan of fluoridation of drinking water. But you don't seem to think it's moving these days.
No, I think that the Sterling Hayden character in Dr. Strangelove would be running the FDA,
yes.
Right? I mean, come on.
Purity of essence.
Exactly.
Yes.
I think that that's where RFK is.
Bodily fluids.
He was in school with me, and that's terrific. That's all I have to say.
No,
I never voted for him.
His point is a valid
fluoride?
If in fact Trump wins the election and appoints, what job would he actually have in the new administration?
Czar.
Do we know?
Czar of drugs.
So it'd just be say no to drugs entirely.
Well,
every drug.
You're on your own. How about
all drugs? And by the way, no fluoride either.
No fluoride. How about measles?
No fluoride anymore.
Is he pro measles?
Fluoride out of the water.
Remember one kid had measles in class, then the next day everybody had measles. Where's he on that?
No, I was
the only
joking
real
over the
immunity to
weekend.
measles is getting measles.
I was joking. It's time to go along Henry Schein.
Yes, that's
Really
very
is.
good.
Yeah,
Remember your
Robert
buddy used to run, Staley Bergman was your pal.
My pal, no.
He was your
Told
pal.
you my grandfather knew Henry Schein.
That's close enough.
Yes, they
for
were
government
friends.
work.
They were friends.
This government work. No, I don't know. I mean, this is
Henry Schein.
more an indecision. Robert F. Kennedy Jr. could be his mother was a great soul. Loved her. I worked for RFK. I'm old enough to admit that, which is terrible. But I just think that there's just, the FDA is really serious scientists. And it's really hard to undo a lot of things. It's just hard. But I was deeply upset by the Lilly call. I thought Zepbound was doing well. I think they should have pre-announced that Zepbound was doing that better. Just pre-announce it. Just come out and say, look, Zepbound, because of the rules for the FDA and the shortage, we're not going to make the numbers. And then the stock would have been down 100, and then we'd start climbing again. But no, I mean, instead we've got a situation where I don't understand Lilly. Merck, by the way, was very confounding. I think Merck was actually good. It was hurt by the Chinese decision to not give Gardasil to 100 million people. 100 million people denied Gardasil because of what? For who? For what?
I can't explain it, but then again, there's many things that are hard to understand or explain in China, including, by the way, the state of the stimulus there, which continues to be debated. The Wall Street Journal writing a somewhat informative story today, and there are a lot of the reporting is excellent from there, but the lack of still trying to figure out and understand what it is that we're going to get, certainly in terms of percentage of GDP in China.
Right.
Our viewers may recall, of course, so many of the stocks ran up dramatically for a couple of weeks. They're only to retreat yet again because the specifics have been lacking, to say the least.
Now, China isn't planning a bazooka stimulus. If Trump wins, it's a nuclear bazooka. I mean, what are you kidding me? How can you write that? If Trump wins, they're going to go bankrupt as a country. They have to do so much military? Remember, when Trump got in the first time, he made it clear that there was a nuclear weapon if they went in for Taiwan. And then the second time, he's like, yeah, I don't care if they take Taiwan. I'm willing to say he's inconsistent. Are you willing to go there? That Trump's inconsistent. Are you willing to make that statement?
There's been, yes, there's been inconsistency.
Anti-Trump.
Some of his statements. I think that is a fair.
Well, no, the Taiwan is.
Although he has reversed himself on the salt tax, so at least there's that.
I don't know. I get all my information from Saturday Night Live.
Yes, you do. Sometimes in person. Jim mentions undoing things. There is this shakeup of the Dow today. NVIDIA is being added to the blue chip index, and as a result, Intel is out after a 25-year run. S&P Dow Jones Indices says it wanted to ensure a representative exposure to semis. Sherwin-Williams will join the Dow as well, replacing Dow Inc., and those changes effective prior to the open of trading on Friday. Jim today mentions the lack of money index to the Dow.
I mean, this is everything. Before David gets into his atavistic rap about Dow Jones, this came out. I was doing my show. I have a show, and every time I say my show, my wife says it's the network show.
It is. They own it.
Right, but suddenly NVIDIA's up 3 on this. Yeah, of course, David. There's no money really indexed.
There's no money indexed to it.
This reverses.
Atavistic,
right? This
anachronistic, however you want to talk about it, something out of its proper place and time. It is a price-weighted index. It is statistically insignificant. They had to keep it price-weighted because they started it that way, and why we even spent time talking about it is beyond.
Okay, I'll tell you why. We do, because even though I say NVIDIA, only don't trade it, NVIDIA will go back to where it was Friday before this announcement came, and Intel is the one you want to buy. Pat Gelsinger and I, tight.
What did you just say? What came out of your mouth just now?
I told you, Pat Gelsinger and I are tight. Yeah, that stock's done going down. It's ridiculous.
Sun also rises. I'm just reading it now. Tight means drunk. Just letting you know.
Pat's not even
Hemingway.
Pat doesn't drink.
I know. I'm just saying. Things change, but back then.
Talk about being inconsistent. Isn't he a little shame along?
You were drunk.
No, Intel bottomed. That was a very good quarter. Pat Gelsinger showed tremendous humility. And I think that matters because before we got bravado, and he basically said, listen, we're a little behind, we can catch up. And they don't have any really.
Speaking of inconsistencies, are you now going positive on Intel?
Yes.
Is that what I'm hearing?
Absolutely.
What?
I am.
What?
What if Speaker Johnson and President Trump try to repeal the CHIPS Act, as we heard a lot about Friday night?
Wow. I mean, you just have like empty shell buildings? I think it's hard.
Intel hasn't got any money yet anyway. They haven't met the
Right.
certain
They won't meet it
benchmarks
because
they need to.
they won't meet it
All
because
right,
your
I need-
pals at Brookfield.
I need a minute here.
Your
I
pals
wasn't-
at Brookfield. They made it happen.
I wasn't here on Friday or Thursday, so I don't know if I missed this.
Try not to miss work, and you'll be like you'll get the insight.
Oh, I was working on Thursday.
That's right. Oh, you came in. You had an idea that we were going to go with Zaslav. What was that? The Zaslav trade? What is that? I have to see Zaslav.
Give me a
see where I'm working.
Give me a quick
okay, so
summary
here's
of
what
why
happened.
you have suddenly changed course on
Because
Intel.
after the election, Qualcomm said they might or may not buy Intel. In the meantime, Intel bit the bullet, took the losses, took the charge. Their CFO prevailed. On the call, Gelsinger did not say, we're number one, we're the best. He admitted they almost had like New York Giants status, if I can really go there. Anyone worse? Not to know of. And I feel like that it's a brand new Intel.
So it could get worse, so it only can get better.
Perfect. God, he's good. He's really good.
Thank you. Yes.
Yeah, I know. I like it.
Is their incremental success come at the cost of AMD? Someone else?
No, I think that there's plenty of room for everybody. I think that what I liked about Intel is one, Qualcomm could make that takeover bid because it's not a big company anymore, David. It's not a big company. But two, their balance sheet improved. I was surprised that their balance sheet could sustain the spending. Although I have to tell you, Carl, the balance sheet could use a little more emphasis if they want to emphasize if they're able to keep doing all this building. But they do have the PE partners, and the PE partners ready to step in. I got that from another source. PE partners ready to step in. I got told.
Wait, who's ready to step in where?
Brookfield. You know they have the
yes.
ready to step in. And what I got a good call which just said, do you really want to be completely wrong on what can happen here? From a very good source. That was not Gelsinger. And I said, no, I don't want to be completely wrong.
Wow, all right.
I don't like the
Well,
charge.
stock was up on earnings, so.
Yeah. Well, see, when you
lack
were,
of earnings, but on
he was busy negotiating a deal. The Malone's going to own us. And who's Malone going to give us?
John is not going to own us. He's very much focused on simplifying his life.
Charter had a good conference call.
Yes.
Actually, nice upgrade
They
today.
brought a good upgrade.
That
today
could be
as
a
well.
home. That could be a home.
Well, there was an argument to be made that Charter and Comcast should be able to merge. I mean, why wouldn't you allow that when fixed wireless can compete anywhere in this country, when Starlink can compete anywhere in this country? Why can't Comcast and Charter merge? If you could do that, then maybe the other part of the company wouldn't need to be broken apart.
There's to be no fighting in the war room.
It's a nice couple of Kubrick references to start the day. When we come back, we'll talk some Berkshire as they boost their massive cash hoard, sell more shares of Apple. We'll get to Boeing, Tesla, Marriott. As Jim mentions, plenty of calls. Peloton, Roblox, A&F. In a moment. Over the weekend, Warren Buffett's Berkshire Hathaway reported a quarterly operating profit below consensus. The conglomerate's cash hoard now surging to $325 billion after selling more shares of Apple and B of A. Berkshire says it's unloaded 100 million of its Apple shares, about 25% of its stake in Q3, bringing the total sold this year to more than 600 million. Jim, first time no buyback in about 6 years.
I know it. Look, who am I to challenge the Oracle of Omaha? I think he's taking profits in Apple because it's up a lot. I thought it was a core position. That didn't necessarily wipe out the idea it was a core position. I don't understand exactly, David, whether the stock went up so much that therefore the buyback goes away. I mean, opportunistic buyback, it is an opportunistic buy. Some of these...
What are they going to do with all of that cash? What do you do with that much cash?
It's a money train.
I mean, by the way, you could make the largest deal of all time by far.
That's true.
If you wanted to.
Well,
and that's not even using any leverage.
Likes pipelines. Likes pipelines for consistency. There are some pipeline companies you can buy.
It already owns a railroad. It's got that.
It's a railroad. You could buy... And you can buy Energy Transfer. I don't think it's...
Got a lot of insurance businesses already.
All right, so
that's
then you buy...
helpful, but
Travelers.
You buy... I mean, you
Chubb,
buy...
because Chubb is respected. Yeah, not pretty to sell. What do you want, reinsurance?
I don't know what you... I don't know. By the way, I mean, it's got to be some form of speculation around whether they will or how they'll put it to work. Or whether they'll just reinvest it as, in a number of other companies.
Right, well, you got a lot of money and your stock market's up big. Why not wait for this big sell-off? Well, that's what I thought. I thought it was like, okay, there's been no sell-off, I'm not going to work. Put this money to work, and I think that'd be the right thing. That'd be prudent. There hasn't been a sell-off in ages. I mean, what? October was down in the industry.
Of course. But should everybody be in that kind of defensive crouch?
Not. I think if you're king, you can be in a defensive crouch, and he's king. I think everyone else is trying to outperform. He doesn't have to outperform. He's already up a lot. And why does he have to do anything? I think he sits back and says, I'm going to wait for my pitch. And there's been no pitch. There really hasn't been. Right. Every one of these groups is a lot. What's he going to do? Go after Humana? I mean, Humana's the only company I know that's really stumbled. Because of the 4-star. Only in this game would a 4-star be bad to me.
Oh, the 4 stars. Yes, you're talking about from CMS. Yeah, sorry. I was trying to make sure. I think he's 95, Buffett, right? But I was 94, 95. I want to make sure. But I believe he's 95 years old.
No. I don't know about that.
94, sorry. 94.
Well, I think that he can do whatever he wants, and I don't think he needs to do anything. That's how I feel. He's not going to buy Trump media. I'm telling you that right now. I'm just putting that out there. I mean, I don't know how you feel. You've already said how you feel, actually.
Have I really? Have you put words in my mouth that you're afraid to say?
That's totally what I did.
Yeah.
It's a total violation of the 14th and 16th I did for you.
Article 16. When we come back, Kramer's Man Dash in the opening bell. Take another look at futures, which have been around the block a couple of times this morning. Currently close to session low. Stay with us.
Okay. Woo!
Good morning, retail traders. What was that?
.com.
Take a look at some NDX leaders this morning. There'll be plenty of earnings movers. Today it's Constellation Energy down about 8, even after a beat and raise. A big story, of course, on AI data center energy.
Will get done, and same thing.
Whoops, pulled right back to my first support. SPY did. How election uncertainty will impact the markets this week. It's like I don't think they understand. SMCI really took a beating. And they were pumping Apple last week. It's to 220. Meta, huge pump. Boeing, huge pump. Starbucks now. The Donald could get a bounce off of it today. It pulled back quite a bit. Two more minutes left. I wish everybody a great day. I hope we had a great weekend. I just was lazy. I didn't get half of what I wanted done. Well, what the hell is that? Yeah. Okay, here we go. Oop. What the fuck? Never make a difference. Tesla had a little knife here. They were pumping Google last week. PLTR is holding 40. CCL is above 20. Coin above, where is coin? Oh, I just saw it on here. Coin down 88. Oh yeah.
The support levels would be a nice way to get through a potentially volatile week. If things don't go well and the selling continues, if we break down, when does it start to feed on itself? Where do people start to panic? Is that visible anywhere on the charts or the flows that you monitor?
Well, I would say 5,700 obviously is going to be that first area where we could see some dealers actually selling with other, institutional sellers, as well as retail sellers. So that's going to be your nugget of a gamma area right now. Which just means that from an options positioning standpoint, there's more of a push to the downside. There's more individuals that are actually getting into the puts, try to hedge their portfolios. So that would be a first key area there. And then there's kind of a gap between 5,700 and 5,620, which is why I keep that in mind. If you kind of look at that chart on the left-hand side of it, really at 5,620 level is back in August, where we actually saw that as an area of resistance. So you want to take
spy knife in here.
Now into an area of support. Obviously, we're above that level right now.
Just be careful.
You want to see that hold. That actually would be a healthy pullback, and then a resurgence in buyers. That
Give the market a little bit of time here.
When it comes to that MACD, which I also have highlighted there, which has crossed at a bearish formation, but still above that zero line, all can be really justified for right now. If you're also looking at the VIX complex or the implied volatility complex too, this kind of also aligns with that narrative, right? We have
this is my opinion, that I've been able to predict every election that's came out. Every election, I predicted it, except for the last one, which I think was stolen. Because I don't see how anybody could vote for that idiot. But they did. But this is the first time I can say in my lifetime that I'm practically undecisive on who I think's going to win, because there's so much corruption in Washington right now. This is the first time that I don't know. I think Trump's going to win it, but I'm still... America has become so stupid and dummied down that I don't know what to predict anymore. It's more or less about lifestyle than it is about economics. I'll be watching these real close here. Consolidating our first leg. I mean, I've got a perfect record of predictions, but I just can't predict it this time. As far as I see it as we're going through a transition. America is. Cannabis stocks are up a little bit today. China's up a little bit. We got 3 black crows on SPX. The 9 is going to be your resistance level to break. Yep. I can agree with that too. So November 5th for the SPY. I'm tempted to get, well, I don't want to go against my buddy here. You're out. We did get hit pretty hard last week. We had that huge sell-off. It don't look like that much. I mean, it's not really that much at all. Just 2 days of it. Thought I had that other one up. SPX just hit the 63. We got 57.35 ahead of us. What did I say? 35, yeah. 57.84. Randy, I see 57.35.86. AMD knife. Boeing bounced up off that pullback. We hit the 200 on the SPY, the 200 EMA. Time of consolidation. We're going to find out what kind of market we got today. If we pull back one more time and create a right shoulder down here, pull back and hit the VWAP, maybe and get a higher low off the inverse head and shoulders, I think I'd retest it and then take it there. And that'd be right off the VWAP. Somewhere off that shoulder line, if that was predicted. There's so many new traders out there that ain't been around for a presidential election. And this year has not been a normal setting for that period of time. So let me see here. 573s with a 574. Well, actually, the 575s would be nice if we decided to go ahead and break out here. But they're just a little bit too far out of the money for a pullback. Could fuck me. So I'll raise it up. I'll raise it up 474. Ten contracts. So I'm watching this one right here. $574, 10 contracts at $1. Okay, this is my second prediction right here at 92. $0.92. We're at $1. $5.74s are now at 108. Break it. $110. This is a 1, 2, 3, so I'm going to take it here. We could continue the breakout. Wubbis. One bis. 2 bits. And a threesome. Jim, you had a threesome with stocks? Yes. Yes. Woohoo! 123. Yeah. Woo. Boom, baby. Randy. That wasn't too bad of a scalp on the pullback. SPX also hit the 200 SMA, brother Yay. I gotta go do a stupid errand. Kind of squeezing right now, just waiting. The market don't seem that bearish. Boeing new high, double top. Tweezer bottom on that 5-minute on SPY, same as tweezer bottom on the 1-minute. That's beautiful. That was a beautiful call right there for the pullback. I'm going to say we're going to come back down and hit this right shoulder again. One more time before we decide to. Come on. A sudden alert for the SPY. Come back down and hit this right shoulder one more time. And I'll have to bust through all these moving averages, so that could be pretty nasty, and it might not stop exactly right there. What the heck happened there? QQQ's hovering at the 200. I'm going to go run my errand real fast. Today, after we close, I go vote. Okay, watch this SPX here. Okay, you got the right shoulder right here. So if it doesn't break here, it can pull back and hit that and then come back up and then retest and break out or break out now. This PX looks like it wants to break too. Meta, Apple's at resistance, Meta's at resistance. Pot stocks are all looking good this morning. I mean, not much, but they're looking good. Okay, well, I'm gonna go do my errand.
Mentally, that shouldn't blow you up. It's about a long series of high probability events and being successful for the not just this week, next month, next year, next decade.
All right. Textbook options rationale. Not weird at all in the GameStop world. I love it. Alan, but it doesn't seem like you're eager to put on any big election trades this morning.
I'm not a gambler. I am
That's
not
more
a
the gamble.
gambler.
All right.
And you're not a gambler and you trade stocks?
Going to Las Vegas, I don't enjoy betting on the Final Four. It doesn't. I like to have probability.
He's not a gambler.
50 thing, you know, you've got no edge. The trading is about edge. There is no edge right now. Who knows?
That's very fair way to put it. Totally. Binary, all right.
He's full of crap.
As far as GameStop in the money options go, maybe a little bit better risk for your reward. Thanks, Alan. Appreciate the trade.
And you're pumping GameStop?
No, not Chief Market Strategist. BullseyeOption.com. We'll talk some more tech when we come back. Oh, there's DigitalOcean getting hit on earnings. We've got the CEO to talk to as we continue to assess the AI knock-on effect and the demand for data centers. Be right back.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
We do have some earnings this morning. We're going to get some details on DigitalOcean. Shares of DOCN down about 12% after a report that included what I thought to be a lot of surprises to the upside. Joining us, the CEO of DigitalOcean, Patty Srinivasan, joins us here on Morning Trade Live. Patty, thanks so much for being on the Schwab Network with us. Appreciate you taking time.
Yeah, it's wonderful to be here. Thanks for having me.
Absolutely. First time we've spoken since you took over the helm in February. It looked to me like this is a report that hit just about everything the street was looking for, but your stock is getting hit. Tell me first about the quarter, because it did seem like there was a lot of growth in here.
Yeah, so we had a very solid quarter, and for those of you who are not as familiar with DigitalOcean, we are a cloud computing provider along the likes of AWS and Microsoft Azure. We primarily cater to smaller customers. And we have over 638,000 paying customers. And we do both cloud computing and increasingly more AI for our customers. And
bingo, baby.
We had a very good quarter, solid quarter. We beat on pretty much everything, and we issued fairly positive guidance. So I don't get too wrapped around in terms of looking at how it is being viewed just in a few minutes after we have published our earnings. But the future is very optimistic for us, given that cloud computing is a vast space dominated by the large hyperscalers, where small companies are looking for alternatives to the hyperscalers as they look to bring more workloads to the cloud. And on the cloud, on the AI space, it is still very early innings, as we all know. And we, along with others, are focused on providing the right infrastructure for our customers. But long term, we are very software centric in our AI strategy to ensure that our customers business value from Gen AI and associated technologies.
Patty, tell me how you get a customer and keep a customer before they get scooped up by one of the big giants. And also context, you've been trading since 2021 in public markets. I think a lot of folks who follow software are familiar with your business. Stock's also pretty valued compared to some of your peers in the category, despite you doing the double-digit growth. I wonder about that customer acquisition from here, though, when there's such a massive amount of money being spent by a few of those top 5 companies. How do you compete with that?
Yeah, great question. So I said in February, and we have one of the most efficient customer acquisition channels out there. We are entirely product-led growth, and that's how we have built the business from the founding to now. And since I've taken over the business, we are really focused on innovating for our larger customers. And we have to remember that we have close to 18,000 customers that we call scalers that spend on an average $25,000 or more on our platform. And if you look at the 42 product innovations that we launched in Q3 that we just concluded, a vast majority of them are focused on expanding the footprint of these scalers. And as the market takes cognizance of the fact that we are now attracting larger workloads, larger companies, and increasing the ARPU from these large customers, our valuation should start reflecting that sometime in the future. But we are really focused on ensuring that we get our fair share of the slice of this large opportunity called cloud computing. And many estimates are that more than half of the computing workloads are still on-premise, waiting to be onboarded to the cloud. So this opportunity is not going away anytime soon. And on top of it, you have AI, which is in very, very early innings. And I feel we have a great opportunity to unlock and democratize AI for companies that are not the Max 7 or the venture-funded startups. Everyone in between is looking to consume AI in the easiest possible fashion.
When you talk about those products and product-driven growth, you mentioned 40-plus offerings. How much of that can you give us an idea is some of that cutting-edge AI stuff when it comes to those products? How do they fit into the overall composition of what you're offering right now?
Yeah, so we have a lot of great AI innovation that we just shipped. On the infrastructure layer, we have something called as GPU droplets, which are basically pre-packaged NVIDIA GPU-based systems that companies can just click on with a couple of clicks in the cloud console and get a GPU ready with pre-packaged software ready to run Gen AI models. In the next layer, the platform layer, we just announced an early availability of our Gen AI platform, which are basically building blocks to help customers consume AI into their own application. So in the earnings call, I talked about a manufacturing plant automation company that is using our Gen AI platform to take tons of machine documentation and machine data real time and create a chatbot experience for field service people to consume all this information without having to go through thousands of pages of PDFs. And on the top layer, we have our own version of the AI agents that are now starting to do service as a software. So all the services that were performed by humans, in this example, we have work that are typically performed by networking engineers to debug cloud performance. Our agents are able to do that and take 35% cognition off of the troubleshooting and reduce the time to value for our customers. So we are innovating in all layers of the stack in AI.
You mentioned the GPU droplets, which I think is a really cool concept, just having a remote, power source basically to compute. When I look online, this is like droplets starting at $4 a month. Walk me through the pricing system. Like, how do you figure out what you want to charge for these different services as they're new to market? Because you want to get people in, but you also don't want to give it away, right? And one of the things I noticed from your earnings is that your actual profitability and your earnings estimate was significantly higher. So to me, that says that you must be doing something right with the pricing on these offerings.
Yeah, so the CPU droplets, just to be clear, are $4 or $5 a month, or in that order of magnitude. But then the GPU droplets can be consumed and on demand or on a contractual basis, and the prices are what the market dictates at this point. And there is a lot of scarcity for these GPU products, and we make it a lot more simpler for companies to consume with our droplet architecture. So we are pricing it by the market and based on the demand that is available for these droplets.
So it's flexible.
Yes, it
you
is
can
very
pump it up.
flexible. Yeah. So it really depends on whether it is on demand or fractional, or if a customer is willing to commit to a larger cluster for a longer period of time, they obviously get more favorable pricing.
Got it. The other thing is, how do you manage your energy costs and your expenses when it comes to maintaining all of these offerings? What does the energy look like? Because the market really has spent a lot of time trying to figure out how everything gets powered here.
Yes, that is the biggest question mark in the next generation of AI, right? So we, in the last earnings call, we announced a new data center in Atlanta, which should be coming up online sometime in the first quarter of next year for us. And it is our objective to consolidate some of our larger data center footprint into some smaller but more denser high density computing infrastructure like the one that we are bringing online in Atlanta. So power is a big consideration for us, and so is as the GPUs become more advanced, cooling is an equally important strategic initiative for all of us in the cloud and AI space.
Great stuff. Patty, thanks for the intro as well as the update, and we look forward to continuing the convo. Appreciate the details.
Thank you. Appreciate it. Thanks for having me.
Absolutely. Patty Srinivasan is CEO at DigitalOcean. All right, interesting response to report. It seemed like some of the analysts maybe wanted more from the revenue side, but that's the only explanation you could possibly say is everything beat expectations. Numbers were lifted. Shares right now trading at 36.51. All right, short leash from the market right now. Coming up, we're going to take a look at earnings ahead. Palantir, NXPI, and Win are on our list. All interesting charts, all interesting stories.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. All right, we got some fun earnings coming up. Palantir, NXPI, and Wynn Resorts. Jenny Horner, Rick Ducat, our team, our squad, our chart masters. All right, Jenny, let's start. Palantir, nice run up, a little bit of a pullback going into the report.
Yeah, but I do think what I like about Palantir and what I've liked about this story and this somewhat comeback, I know that's not really a new narrative, is their consistency and also the fact that they have like massive government contracts, which I feel like adds a degree of stickiness to a lot of their revenue and I mean like forward projections because government just seen as more stable, of course, maybe outside of this week. But nonetheless, earnings due out today after the closing bell. The one thing is, Street is fairly mixed on their conviction on this name. Adjusted earnings are expected to come in around 9 cents a share, and we are expecting now, revenue of around $703.7 million. That would mark 26% year-over-year growth. On that earnings figure, that would also mark 29% year-over-year growth. So they have a pretty nice track record as well. They've beaten revenue estimates 90% of the time over the last 8 quarters. We also have seen earnings beat 75% of the time, and they have seen now over the last quarter 11 upward revisions and 0 downward. So with these upward revisions, revenue has also been revised up 10 times and only revised once to the downside. So the street has only actually gained some conviction as we go into this print. I will say that the one concern that I was reading out of RBC, I believe, is the fact that it's relatively right now high valued. You look at its forward PE, of course, this is a growth company, so it's not unusual to see this high, but 107.5 times its forward earnings. That's monstrous as far as now expectations. So I just feel like given the risks we've seen with big tech and some of these loftier valuations, that is now a concern as we go into this report. It's expensive now on a forward basis.
Very true. It's kind of the nature of the game with Palantir, though. It's kind of how it is. It's got action. This thing has gone berserk over the last year and a half now, Rick. So a little pullback. I don't think it's going to freak too many people out, but did it fall through support?
Not quite yet, and you're right. Even leading up to the last earnings event that we saw, it was a pretty strong chart here. We went from 15 to about 34. Yeah. But from this point, from the low that we hit right around the last earnings, a really sharp rally going along this purple line. However, shortly after we hit those highs near 45.14, we started to fall off a little bit here. We have fallen below our yellow 21-day exponential moving average. We are not quite at the point of retaking it today, still a good bit below it. We've also fallen below this volume node here, near about 43 or so. RSI, we can see, had a bit of a bearish divergence situation here where price made new closing highs. RSI did not, so that's a warning sign here, and momentum continues to worsen during the past couple days. You can see that our green trend line is broken, and now we are very close to the 50 midline that separates bullish from bearish momentum here. So if we were to keep moving to the downside, this area stands out to me, this green line high point, subsequent low point, also our recent low, 40, 30, that is the green line there. Next area, series of low points, orange line, 63-day EMA, volume node, all those come together around 36.75 or so, around that general area. To the upside, old highs right around here, 44, 45 around that area would be the next mark to beat here. And in terms of standard deviation channels, we can see that lines up pretty well with the +1 channel anyway. So right around 44.5 if we do break to the upside, +2, 52 about.
All right. It seems like a lot of areas that it could explore to the downside and find support and fit that kind of swingier stock characteristic that we were talking about that comes with the valuation. I mean, there's definitely a wide range of outcomes for Palantir, almost like at any given time, given the gappiness of the chart. But it does oftentimes come around earnings, so wouldn't be surprised then to see volatility start to creep its way in ahead of it, an expectation of it. It's just hard to want to fade vol in a stock like Palantir, even if you've got earnings ahead.
It hasn't paid off most of the time.
Yeah, generally. All right, man, if it could get back to $44, then that would be a pretty good revisitation of the recent high. All right, NXPI has been lagging in semiconductors. A lot of stuff connected to autos, more analog type of industries have just been weaker, Jenny. So on the year, not terrible though.
No, I mean, not terrible, but I will say I was just looking at some of his closest competitors, like Texas Instruments, Analog Devices, Qualcomm, kind of a reach, but also comparable, Marvell, all of these names performing significantly better than NXPI. And even if you look at this name, the way that we've sort of retested now this new range, it's not really been able to break out. And I think that's actually sets us up kind of interesting for earnings because we're trading at around $238 a share right now. We peaked out around $296 and we haven't been close to that high. We pulled back about 20% from that high and just found this new sort of range where we're stuck. So I guess for the bulls, you could say this is maybe a compelling price point because, again, we've been so significantly off of highs now for several months. But third quarter performance is likely to have been hurt by, like what you said, the continued weakness in automobile and communication infrastructure end markets. Ongoing inventory corrections at select direct Tier 1 auto customers are also expected to have weakened some of their prospects in the third quarter. Sluggishness also in communication and infrastructure due to this weaker base station deployment and faster than expected demand in terms of shifting to these gallium nitride products is also a pretty major headwind into this report. So plus we have, I think, the natural nature of this week that's going to be very volatile because of the additional trading and the additional interest in the markets because of the election. So I do think that there is still that risk as well when we hear this company report. We're expecting, at least a decline in automobiles, so that's something that we already know priced in, but overall revenue is expected to, around third quarter revenue is expected to decline 26% on a year-over-year basis. So, you talk about a growth story, where is the growth?
Yeah, wow, absolutely. Very true. All right, Rick, tell me about the chart here. It's a little bit meager in terms of what it offers fundamentally. How about technically?
Well, Jenny mentioned the word stuck. That's a good way to describe what's been happening recently because you can see, if you look at the lower end, our green line here, high point, around a lower point here, gap area, low point, around 225. Then you look up at this pink line here, high point, kind of a ceiling area. So most of the price action has been contained between 225 to 260 for most of the past 52 weeks. We did have some areas where we pushed to the upside. This was a notable, upside excursion there. But, we kind of have a clear boundary to watch, kind of a tipping point in that pink line near 260. Things did get a little bit better recently, though. You can see that after we hit our yearly highs, 296 or so, the blue trend line that was quite steep has been broken. Also, you could draw this much more moderately sloped yellow trend line, also been broken. But this was a pretty big disappointment here. We did not reach the pink line during this very sharp rally. It looked like we were breaking above our long-term downward sloping red trend line on the RSI, but everything kind of evaporated. Now we're hanging out once again near the cluster of our moving averages and our volume profile point of control. So a very big congestion area between like 235 to 240, a lot going on in this very small area, but it could be kind of a tipping point if we do get a push one way or the other. But those main boundaries, 225 to 260, those are really the areas that we need to break out of.
All right, man, it's really stuck. A lot of pull at 235. So moving averages coming together, range coming together, the triangle, it's like everything just kind of pushing it in here. Where it also feels like maybe it could even still keep going like that because based on the momentum, still got a couple weeks, kind of within that range that we've been in potentially.
Yeah, kind of a volume profile point of control, the area of heaviest trading, it lines up very closely with this short-term range. You could say even the ceiling is even lower in the short term, near about 245. So that could be another closer term point to watch if that's what you're interested in.
Seems decently supported in that, unlikely to, it takes something really big, I would think, just technically when you've got so much support and you've got the pull to 235. It would take something shocking for it to really break down through that established support at that 230-ish. So, all right, interesting setup for the chart. For a company that doesn't have a whole lot of excitement around the themes, the chart's pretty interesting. Wynn Resorts. Excitement around the themes here, though. Jenny China getting back on its feet a little bit, had this big bounce. Now the question is if it can hold it.
Yeah, and I do think that the question is even more interesting now because we just heard from Marriott. Obviously, that's a pure play hotel company, but not hearing the trends that you want out of China, where they actually forecasted disappointing guidance for China and some of their international markets, and said that there was still sluggishness in that region this quarter. So that then makes me a little bit concerned because with Wynn, we're expecting 4.5% growth just purely from their Macau operations. Thankfully, overall Las Vegas operations are expected to rise 6%. So I mean that narrative is still intact, but I do think that, to my earlier point about comparing to Marriott, this is definitely more of a casino company, and you could just see that in the ways in which they generate their revenue. Breaking down their revenue as of the last fiscal year, that was the highest out of casinos, 3.7 billion. Rooms then account for the second largest source of revenue, and food and beverage is around 22% of the total revenue. So this is still a casino play. I just think it's an interesting thing that we get Marriott's numbers about China specifically when we're relying on that 4.5% growth for Wynn in terms of Macau. So obviously a different company, but I do think that sets an interesting tone. Also, right now, what we are expecting for this current quarter is more and more of this improvement from the China region to then aid guidance going forward. So again, when we're banking on so much of the recovery story being out of Macau, I'm just a little bit skeptical when the largest hotel operator in the world is saying they're still seeing persistent weakness. And I feel like that is the risk of China. I mean, we just have been talking about this recovery for, gosh, like 4 or 5 years at this point.
Totally. It's a very good point that some of the mixed messages are still coming from the region for sure. Stock after its rip, Rick, how do we get a technical assessment on kind of a bizarre move here?
Yeah, definitely an unusual chart because, first of all, we had this, once again, kind of a persistent ceiling. This pink line here, that's about where we topped out. Between like 107 to 110, that was the kind of closing high to the intraday high. That's about where we topped out once again more recently. So, but I mean, it was a very big swing to the downside all the way here, giving us this kind of V-shaped recovery here. But it didn't last. You know, we faltered once again at a familiar territory in that 107 ceiling here. Now we have kind of drifted below this red line as well, 99. This was a low point from our range over here, kind of a high point there. And now we've kind of drifted below it here. We're in the thick of this volume node near about 97, but we've also slipped below our yellow 21-day exponential moving average, which is also now sloping down, so a sign of potential trend rollover. We can also see that our green trend line on the RSI has been broken. We had a much steeper sloping pink trend line there going downward here. It's kind of moderated a little bit into this red trend line. You can see we are actually just a hair above the 50 midline right now, so not really a good lean one way or the other. In terms of support and resistance here, green line 95.50, an old high point from back here, a low point from there, and recent lows from Friday as well. So if we slip below there, this light green line, next set of lows and a gap as well near about 91.60. And then to the upside, like I mentioned, 99 and 107 are red and pink lines respectively.
Okay. All right. It's a pretty interesting pullback and possibly discovering some support volume building up at 97 does, I think, stand out in this chart because the idea is when you have this extreme rip in one direction, it's hard to know where the support levels are going to be. But I think the volume profile is really useful because it tells us that previously there was a good amount of kind of conviction by the market that this was worth something, in kind of the high 90s. So maybe that is a place where it rests and resets for a moment like that. Okay, good context. Thanks, Rick. Appreciate that. Thanks, Jenny, as well, for the look at the earnings ahead of us. Got Market Meetup coming back. And check out the session as it firms up. A little bit of risk on since the opening bell now. The Russell is full on rallying. So much better than it was about an hour and a half ago.
your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Up a little bit now. Join me, Caroline Woods and Joe Mazzola, for a little meetup, a little chat, and a check-in. As we've got stocks trying to rally now. Russell up about 1%. So small caps on the move here, Caroline. At least we got something working.
Yeah, small caps are working. If you take a look at the S&P 500, energy, real estate, materials, technology, all higher. We talked about NVIDIA being higher earlier today on the inclusion into the Dow as a potential catalyst, but also we've seen now Netflix turn higher. Meta is firming up too, just moved above the unchanged line. We're seeing some strength in the chip names as well. If you take a look on Semi, ARM, ASML, Qualcomm, AMD, Broadcom, all higher today. And actually Supermicro, another AI play which has been beaten down, the chart is just rough, is a big winner on the S&P 500 today as well, ahead of earnings later this week. But utilities still the weak link, financials, comm services, healthcare, all lower today. The worst performer, Constellation Energy, after earnings. But then also, if you take a look, Berkshire Hathaway is lower after earnings. Marriott, we talked about that earlier today, lower after earnings, and then dragging some of the other travel stocks along with it. So there are still some weak spots here. The Dow's still negative, but overall it's at least finding some direction, and for the most part, seems like that's higher.
VIX at 22, Joe, a little lower than where it was early on in the session, but still up on the morning, even as stocks try and rally.
It's up, and it's up because of the election tomorrow. I mean, that's, there's some hedging that continues to go on around that event. If you look at kind of, where traders are pricing puts versus calls, that skew is what we call it. That's up around the 85th percentile. And you're just continuing to see people bid up implied volatility. The problem is, Oliver, they're not getting rewarded for that, right? The implied versus realized vol spread is, some of the highest we've seen in the year. It's in like the 95th percentile. So people keep bidding it up, but the market's not moving enough to pay off what they're paying for those spreads.
The potential then to just kind of harness the volatility and extract some premiums, sell against those betting on chaos. What do you think about that, Joe? That's kind of where we started the convo with Mike Purvis and KG. Is VIX giving you a gift here?
I think it could be. I think it depends on how long it takes to get the results. I think if we have the results in by Wednesday or Friday, or Wednesday through Friday, then I think you probably see the VIX come in a bit, and you see markets kind of stabilize. If this is something that goes into the weekend and the next week, then that premium is probably going to pay itself off. I just think that the sooner we have some decision, regardless of what it is, that premium will come out of the market.
Okay. We've also, of course, got the Fed, too. It's like such a distant second. When has the Fed been so second in our priority list, Caroline? It's like, I guess the market's already thinking it knows what's going to happen.
Well, it depends on who you speak to, because I had Jay Woods on the Future Show this morning, and he said that Jay Powell is the most important person for the market this week, when compared. It was a multiple choice question.
How can you say that?
Jay Powell, and he chose Jay Powell just in terms of the broader
who's president?
market and economy or economic implications. Said what the Fed does is more important. But yes, the
we're back down at support here again on Mara. Last time I called it down here, we had a nice little bounce. So something happened here. What? Wasn't Mara? Oh, it didn't break to 20. I thought it broke 20. I keep an eye on Mara.
there's still some question marks.
She does
around
look hot
there.
and black, though.
But some would say Jay Powell is still the most important person this week.
What do you think, Mr. Mazzola?
No, I'd agree. I think that if you look at the rate path that we saw, right? I mean, yes, it's jumped 50, 60 basis points in the last month, but it already had started to firm up when we started to get better economic data. I think that, that's something that everybody needs to kind of keep in mind because, yes, there's an election premium. You and I just talked about that built in the equity market, and you can see it to a certain extent in the fixed income market. But I think what the real tell will be is, do we continue to hold these yields after the election comes out? If we continue to hold the yields and, it's based off of the economy itself, then you can see some stabilization. Maybe then at that point, 4.3, 4.25 in the 10 years is the high. And then we can start to see if the equity market can continue to build once we see rates kind of stabilize. I think there is a little bit of election premium built into them right now, but once we get those results, we'll have a better idea.
Okay. Like it. Good analysis. Sound, logical, helpful. Appreciate it. Fun meetup. Joe Mazzola, Caroline Woods. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalides coming to you next from New York. I'll see you this afternoon at 2 p.m. Central Time. Have a great day. This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not a fixed formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, oh, wait, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they
Oh my
can do to
goodness.
save this market.
Oh my goodness.
Set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Monday morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have the election. We have the Fed. Lots of earnings, changes in the Dow. It's a big week ahead, folks. Here's a look at the markets this moment. Now, Friday, remember, we had a rally. Amazon did well. You may remember way back when. Today, a mixed bag.
Okay, we're at the 200 on the SPY. I can't see. I'm fogged up. I'm gonna go get my coffee here. Use that as a pivot point. I think we're going to come down and hit this right shoulder. To prepare ye in the name of the Lord. $574s. If we get down to that 571 area, 50-cent drop. 10 contracts. If we can get down there.
That cited data from the China Passenger Car Association. However, month-over-month shipments of China-made Model 3 and Model Y units dropped nearly 23%. Per Reuters. So
What?
This is, again, not the sentiment you necessarily want to see, but also I do think that it's worth noting that when you look at a name like Rivian, for example, that name's up about 3% today, despite a more downward price call as far as the analyst community was concerned. So it's not like we're seeing Tesla necessarily trade in step with a lot of its EV peers. It's somewhat become its own beast. And again, I think that speaks to the political nature, unfortunately, of this week. And right now, not exactly great news out of China. And it doesn't seem like the recovery in that region is going to be at the same pace at which the bulls were hoping. So I will say Tesla had a really strong, fantastic reaction to its quarterly earnings. We've since pulled back pretty substantially from that level, peaking at around $273.54 a share. So now trading at just shy of $248. It's been a story of volatility, although we are still able to hang on to a 13.5% gain, at least on a 12-month basis, while being modestly lower on the year, which is honestly an improvement from where we were several months ago.
I'm not liking this look.
Okay, Jenny Horn, thank you for that.
Jenny.
There at Tesla, we appreciate it. Let's get some insights on the news shaping the markets. I feel like we're all just what will happen this week. David Bonson's with us, Chief Investment Officer at the Bonson Group. Good morning.
Well, good morning.
So we remember past elections. We remember big overnight sell-offs. Are you expecting volatility? And would you say those sell-offs are buying opportunities?
It would depend how sustained they are. I do think that you could get volatility if there's uncertainty. And this is a hard part, is that we don't
That was
know
one heck of a
if we're
look
gonna
she
know
gave
winner
right
or
there.
not on Tuesday night.
Right.
Wish I could
And
see
let's
that
say a few
again.
states are very, very close. It doesn't mean we won't know a winner. Because if 6 or 7 of the states are all going to one candidate or the other, 2 or 3 being hyper close won't necessarily matter. So a lot of it will just depend on the way the market is pricing in Electoral College. I expect there will be volatility overnight action, which is sort of irrelevant. Wednesday morning, I go back and forth. I think we may not know a winner. We may. Either way, what we do know is we're going to end up with a winner, whether it's 2 hours, 2 days, or 2 weeks.
Right, and look, sometimes they have to recount the ballots in particular counties. That might take time. But the question is, what would make you say, yes, this is a buying opportunity? Because the people that bought, I remember when Trump was elected the first time, we had overnight selling of about 1,000 points on the Dow. The people that were buying right on those dips did very well.
As far as we know, there was a grand total of one person doing that. It was Carl Icahn, and it lasted about an hour at 2 o'clock in the morning. And so you're right, that was a major sell-off that lasted till 4 hours before the market opened. People didn't have a chance to buy it.
Right.
That was based on an inaccurate feeling that Trump winning was going to make markets drop. This time,
No, it was based on a reading that they thought Hillary was going to win. I remember it real well. We got her up by 46 points.
Right, a lot of folks almost are hoping for,
A 95% chance Hillary wins.
Right, because that might be ideal or not necessarily.
Well, look, I think that the way I've described it for clients, when you talk about
The
capital gain
IWM
taxes
looking
going
better.
up or regulation going up or some of these other issues, if the baseline case, meaning the worst case, is a Republican Senate with Kamala Harris as president, I don't believe markets are going to react that negatively. If there was a scenario where the Democrats were going to hold the Senate, which is almost impossible mathematically, West Virginia's a
Really?
governor, and then Montana looks extremely likely. Now, the Republicans may not get 52 or 53 Senate seats, but they're very likely going to get 51. So she can't raise capital gain taxes with 51 Republican senators. That takes a lot of market skittishness off the table.
All right, so what do you like? Is there anything that you say works for the next 6 months, 12 months in a portfolio?
I think it's very important the way we manage money. If I only like something for 6 months, I don't want to buy it because we think a lot of things go wrong in 6 months.
Right.
So our thesis need to have a little more staying power. Look, tactically, because everyone's talking about the election, electric vehicle mandates are going to go up if Harris wins and down if Trump wins. Liquefied natural gas terminals are going to go up if Trump wins and down if Harris wins. Bank regulation is probably going to go up if Harris wins, down if Trump wins. Those are election-sensitive themes, but we want to know that the dividends are growing of companies we're buying no matter who's president. Because I'm pretty confident gridlock's the worst-case scenario, then we're willing to buy all the things we've been buying anyways. In other words, politics is probably the fourth or fifth most important thing to us right now.
And you like financials, right?
We do, but not necessarily the big banks. We own JP Morgan, have owned it 15 years and made a fortune on it, but we like asset managers. We like fee-based businesses that don't have a ton of balance sheet risk. Blackstone, Apollo, and Blue Owl Capital are three that we own, we've done very well with. Moelis is a very boutique investment bank that we own, and we think M&A is coming back big, and Moelis is a name that we've owned for a couple years now.
Yeah. What about some of the other sectors that people seem to be hot on? Utilities, healthcare?
Yeah, it's interesting. Healthcare means different things to different people. We own a few pharma
Thing
companies.
so
We
high.
own managed insurance care. But on the utility side, we only own one name, and it sold off quite a bit last week, but it's up big on the year. There's just no question that the story is true, that if data centers are going to come online in this country, they need a lot more power. So we own American Electric Power. It's up over 25% on the year, but definitely still in a position to grow further. But we don't over-own the sector.
What was your interpretation of the jobs? 12,000 on Friday. I know we talked about Boeing and the hurricanes. What did you make of it?
Any honest person, that's all they'd be talking about, because the number is going to get thrown out. The month before got thrown out. You had the worst part of Friday was not 12,000 in October. It was July and August being revised down 100,000.
Right.
And so there is just a lumpiness that for years now, we automatically look at 3-month rolling averages because month by month we assume that there's going to be all kinds of correction, up and down.
Yeah, and the concern, because you made the point about Friday, right, the revisions, and that was a big deal there, 112,000 jobs lost for September and August put together, and 12,000 came in on Friday.
Jobs report sucked Friday. Done. High heels. I used to be a dancer, so I like watching that kind of stuff. New highs. We're breaking out. We're breaking out. Breaking out. Brandy. Oh, I can't believe we only got 6 people in here today. Boing. Bobby here today. Don't forget to vote, Bobby. Bull flag, definitely oversold just for the short period of time. I'm going to have to come back and retest and find out. If we hold above that trend line, the 1, 2, 3. I hardly ever look at Win anymore. Hims and hers. Right back. Oak. Mm-mm.
The big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the trades. Scott Bauer, CEO of Prosper Trading Academy. Good morning to you both. Scott,
good morning.
This feels like an incredible week. I mean, you have the election, you have the Fed. What will happen? This is obviously a neck and neck horse race election. What are you going to be watching for in the markets? What kind of moves might you make?
So number one, I don't think anything is going to be decided this week, unfortunately, and that is going to probably present a lot of volatility in the markets for the rest of the week. And I'm sure with every headline we all see, Nicole, whether it's, one side is the projected winner in Michigan, one side is the projected winner in Wisconsin, wherever that's going to be, is going to affect the market. So I think anybody that is trading, day trading in this market, you have to be ready to be incredibly nimble, use stops, because we could, really see some very quick, violent action happening in the markets this week. So I'm prepared not to sit on the sidelines, but I am prepared to really be very active in my move.
Yes. I agree with him. Be proactive. I mean, I would have cash sitting on the sideline, and I'd have my top 10 stocks on my watch list, and I'd be setting it up. And then when we see like your favorite stock, NVIDIA, Apple, Microsoft, the ones that we talk about are every single day, over and 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 over. And over SPX, the SPY, the IWM, the QQQ, I'd have them all sitting out in front of me. And I'd just wait for the right opportunity. It could be a real big week if you just don't go hog wild and just patiently wait. I mean, we get a sharp sell-off. The market, I don't think the market knows who they want to be president. They want it. I think they're afraid to say. I just can't see it. America's not the kind of place I thought it used to be. Definitely. So we pulled back here. Yeah, especially right now. I mean, I patiently wait. I keep having this WDC on here. I've never traded this stock. Western Digital Corporation. Meta's down $40 in 4 days. We're at a 20-day low on Meta this week. What is today, Monday? Meta to test use AI US starting next year to identify young Instagram users. Oh, what we got here? SPX. Okay, we pulled back to that right shoulder, I said. And there's that right shoulder right there, too. That would have been a great job. We did. Oh, I did call that one out. So let me see here. SPX. I'm sure I got the right one up there. Randy. The crowd's going wild here at the sports arena. Come on, you dingbat. Okay. Why do I have two when I should only have one? Explain it to me. Oh, you dumbass. Let me switch it that way. Okay. Crowd's going wild here at the sports arena. Shh. Shh. Hey, Jim. This is Brandon. I want to send my daughter over there for you. I'll get an extra 5% from you. I need a little extra change. So I don't want your daughter. Send Hunter over. I don't want your daughter. I don't want your damn daughter, I said. You see the supports there? Whoop. Stop it. Five 72855. Randy. Jim. Mm-hmm. 5728.55. Do you agree or disagree? YouTubers? Five 572855. Looks to me like we didn't do it. It wasn't supposed to work like that. Oh, what the heck was that? Jim. We got a big crowd here today. We're looking at the SPX calls. We could drop more. I mean, this is a big gap up already today. Here, let's do this. Look here. We come in this morning, Jimmy calls the 3 black crows. Boom. Randy takes the trade and runs it on up. And then we had a little pullback here to the pivot point of today's opening price, which is on the body of that there candle. So that's going to be our pivot point, 5728.55. There's still a lot more room to drop on this. We still got 2 more hours of lunch. So I think we could drop more. Maybe catch it down here at this other support right here. We've got 2 of them. We've got this one right here. We'll go ahead and draw them in for you right now. First support being right. Second one being right. Whoa. Second one being, well, let's bring it up just a little bit on this side right here. There are them 2 candles. Let's erase that. $57.25, and then your second one right down here, your third one. So those are your 2 support levels. Well, that's kind of strange. Crowd's going wild at the sports arena. Washboardjim is now looking at the 5750s. I know what I'll have today. Finally figured it out. Broccoli. All right, broccoli. What's on bill? Oh, yeah. October the 4th. Are these right? No, these are... Oh, I don't want these. Yeah, I do. Do 180. So I'm watching the 5750s. We're at 170. We hit the first one. Now we got one more to go. That or we hold here, but I'm going to wait for this third one. And then I'm going to jump in it. 57.23.60, or grab a couple now and then add more later. I could do that. Oh, there's a drop right there. Okay, get ready. I'm gonna go ahead and buy me some here. 160. This is a risky trade. $150. Okay, this is how we do it. Jimmy should have waited just a few more seconds. Okay, here's 145. $145. Washboardjim's taking a huge risk. $1.45. So I'm going to grab 4 more so I can get it cheaper. I ain't paying this price for it. They were at 125. $130. So I've got 4 of these. Might end up seeing double bottom. We don't hold this. We're bearish now because we broke that support level. Ooh, 125. Damn, I turned my head. I'd have grabbed him at 125. There we go. Nope. And 25. I'm going to turn off my air conditioner. Get my broccoli going and try to keep an eye on this trade. I have a feeling will buy me a ton of these in a second. Maybe 16 of them. Gotta let her come down. $1. Oh. Oh shit. We can find something out now, ain't we? This is going to get delicious here. A little bit too far out of the money, but I think we'll get them back up. SPY. Inverted hammer on the SPY. 85.90. What to do? Just wait for the double bottom, I guess. About ready to add on right here. Okay. This is for the day. So these are 57.45s. 80 cents. Okay. I'm in big now. $0.80. So my average is 94. Break it. So I'm a little bit too far out of the money to be playing around like this. You want 5,700? The way it's dropping, I can see it happening too, I guess. Oh, you think so? I got lunch on. I'm going to go get my coffee. I got a lot of contracts. Be careful. Practically 95 average. Unless I buy a bunch more. another 1,500 in it. That would give me here plus 75. Plus 75 would give me 85. Yeah, if I can get more at 75, I'd have to get 20 of them. Come on. The IWM's close to the 200. Yeah, I'm getting...
One item. I think analysts, many analysts out there will maybe rethink Boeing and their bullish mindset on the company. The key for this company is getting back to free cash flow positive. And they could do that maybe by 2026, but then if you have a defined benefit plan, the out years, it becomes a question. You really don't know what something like that costs.
Russia
The pension,
suspected in plotting to send
Boeing's already under financial
secondary devices on U.S.
They've
bound
certainly
planes.
said that they would not, and that's really not, as far as they're concerned, open for negotiation. I think beyond the long-term costs of the operating costs, the upfront requirement, capital requirement to fund it would be large. As you saw that Boeing already just raised a lot of equity. I think that would tie up quite a bit of that if they were going to restart a pension, and I think that there would be very reluctant to do that.
Look, they'll get benefits based on seniority and cost of living. Some of those things will be factored in. Looks like they'll earn about, the new offer will be average machinist wage will be $119,000 from $76,000. That you mentioned the 38% increase over 4 years, but a good chunk of that 13% bump in the first year. You know, the question is how quickly this needs to happen. I really think David Nelson, when do you buy this stock? When do you start believing in Boeing again? Do you need this to sort of be settled before you would buy Boeing stock again?
I think a lot of PMs have, come into this stock too soon, and it's been a very painful trade. I think if this vote goes through, I'll have to take a look at it. But customers are getting upset, and they're making the voices heard. Ryanair CEO Michael O'Leary just recently said that these delays are going to cost his firm 5 million fewer passengers next year alone. So, frankly, we need to get it. We need to get it settled. It's a national security imperative for this country. So I hope it ends tonight.
Yeah, I mean, I think everybody sort of hopes it ends tonight. I don't know whether or not it will. Ryanair trimmed its passenger growth target because of
it should have ended last week.
What is the trickle effect, Ben? What are you watching there about how it affects other companies, how it affects the economy? We had a jobs report on Friday that was just 12,000 jobs. So much of it blamed on the machinists.
I haven't added on big yet to these. I'm just holding on.
It affects not just Boeing Airlines, Boeing's supply chain, Spirit Aerospace.
Might not work.
Has instituted some furloughs. So yeah, Boeing is part of a web of economic activity, and right now it is a bit stalled due to the impasse with the union.
And we think about GDP and how much of all of this gets factored in. What's your big picture on the economy these days, David? I mean, Boeing being a factor, but we've gotten in a mixed print. We're waiting on the Fed too.
This is a pretty important vote, I think. I think Boeing, we need to get it back online because, as Ben pointed out, there's a trickle effect, and it goes throughout the entire, certainly the airline industry and all the suppliers to Boeing. For airlines, it's a double whammy because they need new planes. Their planes are getting older. They need more efficient planes. It speaks to higher fuel prices, and they want more efficient engines, and they want to be able to carry more passengers. That's the key to profitability. Without that, then it's going to be a real challenge for a very important industry.
Yeah. I mean, this morning, I was asking you earlier if you wait for the decision to buy the stock, and obviously you're hoping it happens tonight. Do you know that Wells Fargo today maintained their underweight rating this morning and changed their price target by $1? Yeah. And now it's $86 instead of $85. It's at $155. So they do not believe in this stock or this company at this moment. It's very evident. I got to pop off.
They raised it $1, honey.
The watch list, we'll keep covering this, of course, because this vote is key for Boeing. We'll have you covered all day here on Schwab Network. David Nelson, Ben Sukanos, thank you both so very much. And thank you, friends, for being with me here on Trading 360. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com.
This thing ain't working out.
For the watch list, please join me then. In the meantime, keep it right here. Fast Market is next.
I'm going to put a stop on it. Just
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader
is to make sure my man has coffee.
How did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are. It is very attractive.
So, how are you exploiting human weaknesses?
Human weaknesses?
Being lucky in trading is great,
I
but it's
still-
not the formula for success.
You need to be able to find opportunities.
How are you exploiting
and sift through
human
enormous, staggering amounts of data? You certainly
I don't understand that question.
so important.
I mean, that's an insult. I'd say, bitch, I'm out of here.
Insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
It's almost second nature to me. Asian people are very smart.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked
Always
pretty much
clean as
across
Jim.
all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
70 cents. I need to go higher. I'll be very happy with, let me see here, $1.20. I'd be happy with $3.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions, and we'll have some option strategies. We're going to take a look at NVIDIA, which is higher after it was announced that it's going into the Dow Index, and Palantir, which is near all-time highs, into their quarterly report after the close. And like Folio, they're going to break down consumer sentiment data in Yum Brands. The Taco Bell and Pizza Hut parent stock is relatively flat this year into their quarterly report tomorrow morning. Now let's take a look at the major indices, which are near session lows as we speak, getting a little bit of crack here. S&P 500 down 0.4%. The Dow Industrial's off 370 points, or nearly 0.9%.
370 points. Dow Jones in the red.
The Russell 2000 small caps rallying a half.
And I've got big balls.
Back to some falling yields here today. A little strength in Treasury as those inverse yields are falling, lending some support there to the small caps. Tell me, break down the market action. Let's bring in my co-host. That's Kevin Hinks. Kevin, your take here. It seems like
I'll be right back.
jittery, but maybe the market should be jittery going into the election, going into a Fed decision on Thursday. I mean, we probably should be a little bit choppy right now.
Yeah, yep. Exactly right. You know what, Tom? It's Monday. It's the day before the election, and I'm thankful. You know that? Mm-hmm. You know what I'm thankful for? NFL Red Zone with no commercials. That's what I'm thankful for, because I am so tired of the commercials.
Yeah.
And so it's nice. I watch NFL Red Zone with no commercials on all day Sunday.
Yeah. Well, yeah. Hopefully you didn't watch that Bears game, because that was painful to watch.
But there was a lot of painful games on yesterday. Yeah. But I am so. I'm nauseated by the amount of commercials.
I think a lot of people are. And
yes.
Then maybe they should.
Get it over with.
Yes.
Mm-hmm. And let's go. Let's figure out what the market's going to do. Let's figure out the presidency, the House, and the Senate, and let's move on. Good Lord, this is a lot of time.
Yeah, and the presidency, a lot of people say historically you can overlook who's in the White House, but
some
maybe
of that's true, but not all of it.
Yeah, not all of it. But what you should also realize is what maybe more important is the House and Senate votes, and
just
as important.
It's literally 3 equal branches, and they all have their role. And like confirming judges and that's the Senate.
Yeah.
I mean, the power of the purse, that's the House, and then you got the president who sets the agendas.
Right.
So there's a lot. Each of them are significant, and they're all coming together tonight. It's going to be. I'm not surprised that the VIX is elevated, even though the market was up and now it slid back down. So there's another reason for it to be elevated. But boy, not a lot of top tier earnings. Right? Couple Airbnb, Qualcomm, ARM Holdings. Nothing too crazy. Not a lot of top tier data.
Right.
Also, so it is the election. And it's the Fed meeting.
Break.
And those are going to gobble up all the oxygen, and those are going to be tradable events.
Yeah.
That's for sure. Because, not sure why, but the general consensus is that he's going to cut by 25 basis points. Not sure why, but he is.
Right. Yeah. That's the consensus right now, according to CME FedWatch tool. It's almost baked in that we're going to have that 25 basis point cut on Thursday. But let's expand this conversation. Bring in our next guest. It's going to be Kevin Green, senior markets contributor here on the network. KG, give me your take here. Is that what we should be waiting for? And as far as positioning in the markets, it seems like we're choppy, but maybe we should be, right?
Yeah, definitely. I mean, this pullback that we are seeing over the last couple of trading sessions, I believe is actually warranted, and I would not be surprised if we continue to move to the downside. I mean, if you kind of look at that 5620-ish area, there's a key area of support there, especially if we're looking towards around July, August of this year. Maybe we can actually flip that resistance area to a support level, and then also kind of right sizes the valuations. I mean, Tom, you've been talking about this for the last month and a half, 2 months. I mean, we were at lofty valuations. You're looking at these earnings coming in, and they're good for this quarter, but when you're looking at the guidance, especially top line guidance, coming up a little bit weak. So a resetting of the forward multiple, I think, is very key here, and we have a reason to sell. I'm not saying that this is going to be like a dramatic event, but usually if the market has an event like we do with the election as well as the Fed, they have a reason to kind of take some chips off this table, kind of readjust their positioning here, and then once all of these events kind of subside, we have volatility usually get crushed, and that's when you can have this end-of-year rally, which is still being priced in the forward if you're looking at the December VIX here. So once again, I think we still have some room to go to the downside. I'm not surprised by this failure for today so far, and we continue to try to look for other opportunities and let this kind of just play out here.
You bring up a great point there, KG, about people maybe taking some profits, maybe lightening the load a little bit. The S&P 500 is still up nearly 20% so far this year, and we've still got 2 months left in this cycle here, Kevin, through the historically strongest quarter of the year. So, the little bit of a pullback that we're seeing, I'm not surprised by that. But when you look forward, the outcome of the election might not come until Thursday, might not come until Friday. Remember last election?
No.
It was drawn out, right? So we didn't have a clear winner. Is that going to come?
We're retesting now.
Hey, come Wednesday morning, watch the future show. I'll be on there at 7 a.m. Central Time. We might not know anything.
Sum up what you just said. Markets don't like uncertainty.
Right.
Stocks go down, commodities go up in uncertainty. And that's what you're seeing right now. There's a lot of uncertainty out there.
No, not.
Yes, at some point in the near future, it's going to get less uncertain. But we don't know when that is.
Yep. We're going to have to wait and see.
Wednesday.
I wanted to bring you in on this conversation.
Tuesday, tomorrow.
Berkshire Hathaway, they continue to lighten their load as far as equity exposure goes, raising a bunch of cash. This could be due to, taking some chips off the table. It could be due to tax implications, maybe the outcome of the election. But is this maybe a warning shot across the bow that, hey, Warren Buffett's, selling his stakes in some of the biggest, longest holding names, that, there might be, some reasoning for caution here at this point?
I don't think so. I mean, I don't think Warren Buffett and Berkshire really try to time the markets, if you will. I think they are taking some chips off the table because they have a fair amount of profits. And when you're looking at the company and you hear from their executives, and not only when you talk about Warren, but even some of the junior execs that are now moving up in the ranks, their biggest problem is actually deploying capital in a way that makes it beneficial for them because they have so much cash on their books. They have to put it somewhere where they can actually leverage it and it makes sense. And that's the big difficulty for them. So I think they're just trying to taking some money off the table, maybe looking for some other opportunities in the market, and then probably will execute a pretty big trade here. I'm not going to time it, but I would suspect that they're probably going to make a big play here in the next year and a half or so, just because, once again, a lot of their things that they've been selling off have been doing really, really well. And so I'm not really too surprised by that. And then also, too, when you're looking at their earnings over the weekend, it's insurance. And insurance is going to be a very tough business. I mean, we obviously saw what's happening with the hurricanes and things of that nature, and they're continuing to raise premiums in order to offset that risk. But it seems like these event risks, when it comes to the weather events, are happening at a much faster pace than what premiums are being adjusted to. And so that's probably why you're seeing some near-term weakness when it comes to Berkshire. Not only just selling, but also just taking the hit on that insurance play that they got in their portfolio.
Yeah. Premiums that people are paying, those are up double digits every time CPI comes out on a year-over-year basis. I mean, that's one of the inflationary pressure items, Kevin. But I was going to, kind of ask you about the yields because we're starting to pull back a little bit. 10 years still at 4.3%, up about 70 basis points since they cut 50 basis points in September. The Fed did, expecting another cut this Thursday. But when you look at that, the push into treasuries today tells you there's a little bit of risk-off sentiment in the overall market here. Bitcoin down, gold down a little bit. So maybe they are taking, some money off the table. I don't know where they're putting it. Maybe into treasuries a little bit.
Well, just look at the run that the bonds have had on the downside and the 10-year yield on the upside. I was like trying to figure out why. Maybe just because it's run as far as it has. Could that be a reason why? I mean, it was over. The 10-year was overbought. The 10-year note was oversold. I mean, at some point, remember, there's a lot of events coming up that might cause people to, fade some of this massive rally in yields. It's the reverse of the trade and it's the polls are changing. No, it's not. Okay. It's just, now, there may be some of that, but I think it's how far they've run. And remember,
Jimmy ain't doing good.
Where we sit now, 4.3% yield, pretty attractive. And remember, the bond auctions had big bids in the last few weeks, and we've done a lot this week.
Yeah, we got a
terms of auctions.
We got a 3-year at the end of the show. That might
not really surprising that because of that of the popularity of them with a 4.3% yield, that they're not backing off.
Yeah, and KG, 70 basis point move higher after the Fed cut 50 basis points. Getting a little bit stretched here. There you go, right there. There's 10-year yield.
Yeah, why is it backing off? Look at the chart.
Yeah, look at the parabolic move. I mean, maybe that's warranted here, KG, at this point. If they're going to cut another 25 basis points, I get it that yields might have gone up because the economic data is getting a little bit better. But when I hear, Oliver Rennick tell me that, hey, maybe 4.6, 4.7 in the 10 years coming up, I kind of shake my head at that.
Okay, so there's a lot there. So let me.
I don't think the jobs numbers got that big of a notification last week because they were bad. Real bad. Worst I can ever remember.
And I think that's a really good thing. I think right now when you're seeing yields kind of move to the downside from a technical standpoint, let's take the event risk off of it, which I do believe.
I think 12,000 jobs were created, 40,000 government jobs were created.
We do see a little bit of a bid when it comes to the 10-year as well as the 30-year. Last thing I will say, Ollie's not wrong. I don't know when 4.6, 4.7 can happen, but he's not wrong. If you're looking at the spread between the two 10s, I think that on average, if you're looking at a normalized market, there's around a 1.2% difference. So if we have a 2-year or sitting at, let's say, 3.5, 3.25 at a percent and a quarter on top of that, it could get you kind of close to that 4.6. on a longer term time frame here. So all of those can be right. It just depends on your time frame there. I would say focus on the spread, 2-year, 10-year spread, rather than isolating the 10-year rate just as a whole. I think that the spread's telling you exactly what's happening right now, and it's continuing to move to the upside here. And that also coincides with gold moving to the upside. And I don't think you're going to see a peak out in gold until you see a peak out in the 210s spread.
Yep, 18 basis points difference between that 210 right now. But Kev, I wanted to kind of pivot over to corporate news. Vote today, Boeing.
Yeah.
Stock's actually firm today. Does this pass? I mean, I saw an interview with the Ryanair. They have all Boeing planes.
It was glowing.
But he's actually starting to be a little bit less harsh against Boeing. Remember, about 6 months ago, he was blasting them, but now he's like, hey, we've got people on with boots on the ground in Seattle. Once they get through this strike, we're going to start delivering planes. They're more fuel efficient. They're going to be better. But, he was kind of actually...
He did an interview this morning, very early in the morning on Bloomberg, and it was glowing of Boeing. I mean...
Glowing of Boeing.
I'm watching it in surprise. He basically said, our costs stayed flat even though our passengers were up. Why? Because the efficiency of these planes. He said they are 20% more passengers and 20% less fuel you're using with these planes. And he said their engines are better than the Airbus. And he goes, he compared the Airbus, it was glowing.
Yeah.
And he said, we're going to be waiting. We think we're going to get about half what we thought we
Okay,
were
we're
going
getting ready to squeeze in a second here,
take
maybe.
whatever we can get.
We got 3 white soldiers.
As a CEO, he doesn't pull any punches.
No, he's very demonstrative.
Yeah.
Demonstrous.
Watch the vote because they're supposed to get over 4 years 38% pay hike and some
And 12 grand.
And 12 grand cash along with
God.
And wait, one last thing. The other great interview I heard this morning, someone said about this, he goes, deer hunting season just ended in the Pacific Northwest.
Oh.
And you're coming up on Thanksgiving, coming up on Christmas, and 12 grand in your pocket. Yeah.
Maybe the machinists like that.
Exactly. They're going back to work. I thought that was the best, realistic take on it.
Oh, boy. We'll continue to watch that story, see if it passes on that vote. But let's take a quick break here.
Well, that'd be a blessing.
NVIDIA, the chipmaker stock, is moving higher on a down day for the overall markets after news broke that it's being added to the Dow later this week. Stick around, Fast Markets coming right back.
Dow's getting a little bit better. IWM's at the 63. So everything's squeezing. Everything but the SPY. The SPY looks like it broke. IWM squeezing. QQQ squeezing. The SPX trying to squeeze. It's above the 21.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical.
Very good job, Dun Dun.
NVIDIA getting added to the Dow Jones Industrial Average announced today, goes into effect November 8th. The stocks rallied spectacular so far this year. Let's bring in Caroline Wood, senior markets correspondent, here to help us break down this story. Now, it's not having
NVIDIA overtakes Apple to become the world's most valuable company.
Laggard like Intel at NVIDIA.
I'm talking.
Right, and this change doesn't actually happen until Friday, so no surprise that the biggest weights on the Dow today are those names that are being removed from the index, including Intel and then Dow Inc. as well. But yes, NVIDIA shares higher today, up about 1.4% right now. Was up as much as 2.5% earlier today, pushing its market cap past Apple's as the world's becoming the world's most valuable company, but likely on news that it's being added to the Dow Jones Industrial Average, replacing rival chipmaker Intel, which shares of Intel are
Good
down
deal.
4.4% today. Sherwin-Williams is also being
What
added
took so
to the
long?
Dow, replacing Dow Inc. Shares of Sherwin-Williams up about 3.4% today, whereas Dow is down about almost 3% right now. S&P Dow Jones Indices said the index changes were initiated to ensure a more representative exposure to the semiconductors industry and the materials sector, respectively. So if you take a look, NVIDIA, you talked about that impressive run higher. Shares up about 180%, almost 177% year to date versus Intel's 55% slump. So this really is just a testament to NVIDIA's leading role in the chip space, which of course is no surprise. We talk about that leading role all the time here. As I said, the switches happen on November 8th on Friday. NVIDIA joins other Mag 7 names on the index, including Apple, Microsoft, and Amazon, which of course replaced Walgreens earlier this year. So that actually means that 4 of the 6 trillion-dollar tech companies are now in the Dow. Alphabet and Meta aren't traded on the Dow. So another thing to keep in mind, the Dow, of course, is a price-weighted index, so lower-priced stocks have a less of an impact on the Dow. So NVIDIA's 10-for-1 stock split really helped its Dow candidacy. That happened earlier this year. And, you know, it priced it at 138. You know, compare that to United Health, which is trading around 558. Goldman Sachs is trading around 515. So it won't have as much of an impact there. But NVIDIA shares are higher today on this news. Off to a strong start in November, now up about almost 3.5% in the early going of November.
Caroline, a couple things. I always pay attention to those names that are now in all 3 major indices. And now NVIDIA is one of those. It's Microsoft, it's Apple, I believe, what is the other one is, hold on.
We're at 90 cents, brother.
And so those ones are in these.
Randy.
And that's good.
Jimmy's at 90 cents. You know what happens if I go to the VWAP? I buy you a ring and we get married and have babies. If Kamala gets elected, we will have babies. I guarantee it. Guys, if Kamala gets elected, you will no longer be able to bitch slap men.
Gain and 205% one-year gains. 90% of analysts still rated as a buy. The median price target's 150. So Wall Street on the whole thinks this is a stock that is heading higher from these levels. I think that, in terms of the reaction, what I've heard is more or less that funds typically track the S&P 500.
Damn, I should have got out of that.
The S&P 500 versus the Dow, so they don't necessarily see it getting as much of a pop from the inclusion in the Dow. We'll have to see if, obviously, if NVIDIA faces some weakness, it would weigh on the Dow now once it's included. So
Caroline.
I think that's an important point to point out.
It is not.
Say, MarketWatch actually in an article earlier today was pointing out that history isn't necessarily on NVIDIA's side, pointing to some research from a company called Briney Associates.
When did you know
saying the
that?
average one-year performance after being added to the Dow is a decline of 4.8%.
Well, we're talking about NVIDIA here, baby.
On the side of NVIDIA as well, but based on you know what we just heard from Mega Cap Tech last week in terms of capex, in terms of their spending, they're continuing to spend, and that only benefits NVIDIA, obviously, as the chip maker who's making these powerful chips that power AI. So I think that overall there are still several bullish catalysts for NVIDIA, not necessarily it being included in the Dow as an overall bullish catalyst, according to a lot of the commentary I've seen, but it's certainly helping today with NVIDIA shares up about 1.5%. I will say it also did get a reiteration of an outperform rating from William Blair earlier today as well.
Blair.
Just kind of driving home that bullishness, not in terms of the Dow,
I love you.
but saying, since our initiation, our confidence in NVIDIA's ability to maintain
Blanket.
its market-leading position for AI infrastructure has only been reinforced by the positive
Back to
commentary
90
around
again.
AI
Come on,
demand from
break.
key manufacturer TSMC, who expects AI demand to outstrip supply through 2025, and the strong start to Blackwell shipments last month as the company moves past a design flaw-related delay. So, you know, maintaining that bullishness based on the fundamentals outside of this Dow inclusion.
Yep, and controlling 90% of that lucrative market.
Yeah.
Not a bad thing there as far as AI chips goes. All right, great stuff. Thanks to Caroline Woods, Senior Markets Correspondent here, breaking down the story on NVIDIA. KG, let's bring you back in here because, you know, a lot of people, when, you know, you're going into the S&P 500, you get that boost, right? Because there's a lot of, you know, funds out there that track those indexes. There's not a lot in the Dow. So what does this mean for NVIDIA besides the fact that it's actually going into it? Because I personally, I look at the Dow, but I don't use it as a barometer for the market because it is a price-weighted index with only 30 stocks in it.
Yeah, I agree. I mean, at the end of the day, will it have an impact? I think it'll have a marginal impact, but you know, as that index is priced.
Mr. Green.
UNH has a bigger impact on the Dow than NVIDIA does. So I'm not sure if there's going to be an immediate impact to the upside or this increase in fund flows because NVIDIA is in the Dow. I just don't think that's going to be the case here. It's kind of, you know, funny, Caroline making that comment that sometimes inclusion is not the best thing.
What happened here?
That was everybody was saying that on Friday. As soon as the news broke, I tweeted.
Well, I thought
about
we
it,
were-
and everybody was saying, "Oh, that might be the top for NVIDIA." So over the long term, I don't think it's going to have
I'm watching this real close because it's got a lot of money in this, and I want to get out of it.
Continuing to have that favorable, you know, market share as Kev was kind of talking about it, and it sounds like they actually were reaching out to SK Hynix in order to try to expedite some chips as well in order for them to continue to try to capture this market. So decent pop today, but over the long term, I don't think it's going to be a big deal for NVIDIA right now.
Yep, investors pretty happy with the stock, as Caroline mentioned, up nearly 178%. How do you want to look at this one from example trade, KG?
Yeah, so this is an example, you know, bull trade for the stock here. So looking at a call spread, looking at the 137.
Right now I'm even.
137 selling the 140, expiring this week Friday. Doing this for a debit of $1.40. Max loss is going to be the debit paid $140. Max gain is going to be the difference between the spread and the debit.
I could get out here and be out even.
With a break even
Oh,
of
come on.
$138.40. Be mindful, though, this is one of these examples, Tom, where if the stock goes above
Oh,
that
there I'm
140 price,
green.
and if there is a market available,
Black. Oh!
regroup the trade and take the profits rather than
Mr. Green, we'll come back to you a little bit later, though.
market right.
Nope. Oh, God. Break it. We would love to see the 200 EMA today, here within a few minutes. Could have got out with $100. Jim's a little nervous here. Yeah. I mean, this ain't going to be too bad if we get a breakout here. We're bullish now because we're above the 63. So I'm using the move. We got the 9 crossing the 21. Oh, yeah. Magnificent. I think you know what to do next. What do you think about that, Mr. Green?
For this company, just from a geopolitical standpoint, as well as from a Fed standpoint too. If we do see this risk-off behavior in the market, is NVIDIA going to get impacted? I mean, it could be one of the main drivers. So really quick in and out trade, if you will, and leveraging those GTC orders, those good till cancel orders, also gives you the ability to try to manage risk and manage profitability.
Yep. And Jensen Huang, the CEO, said demand is insane for the Blackwell chip, and people forget the Hopper. They're still selling thousands of those.
I don't think they've started delivering Blackwell yet, right?
They haven't.
Yeah.
So we'll find out.
By the way, sold out.
Sold out for the first 12 months, I believe, is the metric. All right, great stuff. Thanks to Kevin Green, senior markets contributor here.
It's not good to be a monopoly there, guys.
Yeah, but coming up after the break,
The government will come after you.
He's going to join us to look at sentiment data in Yum Brands, parent of Taco Bell and KFC. Stocks relatively flat this year. They report earnings tomorrow morning. Stick around.
Oh, yeah, there we go. Where's the results on the ticker? Well, that kind of sucks.
Wrap up the trading day with me, Oliver Rennick. The biggest earnings coverage, 3 p.m. Eastern. It's market on close.
Well, fuck, I'm looking at Apple, you dumbass.
The Schwab Network.
Trading at Schwab is now powered by Ameritrade.
Oh, God.
The award-winning trading platforms. Bring your trades into focus.
What the heck am I doing?
With robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What the heck are you doing, you dingbat?
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Dollar. Go on. 105. Now I should make a business decision because I've got quite a bit of these. Randy, I pulled it off.
Welcome back to
Randy.
Here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Happy Monday.
Happy Monday to you. Yum Brands. It's been relatively flat so far this year into their earnings tomorrow morning ahead of the opening bell. Is this just about maybe competition being better than them? Is it changing taste? Is it, is it inflationary pressures? Why is the stock, according to your data, not doing that great?
Yeah, I think it's all of the above. Yum is in a pretty tough spot from a macroeconomic perspective, we really see kind of a large divide continuing
No, I don't want
to grow
you.
between
I don't want you grading my initial entry, please.
income consumers and the rest of the world. And you see that, really in the
By grading my initial entry doesn't justify how terrific the trade was.
people who can afford to are opting for Chipotle, they're opting for Wingstop, they're opting for a little bit more of a fast casual experience, or they're getting a meal delivered, or they're going to an Olive Garden type of experience for nearly the same price as a McDonald's value meal or a KFC.
Man, get rid of this guy and get me on there.
Very tough competitive situation at Yum Brands. It seems like Taco Bell is
Schwab.
the one that can continue to thrive in this environment. Both KFC and Pizza Hut continue to struggle because the value that they can offer is very difficult to justify for almost all of the consumers that would normally, eat there or shop there. There's just better options. So when we look at, the demand levels,
He partied a little bit too much last night, buddy.
Versus everyone else, especially if you're in the fast food category, McDonald's, Wendy's, yes, Yum Brands is down. And we just overall think that that's...
I don't know if that was necessary.
From a competitive situation, they are no longer capable of offering...
I don't know if that was necessary, Magnificent.
than what someone can get at Chipotle or Wingstop or any of these fast casual places that are popping up everywhere. So
that'd be confusing to somebody that was new in the room.
Brands, we think that absolutely continues into the rest of this year.
Break it.
They've really got to kind of...
I want 120.
They are. And is it just we're a Taco Bell company now? I mean, that's the only one that is working, and it's been that way for a little while.
That is so. You just got my point exactly.
You want 571.28, and I want it now.
A lower price point than, let's say, Chipotle, and then it's Kentucky Fried Chicken, which is basically a forgotten chicken with all the chicken, the really
dollar
out there, and then Pizza Hut. So much pizza is regional.
Oh God, $1.05.
Domino's and Domino's
Give it to me.
them in that. So this is really a company. And remember, this used to be owned by PepsiCo at one time, and so Taco Bell keeps innovating. They keep changing. They are the value.
I'm gonna hold on to these for a little bit.
For people that want low-cost Mexican food and some type of tacos. But what else, Andy? They got nothing. They don't have anything else to draw you off the street when you've got a Chick-fil-A. I mean, list the chicken companies that are out there.
Oh, it's nearly impossible. You know, it used to be, I'm going to say 15, 20 years ago, date myself a little bit. 15 or 20 years ago, if you wanted people to talk about, let's get chicken tonight, then KFC was going to be near the top of that conversation. You know, maybe Chick-fil-A was starting to sneak in that conversation, but it used to be, you know, you go to KFC, you get a bucket of chicken, some biscuits, some sides, and you have a nice family meal. And I think KFC somewhat has lost.
I've never done that. That was back in the
'60s,
'60s, my friend.
You know, Yum Brands and KFC are based in Louisville, Kentucky, but it's become very clear that this is a company that is leaning on the success of Taco Bell to continue to justify what's going on at both KFC.
I went into Taco Bell yesterday,
Again, I think part of that,
or the day before. I was going to get me something to eat, and the first thing I noticed when I walked in there is how filthy the floors were. And I looked up at the price board and I said, what the have you looked at the price of Taco Bell? I wanted to go in there and grab one little bitty taco, and it would have been $5.
and it's going to be $9, $10, $12, then it is. I might as well.
So I stepped up. First thing I did, the floors were filthy. You know, I said, okay, there's my no, I don't want to eat here. And then I look at the price board and I said, what? So I went behind, and where'd I eat? I went behind there and ate something. I forgot what I had now. Oh, yesterday I went down here to Wendy's to get me some chili, and the guy sitting next to us said, what just happened? He said, that guy just got on it on his bike out there and he did a wheelie and the bike took off without him. I said, are you serious? And I looked out there and there he was laying down there, blood all over his head. And he ended up getting back on that bike and riding it off. I said, there's your Harley rider.
Bring some Chipotle, or like you said, go to Olive Garden.
CMG.
And have a better, overall dining experience. So I think some changes have to happen at Yum. I don't know how fast they'll be able to make them, but it's clear that Taco Bell has it figured out, and the rest of the brands are just simply anchors on the company at this point.
You got an earnings score going into this one with the stock up 1% so far this year.
Yeah, we think the stock is flat this year. We think the stock deserves to be flat, and we think the stock probably stays flat after earnings. We see no reason for any exciting news to come out of this event. We think the stock is priced just about right here.
All right. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan.
It's definitely got a squeezing point.
Breaking down Yum Brands. It's been a choppy trade over the last 10, 11 months, Kevin.
And the stock's not doing horribly.
No.
It's just not killing them.
A range bound between 125 and about 143 on the upside this year so far.
But has a 2% dividend yield.
Yep. If it continues to pay.
Therefore, what do you love in a 2% dividend yield and a range bound stock?
McDonald's broken ice cream machine can finally be fixed as new copyright.
Of the 2% quarterly dividend, by the way, that it was last paid August 27th. September, October, November. Should be showing up sometime at the end of this month. I don't know when. It's when they declare it.
Right.
So I kept this pretty simple because a covered call, one of the scenarios where a covered call works, range bound. Is range bound strategy. Why? Because the out of the money call that you're short goes to zero. And you can do that on a weekly, or actually this has no weekly, so you got to do it monthly. So I went in, Tom, and I bought the underlying and sold the November 15th 140 call, the net debit about 131.50. And either the stock is going to get to $140 or that 140 call is going to zero. Now, if you think that right now the 140 call is trading about between 65 cents and 75 cents, somewhere in the middle. If you think it might not even make it to 135, which is $2.50 away, you can sell for 135 for $2 and change, and increase your. But that's inside the expected move. But the idea is to match the overall current level of the stock to some type of strategy. Because it has a 2% yield, I think the covered call is one you should look at.
Okay, so let's break this one down. For every 100 shares of stock you buy, you're selling out of the money call or an at the money call. In this instance, we're selling one of the November 15th monthly 140 strike calls and paying roughly about $131.50 on this. Remember, this has got big risk because it's capital intensive. You're buying the shares in this type of strategy here. So if you pay $131.50, you're buying the shares at a discount of that credit that you're collecting there. Now you do have risk all the way down to zero if the stock were to somehow go down there, over $13,000 in risk if the stock went to zero for some reason. But if that dividend continues to get paid, that creates yield on this position. As you get closer to November expiration over the next 14 days, You can roll or adjust that short call repeatedly on a month-to-month basis, creating credits, lowering that break even, increasing your yield on that on a monthly basis. So that's the type of strategy that works out. If you think it's going to go higher, maybe stay where it is. This type of strategy works in that type of environment, a neutral to slightly bullish type of scenario where you expect that short call to go out worthless, and then you can maybe sell another call against it, or maybe roll that short call at expiration. You do have some assignment risk on that going into going into expiration over the next 11 days. So good look at a cover call strategy in there. But coming up after the break, we're going to take a look at Palantir. The AI software stock has jumped over 140% so far this year into their quarterly.
Very good move.
Close. Stick around. We're coming right back.
Very, 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 very good. SPY. We were here last week on the SPY, and we had a great day the next day, and we bounced up halfway through the melting pot already. Doo-doo. Doo-doo. Doo-doo.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Very good. Break it.
Welcome back to the Future Show here. Fast Market, not the Future Show. That's the other show I always sometimes. Fast Market here on the Schwab Network. Before we take a look at Palantir.
Spies at the VWAP. Spies at the VWAP.
Off of those session lows that we had.
Spies at the VWAP.
The show. S&P 500 now down less than 0.2%. The Dow Industrial still off over 200 points.
Yes, I scaled out some, and I still have some. I got it cheap, and I have a lot. I had 40 contracts. I want it to break, and I want it to break now. VWAP. I forgot what I'm calling for. I want more. Jim, did you eat your broccoli today? Yes.
A private sector
George.
enterprise software, which again helps with decision analytics and predictive analytics. So they do a lot of scenario analysis, decision analytics, both for public sector in terms of the military, but also the private sector. And their private sector business has actually been growing to the point where it's almost about half their total sales.
I guarantee it, if George knew how excited I get every time I see him, he'd probably come to work with a smile on his face. Ain't that right, George? I don't smile for nobody, not even my wife.
That's about 2 cents higher than the 7 cents last year, 29% year over year. And sales are also now breaching 700 million for the quarter. That's also higher, 26%, compared to 558 million for the same quarter last year. But there are, of course, some concerns about the stock relative to where it's at in terms of earnings, where it's going in terms of earnings. If you do look at this,
I pulled it off, Randy.
Earnings profile. This is Q3 for fiscal year 24 that they're going to be reporting. 36 cents a share. Next year, they're expecting to improve that to 43 cents a share. But still, for this year, the stock is trading around 118 times this year's earnings and 97 times next year's earnings. Now, that's pretty large, but you have to consider growth rates for both earnings and sales. Now, looking at the sales numbers, they're expected to continue to grow them at 20%, but also earnings are expected to grow about 31%. So, it's trading around 3 times the earnings growth for next year. One would say perhaps it's a little expensive, but in my opinion, it doesn't matter. The market is obviously telling us that there's something more big happening here for the stock.
Yeah, George, you try to get a handle.
We're at 95.
Private contracts, right? And
We're at 95. Oh, we're at $1 now again, Randy. Uh-oh. Am I going to get my 120? The crowd's going wild here. 110? What happened? Oh, 15.
We don't do any other significant testing for the purpose. We'll reconcile on
I think we're going to go higher.
the extent.
I think we're going higher. Brandon, you can send your daughter over now. George, tell it to stop.
Strategies or, cybersecurity strategies. This can be applied to the private sector as well across multiple industry groups, whether it's, industrial space, the automotive markets, but also, again, primarily for the Department of Defense. So they're a very unique company. Is it unique enough? So the questions are, is it unique enough to justify the valuation? Certainly could be, but I'm going to go with what the market is telling us. But the other thing I will mention is that the last time the stock actually did dip below the 20-day moving average on 2 consecutive bases. Now, we're on track today to potentially close below that 20-day moving average.
Honey, I got a song I wrote just especially for you. I'm going to sing it. Just for you.
What is it?
It's called Hey Good Looking.
Oh.
Say, hey, good looking. What you got cooking? How's about cooking something up with me? Say, hey,
baby.
Don't you think, baby, we could find us a brand new recipe? I got a hot rod Ford and a $2 bill, and I know a spot right over the hill. There's soda pop and the dance is free. So if you wanna have fun, come along with me. Sing, hey, good looking. What you got cooking? How's about cooking something up with me?
Damn, Jim. Hey, good looking. What you got cooking? Got something cooking up for me, yeah. Woo! Well, that's just not supposed to be on my hand. Snot, not, get it? I hope just not supposed to be there. Break it. Break it. I'm going to go into the kitchen, prepare my water. I hope by the time I get back, this has broke it.
$30. You might actually lose money on that, but because you're collecting a credit on it. Now, the risk on this, right, if you collect a 40-cent credit, is that $2 wide short call vertical that you have minus the credit you collected. So $160 in risk. That's above $47. So while this looks and appears as a bearish trade, Kev, this is actually, it could be neutral. You know, you profit in 3 out of 4 scenarios. Goes a lot lower, stays where it is, goes higher, but remains below that break even.
The break even on the upside to new all-time high in the stock. Remember, 45.40 is where it has to get to, and the all-time high is 45.14.
Yep.
So there's what has to happen for you to lose money on this trade. Now, it's valued pretty high. It's already.
I feel like it's going to be one of them trades. I sell it now, and I really will be
if nothing
highly
happens,
mad.
you're profitable. But like I said, over 40.
Because the setup's rare to break out right now. Ascending triangle in the last 6 minutes. But there's one red candle on there that kind of lures me to say, Jim, just get out of it. You've done well enough in this already. But if it just breaks if it breaks this resistance, I mean, I'm talking about a lot bigger money than my average trade. Nancy, would you grab me a Valium and a shot of vodka? It just comes natural to me. Someone just bought 7,100 shares. Someone just bought 4,300 shares. I'm watching the tape. I'm a tape reader. So right now there's a little uncertainty going on. It's lunch. 3 minutes to noon here in Missouri. We got 23 minutes. It'll be 25, 20, 28, 27. 27 minutes till the fat cats make it back. I'll be right back. I'm going to grab a shot of coffee. When I get back, I expect this to break the 200 SMA. Does anybody have an issue with that, Randy? Come on, what's the deal with you? You know who I am? I'm a descendant of Elvis Presley. I'm his baby boy. Thank you very much. Washboardjim is going to leave the building here. Come on, you sucker. Okie dokie. Playing hardball today. Yo, cheap. Oh. Drop bean.
Still has yet to report and is on a pretty nice tear for the year, at least heading into this print. We'll also look at Super Microcomputer, which did suffer its worst week on record last week and now attempting to recover today. You'd hope, given the fact that we saw shares even slip below $30, which felt ridiculous. But we'll close things out with Norwegian Cruise Line, which is getting an upgrade out of Argus. So variety of sectors to get through today. There's definitely not a theme because I feel like we are just in a relatively overall volatile market here until we get more election news. So individual stories today is definitely our focus.
Yeah, and SMCI has earnings, and it's like, man, they're the company that wants their earnings to be overshadowed.
That was exactly what I thought.
I don't think that they're going to be able to hide, though, this time around. I think there's going to be still, maybe the eyes won't be directly on it, but they will absolutely be reading those headlines when they come out. And there's just a lot of pressure right now on that company. Stock price performance shows it. But still, so many billions in market cap. If there is something a little bit more dramatic going on under the surface, time will tell there as well. Let's get into upvote, downvote, though. Not endorsements, not recommendations. Some big names here, all of which are household names, particularly the ones on the bookends, Tesla and Apple. Let's start with Tesla. Again, not endorsements, not recommendations. Tesla has been quite volatile over the last few weeks. Huge performance to the upside around earnings after disappointment around the AI event. All in all, kind of fought to a draw, though.
So yes, and I will say that we saw that nice substantial move to the upside on the back of its earnings that were, I think, characterized as maybe better than feared. Although I kept saying it was a perfect report from Tesla. There was a lot to like as far as like the long-term narrative. If you're still a bull, I'm sure you're of the same thinking. But still, this name has then pulled back. We're down 6 straight sessions if we close lower today, which it's looking like, at least as of right now. But I will say that, again, not to speak back to the election, but there is a degree of, I think, downside or upside, I guess, potentially risk with this name because of now CEO Elon Musk's ties, obviously, to one potential candidate. So I think that now...
Oh, come on, girl.
Its own type of vol play because of the fact that Elon Musk is...
We will not date.
Believe it or not, I mean, he is linked to the election at this point. So we did also see they sold roughly 68,000 China-made EVs in the month of October. That was down 5.8%
She can't get over that.
a year ago. That's per the China Passenger Car Association. We did also see deliveries of their China-made Model 3 and Y vehicles fell almost 23% from the prior month, while Chinese rival BYD, with its various Ocean and Dynasty series of EVs, saw another monthly record with a 66%.
No, you annoy me.
100,000 units last month. So, I mean, I think that they're non-comparable at this point. You're talking 500,000 units last month, whereas Tesla sold roughly, 68,000? But that is not Tesla's bread and butter. Here in the U.S. is, whereas BYD operates obviously in China.
Yeah, no doubt. Pre the event that we got around AI, what was it? We Robot, the stock closed around 238. The low today was around 238 as well. It has since bounced off that level, trading around 245 as we speak. But that's what I mean when I say fought to a draw. Gap down around the maybe less than stellar AI announcements, or at least, maybe the stuff that was just expected for more. Left those longing for more. But then, as you said, using your words, a
more drama
report when it came to earnings changed that narrative. Saw the stock jump. It opened up right around here, around 240. And then, of course, it did peak out around 273.5. So that was actually a new high for the last 52 weeks. But I would say it's almost a level that we've been at 4 different times. So it seems to be there's a pretty significant resistance around that 270 mark, 260 mark to the upside.
It's a pretty good sell-off going on right now.
Its range, but kind of middle of the range for where it's been going back to the beginning of October. Staying within the automobile area, let's talk Ford. Now, this is a company that I would think potentially could have potential windfalls or not, depending on the outcomes of the election as well, given one candidate's preference for things being made in the U.S. and tariffs on goods elsewhere. Well, Ford, at least what I understand, makes a lot of stuff here.
And I will say also the fact that I feel like typically these manufacturing companies that do have a lot of union exposure, I do think there is definitely political, again, risk to whatever the election outcome is. But
this is my opinion.
At least per the...
I've been around a bunch of elections. I mean, just one minute you hear them, they say they don't put much into what they say because they're politicians, and then another minute you hear them believe in everything they say. Like they can't get over these tariff tariff deal. They just can't get over it. I'm going to be watching SPY in the SPX right here. I think they're putting too much emphasis on it.
This is our lone name that's continuing to gain on the session. We pulled back a little bit this week for Ford.
No doubt about it, and a stock that needed some optimism too. I'm looking at kind of the high close of the year, which was back on the 18th of July. The stock is down pretty substantially from that level, about almost.
I mean, I've never heard him talk. I've sat here, for, since we had Reagan. I wasn't really into stocks, but I did pay attention. And we had Bush. Carter, I was just freshly out of high school, or I'd get in there. And we had Junior. And then we had Clinton twice. No talk much about their policies and what the market will do. I mean, it was all talked about at the beginning of the year. I mean, this is like all of a sudden the election's tomorrow. It's such a big deal now. I don't know. I think they're just putting too much into it. I'd be more concerned about the geo stuff, but they're not. They don't have no concern about that.
On the way that they pay these various creators on their platform, but they don't actually have any like in-house. It's more like, which is interesting. I mean, I'm not well versed in the video game space, but their business models is one that's unique to me. Morgan Stanley did upgrade shares though to overweight from equal weight with a price target of 65. That's up from 38, so substantial upside there.
Deutsche Bank maintains a buy on Roblox, price target $60.
Can drive more accelerating share gains as they reach this larger and more diverse audience across more platforms. They also highlighted that their micro milestones leave them confident in the company's ability to execute from here as well as exceed expectations, highlighting that this scaling on the new platform and the reaching of the wider audience suggests that an opportunity for Roblox is only growing. So again, we got earnings last week. I read it as a pretty substantial miss, but somehow this name is still able to hang on to, I mean, this new level that we found here at $50 a share.
Yeah, to highlight the volatility, it's up about 45% over the last 12 months, but it's down
You'll
about
take the grade?
36% over the last 3 years. That's one of those.
Whoa, Yoko!
Really, saw benefit in that,
What'd you do?
2021 time frame. It actually hit a price over the last 4 years of $141 a share. And then, not to get into the details of it, but there is still that kind of overshadowing kind of Hindenburg research accusations that kind of linger in the backdrop. Pretty salacious stuff that they're being kind of accused of. So hopefully that stuff gets resolved as well in regards to some of those things that Hindenburg suggests may be happening. But nonetheless, stock is down about 2% today. I would call it,
How do I know?
For a name that trades with this high beta.
You mean on the
this one
tape?
Does, with the market down a little bit lower, particularly names in the NASDAQ. Not surprised to see a little bit of weakness. And
That's the ask. That's
Apple
the bid.
is the last one on our list here.
And then when it's white.
Apple did do what it typically does around earnings, which is not deliver volatility. I know it was lower.
They're buying at the ask.
You could say it was lower, so there was volatility. But what I
Maybe.
mean when I say volatility is just dramatic movement. Apple just doesn't really deliver drama all that often. Now, it did earlier this year around those huge buybacks and, of course, that AI event. But really since then, it's been pretty quiet. Just kind of doing what Apple does, methodically bouncing around, but kind of up and to the right.
And Apple's still a powerful name to pay attention to because whether it was volatile on earnings or not, which it wasn't to Alex's point, but this is still the second largest name in the entire world as far as market cap is concerned. And for that reason, I do think it's one always worth paying attention to, especially when you have the behemoth that is Berkshire Hathaway.
Go without saying, right? This is Apple.
It is Apple. And I think even why, I mean, to me, this...
Jenny.
million shares, but we knew Berkshire was offloading Apple shares, and it didn't seem to. I mean, I know we're down today, but this shouldn't have come as like a huge shock, at least as someone that followed the story pretty closely. But again, selling 100 million shares, reducing its stake by about 300 million shares. The 25% reduction in its stake, though, follows a near 50% cut back in the second quarter. Their overall Apple stake is now down by about 2/3 from around 905 million shares since the start of this year. So as we know, Apple has been...
I listened to you.
We've seen Berkshire benefit, given the fact that they paid an average price of around $35 a share. Purchases were largely between around 2016 to 2018. But CEO Warren Buffett has taken advantage of the recent rally and has pared back his stake, obviously. It's also, I think, worth noting that Berkshire right now is the most cash-rich it's ever been, with a balance sheet of over $300 billion, which is...
We budged a little above the 200 now, Yoko.
Cash last quarter, this quarter even topped that. So makes you wonder. I mean, I don't think it's necessarily a huge read on Apple as much as it's like, what is Warren Buffett waiting for to do with all that cash? That's what makes me curious.
Yeah, I think it's notable that he's reduced it by as much as he has, but you talk about the performance. I mean, this stock had been a huge winner. It had grown to greater than half of his portfolio. He had a lot of exposure, and Berkshire shareholders had a lot of exposure to Apple. It's still their biggest position, but it's now less than a quarter of the portfolio. And to your point, a huge, huge cash position, perhaps waiting for opportunities should those arise. And if they don't, parked them in potentially short-term bills, making some pretty nice, interest on that now compared to maybe what was available 10 years ago in terms of where interest rates were at that point. But notable, are you making a decision because of it? You don't know when this exactly happened, and of course you understand why. He just reduced exposure to one name. Kind of a prudent thing to do, all things considered, when you think about his exposure to just one name, given the fact that he's not operating a regular, mere used stock portfolio. This guy's operating like effectively the biggest hedge fund in the world, times like 50.
95 again.
Diversifying.
I bet you it breaks this time.
Volatility risk event. So I mean,
Jenny.
I think that he's reaping the benefits of.
I don't want to listen to you today, Jenny. You've upset me. I know you're not voting for Trump. I want to know, why is she talking politics on Schwab? Dow Jones getting better. Negative 191. Randy, I think I should probably go ahead and get back in these. Ladies and gentlemen, Power Hour will be coming down the tubes in about an hour and 45 minutes. Fed Cats will be back from lunch at 8. Break it. Just a little bit too far out of the money with these right here. I'd rather move them up.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. Nobody's better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Inverse head and shoulders on SPY?
Plus, get 24/7
How long ago was that?
and access support by phone, email, and
Yeah.
in-platform chat.
Boy, I did nail that, didn't I?
With Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network.
Oh,
is
there's two
available
up. Oh,
anytime,
hold on here.
Anywhere on any device for free.
What is this?
Schwab Network.
Oh, shit. Perfect inverse head and shoulders right there.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. So joining me, as always, is the Chart Master himself.
I didn't see that one.
To help us break down two of the charts and two of the largest names we cover really throughout the network. And we'll start off with Tesla because I have to say that this name was an earnings winner objectively.
I didn't see that one.
Season, but unfortunately now down 6 straight days. So walk us through this chart.
You know, they may have won the battle, but they didn't really win the war in some ways if you look at the chart, because you can see we have topped out once again near this red line, 265, made some, decent intraday highs beyond that point, as high as 273.54, but no lasting move above this crucial level that we have faltered at previously 3 separate times before this most recent one here. And really,
Was it that what I saw?
Chart, even without this repeated ceiling, this quadruple top, I guess you could call it here.
Man, hell, I can't remember. I thought I saw something down.
We had quite a serious low, 138, a big rally all the way to the upside.
Oh, yeah, okay, I got you.
Again, a severe drop to the downside once again, then another rally. So a lot of volatility in this name, to be sure. But more recently,
I know I called this one here.
There was a rather curious thing that happened, kind of this island reversal type pattern here, where you have a large gap down, sideways consolidation for a short time, and then
They can easily run up to 571.50.
Less common chart patterns you see in the wild here. But now
Another buck.
see that we are dropping off. We are holding on above our yellow 21-day EMA, but we still have this rather sharp downward sloping white trend line to contend.
We're coming over here and taking my TV time, man.
So volume at least 50% greater.
I mean, the chartist artists are going to get into it.
So some heavy conviction and some heavy, emphasis on this move here.
Yeah, and so now when we look at overall further, I mean, the momentum behind this trend here, and obviously seeing a substantial pullback, are we seeing momentum pick up, or are we seeing it start to wane?
Well, we did see a problem for the bulls with momentum during this last rally here, because you can see that we had bearish divergence here. Price made a new closing high. RSI actually trended downward. Notice as well that both times we did not make it into the overbought area, which is a bullish sign, a sign of strength there. So now we're getting pretty close to crossing below the 50 midline. Watch for that cross. That's another bearish signal here. But at the same time, we still have this kind of longer term, not the most consistent trend line here, but we are making a series of higher lows with our green trend line here. So I would be curious to see what happens if we start moving lower, especially beyond this green supportive line here, double bottom type pattern near 232. I would be curious if it would be breaking below our trend line or even breaking below the oversold area at that point if we were to move downward like that.
Okay, so now when we look at some key price levels, obviously we already had earnings, so we have that at least now baked in. I think, though, that it's important to note the obvious election concern here, given Musk's ties to one particular candidate. So for that reason, I mean, I think we're expecting some volatility in this name over the next week or so. So what are we watching as far as levels?
It's kind of an interesting situation he's put himself in here. And, without really commenting any further, that's just kind of strange, I guess. So now when we look here, we can see that
there's nothing strange about it.
Are struggling to hang on above this yellow 21-day EMA near about 242.64. So that's one point that we would need to watch heading into the close. And as I said, to this double bottom low near about 232, our green line. Beyond that, I mean, the next point to watch would maybe be the series of lows that we put in during our little island reversal, and our 252-day EMA here in purple matches up with a volume node. So around like 215, 216, that would be another potential area of support if we were to move to the upside. Well, once again, obviously 265, that's really the mark to beat, to kind of get into that upper level of price activity here, with the ultimate threshold being about 273.54. So we've got like a 8-point range or so, 8.5-point range or so to work with here before we could really get a compelling breakout. That's kind of a big resistance zone to keep an eye on.
Okay,
Yep.
yeah, and I will say there will be a lot of focus on this name over the next couple of days, I'm very sure, but appreciate it. So now when we look at trading this name, Alex, I mean, walk us through the way you think about trading Tesla. Obviously no earnings, but I mean, I think everything else happening this week is enough catalyst.
Yeah, I just looked at a neutral to bullish strategy. The stock's pulled back a little bit from its recent highs. Volatility swelling in the overall market as well as in Tesla. And so using a strategy that sells high implied volatility and sells a little bit of downside here in a risk-defined manner. It's a short put vertical going out to the end of the month, November 29th. The 225 rather put vertical for $1.50. That's 30 cents in credit for every $1 in risk or width of the spread. So it creates a situation here a little bit worse than 2-to-1 in terms of the risk. It's actually 7-to-3 if we're being exact. But you risk $150, or you risk $350 with a chance to make 150. 228.50 is the break even. Stay above 230. Keep the credit through expiration. Fall below 225. Limited to that max loss there on the screen, which is of course 350. Neutral to bullish though, Jenny. So if you don't like Tesla over the next month, probably. You don't look at a neutral to bullish strategy, but still, nonetheless, there's a little bit of a volatility component to this too, selling those options.
Yeah, especially, I mean, considering we're now down about 1.4% for the year, but still a name that's, I mean, pricing in markets, options markets implying already a market maker move, and $10, roughly $11 almost in either direction, just goes to show the added volatility of this week. So now to look at Apple here, which already had its earnings last week. Wouldn't call it a winner, wouldn't call it a loser either though, because to me it was relatively muted, moved to the downside. I know we've pulled back pretty substantially from highs here, 6.3%, so not a huge retracement, but walk us through some levels you're keeping on your radar here, Rick.
Well, another chart with a really notable ceiling that we can see here. So in this case, you could say that the kind of the absolute, 52-week high right around here, we topped out in the same area.
57.15 made it back to 115.
Just squeaked out some intraday highs beyond that point.
I didn't see it. It might have got higher than that.
This whole zone right here between our red line and our pink line, between 231 and 237 roughly here, because price hasn't really spent a lot of time in this area here. You can also see our red line has been a frequent resisting point itself too. So kind of two notable boundaries to the upside, but really starting to wane in recent days here. We have crossed below our longer term blue trend line there that started all the way back here with our 52-week lows near 164. We broke through our yellow 21-day EMA, we broke through our orange 63-day EMA, and we have filled this gap. Actually, we filled it right here, but we once again crossed below that gap area, kind of that area where the gap began, the high point before we had the gap up, 222.71. We have not been able to make our way back above that point here. So really some signs of noteworthy technical degradation here in the past, couple
Man, you're
weeks
using
of
big
trading.
words.
Yeah, and especially
Degradation.
considering we pulled back obviously last week, but I would say the earnings weren't exactly anything to head for the hills about. I mean, from a fundamental standpoint, I think we get a lot more clarity on what matters. That's the iPhone 16 next earnings period. But now as far as momentum, I mean, obviously, I'm sure momentum started to pick up into earnings, but now where are we watching RSI?
Yeah, so RSI we can see here, and kind of unfortunate with what you're saying. It's almost like we already had such strong gains, so it's like if you're not winning, it's like you're losing. You know what I mean? So we weren't able to really get that other boost to the upside that we needed here. And we did break down a little bit according to the RSI as well, below the 50 midline, below our longer term green trend line.
20-day double bottom, brother.
Actually, you could probably even draw a sharper trend line going downward here across our recent peaks, so perhaps accelerating to the downside here, and a notable breakdown.
Fat cats are back.
Our trend line is important because
90 cents on the SPY.
Break below a supportive area. Our green
I mean
line
SPX.
before near 222 to 223 around that point. So for sure, momentum reflecting some of this weakness here that we've seen in price.
Yeah, and I could imagine that we're starting to see even more of that sort of fade as we go into, again, a week that is not very focused on Apple. As last week, I do think this was one of the most important names to watch. But now here, assessing these various price levels, we're still up 15% on the year, but obviously well off highs of $2.37 roughly a share. So what are you thinking now as far as some key support and resistance to watch?
Sure. So horizontal levels are important on this chart here.
Yes, they are.
Starting with our green line here, this
very
kind
important
of point that I've mentioned a couple times, 223, 222.
I'll be right back.
That area. That's the point that we would want to overcome heading into the close. From there, orange 63-day EMA comes in around 225. That would also invalidate this steep downward sloping trend line here in white. That's also where volume starts kind of peaking out. You're around 226, 227 in that area here. But ultimately, like I said before, it's this resistance zone between like 231 to 237. We're kind of stuck until we break out there, kind of like our last chart. To the downside though, we've got this point and this point here, our light green line, right around 216, 215, that area. And then once we start getting below that, we've got a serious lack of volume according to our volume node study. So beware of fast moving prices if we start to break below that point. Ultimately as well, look for this purple trend line to hold, connecting those severe intraday lows we saw there. So that would be maybe around 214 or so as a kind of a final line in the sand to the downside.
Yeah, and so we'll have this one, I'm sure, on our radar. Of course, one of the most important names in the market, but appreciate it, as always, Rick Ducat, our chart master. And so now we trade this name. And again, we have earnings. They weren't terrible. I'm sure we'll get more of these analyst forecasts, like about the iPhone 16. But options market is implying a $4 market maker move right now. And I think that just the added volume, added volatility is why we're seeing maybe that sort of right now picking up, and of course into tomorrow and the next day.
Yeah, just buybacks alone, I saw this over the weekend. Apple's buybacks, which are greater than $100 billion this year, are basically Intel in terms of market cap, but also just the buybacks would be the 93rd largest company in the U.S. So a little bit of upward pressure, let's say, on this stock generally from all the stock that's being bought by the company itself. Deja vu, though, looking at the exact same style strategies we did in Tesla, and also the same expiration, selling a put vertical below the market. This is, leaning into the weakness, leaning into the increased volatility with the weakness that we see in Apple and the overall market. 215, 210 highlights that level around 214 that Rick pointed out on the chart. $1.25 credit is a quarter the width of the strike, so it creates a 3-to-1 risk reward. Risking 375 with a chance to make 125. Break even at 213.75 is below that support level that Rick talked about. And so again, if you don't see Apple as a name that at least could stabilize, you probably wouldn't look at this style strategy, but you do have a little bit of cushion, about $7 going out to the end of the month, collecting a credit, stay above 215. That's how this one profits.
Yeah, and so we'll have to stay above 215 would be, I think, a good call, especially considering we're at 222 right now. And so I think hoping to stay out, we're well off yearly lows are 164. So this name is at least still, relatively speaking, at its peaks for the year. But we'll leave it there for our Apple conversation. Now coming up next, time to talk all things Palantir, which does have earnings due out today after the closing bell. We'll dive into its recent price activity, what the street is expecting, coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360. Only on Schwab Network.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on
I missed it.
weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Missed it. It hit to 63.
Welcome back to Next Gen Investing. It's now time for FOMO, and today we are looking at Palantir. So joining us now to discuss more is Caroline Wood, Senior Markets Correspondent for the network. So Caroline, earnings are out after the close. This name is volatile. I will say what I've always liked about Palantir is some of its more stable government contracts, but it's also expected to be profitable, which is huge because it took us a long time to see consistent profitability.
Hey there, Jenny. Yes, this is an AI high flyer. Shares are up about 143% year to date, and it's going to have to impress Wall Street because the bar is certainly high, and I think the big question is, can this momentum continue for Palantir? It's really been in a move higher. You can see on the chart here since the summer, but got a huge pop in September when it was added to the S&P 500. It's trading below $30 a share.
Palantir.
It's trading above $41 a share right now. It's the third best performer in the S&P 500 this year, behind Vistra and Nvidia, both AI plays.
It's had a very good year.
In terms of what Wall Street is looking for, yes, a profit, adjusted EPS of 9 cents per share, revenue of $705.1 million. Palantir guided for revenue between 697 and 701 million when it last reported. You mentioned the government clients. Revenue from government clients is expected to grow more than 20%. While commercial sales are expected to increase by more than 30%. We know that Palantir has won several new corporate clients this year, so customer additions is going to be a key metric that analysts and investors focus in on. Now, in terms of guidance, when Palantir last reported, they actually raised their guidance due to strong AI demand, saying that they expect between $2.74 and $2.75 billion in revenue. They also raised their U.S. commercial guidance revenue to $272 million, which would represent growth of 47% year over year. That's for the full year. So we'll see if they are able to raise guidance once again. It's, when a stock has seen this impressive of a run, I think that the goal is a beat and raise. And of course, I'll be looking for colorful commentary from Alex Karp because we can always count on him to offer it. When he last wrote his letter to shareholders back in August, he had talked about growth across commercial and government markets had been driven by an unrelenting wave of demand from customers for AI, and called large language models wild animals whose power and capabilities must be tamed and harnessed. So we'll see what he has to say when they report later today. Shares are down a little bit today, down about 0.4%, about 7.5% away from the highs. But yeah, it's had a very impressive run. And you talked about this one being volatile. I was chatting with Jay Woods earlier this morning from Freedom Capital Market, and he said if there's one thing we can count on from Palantir, it's volatility around earnings, saying the average move after earnings has been plus or minus 15%. And history seems like it could be on Palantir's side because he pointed out that they have traded higher after 5 of the last 7 releases for an average gain of just over 20%. And then when they were lower, those 2 times, that was for an average loss of 10%. So buckle up, it could be a wild ride. Shares pretty muted today ahead of it.
No doubt. And analysts have not completely bought in yet. It might just take one more of these 10-15% rallies and some positive commentary from Dr. Karp, I believe, is the leader that you reference. Although great first name in Alex, I must say. What do the analysts have to say, at least right now? It doesn't seem like they're all bought in yet.
On the SPX?
In fact, only 20% of analysts on Wall Street have a buy rating. 50% remain on the sidelines despite this hugely impressive gain. And then, of course, the other 30% are in the sell camp. The median price target heading into earnings, $29.51, according to LSEG. So if you take a look, it's currently trading at $41.72 right now. So that implies a whole bunch of downside from current levels. The low price target on the street is actually $9 a share. That comes from RBC. And the analyst there was out with a note recently saying, we cannot rationalize why Palantir is the most expensive name in software. Absent a substantial beat and raise quarter, elevating the near-term growth trajectory, valuation seems unsustainable. So maintaining that underperform rating and $9 price target. Obviously, others on the street are a bit more optimistic, although the street high,
the symmetrical flag
is actually
Livid Goose, we got a symmetrical flag on the 1 hour. Kind of a little more bearish than bullish on the 1 hour. And on the 15-minute, we got a descending flag on the 15-minute. Minute, we got a bull flag. The bull flag on the 10-minute. Five-minute bull flag. It's kind of a strange little pattern. Nice. We got like a 1, 2, 3. We got the shoulder line. Let me see here something. Yeah. So you got an inverse head and shoulders. Could be a rising wedge. Yep. With a 1, 2, 3. Or it could be a head and shoulders, which is a couple of different spots. One right there, and then the other one right there. As long as we hold the 63, or we hold that shoulder line of this here head and shoulders. So it comes up for the third time and breaks. If it even creeps up here, I bet you it breaks. So 3 scenarios, or at least we know we'll have a new president soon. Another scenario is it's going to be ignorant and protest and because somebody didn't get their way, or I like the scenario of not being totally controlled by one party. For the market to stay bullish. This is the first election where I've really kind of, I don't know. You got to get out and vote. Well, they got a new. Oh, that's a little different.
Just simply, someone trying to profit on a downwards move in the stock. So Ernst & Young out with SMCI does not, calm the situation down when it comes to volatility. Jenny, 173% implied volatility in this stock. It can only go down 100%. So it's got now, potentially positive pot odds, but whenever the market's doing that, it's telling you there's real risk here, and that risk is, potentially, I'm not saying it's going to happen, but it's not a 0% likelihood that this stock is, a bankrupt type situation.
Correct, and I will say that this is, I do think, unfortunately, for Supermicro, the pain is the constant pain. I've seen a lot of speculation that this could benefit names like HPE, Dell as well.
Mhm.
So I do think that there's still a market for their wafer cooling technology, but yeah, we'll get more clarity when we get their earnings due out, of course, just now over the next 24 hours or so, I believe tomorrow after the closing bell. But also to note, Hindenburg was the first firm that did flag really a lot of the accounting issues and malpractice that they had been accused of. But also, recent report we got was that Pax Group is another that's being accused now of basically utilizing taxpayer-funded healthcare programs and scamming a lot of the system to then basically, to continue to facilitate, as it's been the best performing IPO of this year, prior, of course, to today.
Yeah, the TLDR, another Hindenburg Research short report was issued about, let's call it 50 minutes ago, just before we came on air on Pax Group. The stock is now down almost 40%. And it's halted in real time. So you're not going to see it ticking around at the moment. It's halted for volatility.
What?
But if you were to look at that chart, you're essentially getting the entire history of this stock's trading range in one single trading session. It is absolutely incredible volatility. And we're not talking about a micro cap stock, Jenny. We're talking about a company that came into the day, almost $10 billion in market cap, now sub $5 billion. So huge.
Well, it's moving now, buddy.
The nursing home operating, Pax Group. So something to monitor for the day. Just wanted to make sure we, highlighted that as well, as it's relatively breaking in the last hour.
Yeah, and I think just to show the damage
ACS.
first of all, being basically, I'd say, probed for a lot of these short reports, but also the damage that a lot of these short reports can do in just one single session. And this is even a matter of just an hour or so, which is ridiculous. But we'll leave it there for now, Supermicro and all the various short report conversations. But coming up next, we'll be focused on the Norwegian Cruise Line, which is seeing an Argus analyst upgrading shares to buy with a $30 price target. We'll dive more into that story with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Coin new highs. I was watching that this morning.
Welcome back to Next Gen Investing. It's time for Under 30, and today we discuss Norwegian cruise liners. That, of course, is NCLH. And joining us now is George Tillis, Senior Markets Correspondent for the Schwab Network. George, I think one of the brightest spots, maybe it's not so much the best kept secret anymore, has been the cruise liners broadly over the last few years. The comeback has been more than impressive. Varying performance depending on the one you're looking at, but NCLH, sort of mid-range, I would say, of the group, but it's on the higher end in terms of, I guess, price points. This is more the luxury cruise.
Yeah, it is. And I was actually just looking at a 5-year chart. It's starting to look quite constructive. It's still got a long ways to go if you actually compare it to the 2019 pre-pandemic levels. But nonetheless, there is a lot of recovery happening here in the cruise line space. Royal Caribbean actually is best performer out of the larger three, including, of course, Carnival and NCLH. But overall, if you look at their gross bookings rates and occupancy rates, they're getting close to being completely full, as well as the fact, and this is what Argus's claim is when they actually increase their price target to $30 per share, but also increase their rating to a buy from hold. They also see higher ticket prices even going forward. So, gross bookings into 2025 seem to be very high. Current bookings for this year seem to be also quite high. But at the same time, as ticket prices are rising, there's capacity being allocated for Norwegian. They actually expect in the next few years an additional 30%. So the company's growing its revenue base, it's growing its pricing power. It's growing its margins too, because if you look at the consensus estimates for this year, it's $1.67 in earnings. Now Argus actually has one of the high on the street at $1.70 for this year. But even next year, they're continuing to expect to grow their earnings per share to $2.03. And overall, it's still trading at a discount around 12 times forward earnings for next year. So there may be an element of growth and value here for Norwegian, considering this is the time that a lot of folks travel and book deals for cruises around Thanksgiving and around, of course, the Christmas holidays.
Yeah, and so George, I do think that some of the underperformance of this name is interesting. I mean, is it just the price points where they operate, or why right now is it so accretive to be involved in Royal Caribbean, which I believe is, the best performing of the group by a lot. I mean, where are we seeing that divergence then with, not to speak to Norwegian still having a really nice year, just not the same extent that Royal Caribbean has?
Correct. And the answer is margins. I think that's an important factor between the disparity between the two. Actually, the three. Carnival also is not performing equivalently to Royal Caribbean. The reason being is margins, which are impacted by balance sheets. And so If you look at the debt condition of Carnival, it's quite large. Norwegian also, relatively speaking, not as bad as a percentage of total capital or equity capital, but they have about 14 billion in debt on 11 billion in market capitalization. So it has been a problem for them in the past, but as they continue to grow their revenues and earnings, that's going to help pacify the pressure that the debt is putting on the underlying shares. So I've seen quite a bit worse. Anytime you see 1.5 to 2 times debt to equity, it starts to create some concerns. But if they do have pricing power and they do increase their total sales going forward, this company perhaps could assume that debt and start paying down that debt, have some residual cash to potentially pay dividends or even buy back shares.
Are they in a position, George, especially if we are in a situation where interest rates are going to come down modestly, when they do have to roll over some of this debt, assuming that has to happen at some point, that they're going to get more favorable terms perhaps in the future? The company may be in a slightly stronger position than it was a few years ago?
Yeah, I think so. I think, for companies which are looking to roll over debt in the next few years, they're probably going to get a better deal, especially if they've actually taken on additional debt or, in fact, maybe have issued equity in the last couple of years with rates higher. You have to consider that debt-laden companies have actually issued quite a bit of shares, where other, cash-rich companies have been buying back shares. So the pressure of issuing shares becomes less, and of course the amount of cash available to the company as free cash flow improvements start to manifest into better flexibility from a financial standpoint. They can certainly pay down debt or essentially do things like buy back equity, and of course with lower interest rates expected, roll over that debt at more favorable terms. So as the financials and the top line improve on the business, that's what's so important here about any business, is the top line performance must be improving bottom line performance, then you get more financial flexibility, better lending terms or borrowing terms, and everything starts to work out for you better. So if you look at the chart, it's looking quite constructive. In the last year, it's up significantly. It's broken above its 200-week moving average, and the trend seems to be very positive for this company. The last thing I'll say this, you got to keep in mind that fuel, diesel fuel, which again is a function of distillate or heating oil futures. Those futures have been down, and so refiners have been down. And in fact, if you look at cruise liners, hotels, and airliners, they've actually done very well.
Yeah, and I will say that outside of, unfortunately, today, where I know Marriott gave some more disappointing guide, it's been a space that's continued to astound me as far as its resiliency, and the consumer, I think, continues to show that if they prefer to travel on cruises or on airplanes, they're going to still do so. But we'll leave it there. Great breakdown, George Tillis, as always, senior markets correspondent. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Stock exchange, we have the election, we have the Fed, we have lots of earnings and plenty to speak about throughout this hour. Today's show, the CEO and co-founder of Remitly joins us to talk about the company's third quarter earnings. Saw the stock surge last week. We'll get into that. Joe Mazzola standing by from Charles Schwab, taking us through the October stocks report to gauge how traders are feeling about the market, what they were getting into, what they were buying, and what they were selling. Our panel will be looking with Chevron and Exxon, the earnings and the state of the energy sector. And we'll take a look at oil as well. In the meantime, Tower, 2 hours left in the trading day. Markets have been under some pressure now. Started off still somewhat mixed, but the S&P and Nasdaq have both turned into the red slightly after having been in the green. The Dow down 225 points. We'll have some changes in the Dow later in the week. That's worth speaking about. You have Sherwin-Williams and NVIDIA going into the Dow Jones Industrial Average. Nasdaq's flat, S&P is down 4, and there's the Russell. Watch the Russell, it's up 0.75%. Oil, 71.55 the barrel. Gold, 27.47 the troy ounce, down above 50. And the VIX, 22.16. What happens overnight with the elections this week? The next 48 hours, a lot to talk about. Kevin Hicks is with us, host of Fast Market here on Schwab Network, and watching these markets that have been showing some weakness going into the closing bell and then the elections. Obviously, some weight on the Dow with the selling of those changes that are due at the end of the week. But what do you think is happening here?
Hey, Nicole. Well, it's uncertainty, and markets don't really like uncertainty. And if you trade these markets for many years, you'll find out that stocks go down in uncertainty and commodities go up in uncertainty. So we're waiting for the markets or the overall political situation to get less uncertain, Nicole. And that's why you see VIX up, some risk-off assets higher, commodities higher, and overall stocks are a little jittery going into tomorrow. Why? Because they don't know what they like when things are defined and certain, and this is certainly not that, Nicole. So, yeah, I think the market is not moving largely in either direction, just a little shaky here.
Yeah, understood. And look, you're a trader, you're fully immersed, you're watching all the same things here, getting ready for some volatility and the uncertainty that brings this sort of, no clear direction. You can see the S&P and Dow and Nasdaq are not change line. How about we talk about Berkshire Hathaway?
Sure.
Some big news over the weekend into Monday.
We're retesting the SPX for the second time at the 63. Well, there's a bunch of long wicks on the candlestick. You It's touching my moving average. It's the 63, what do you think? Break the fine and cross that line. $57, $23, $42. That's a 63 EMA. Okay, we're getting ready to retest it. And we got the 200 below it. Well, son, if you ever get lost, just remember that 200 SMA on the 1 minute. Well, it's an inverse head and shoulders, bouncing off the 200 SMA. SMA. Woo! You weren't supposed to do that. You're supposed to go down first. I wanted. Oh, we touched the second time, so it's like a formation of a cup and handle in a way. All right, damn it. I screwed that one up. Could have been at least 30-40 cents on that bottom. 57.40s. When you're in doubt, move that chart on out. Because you might get a bigger picture. If I'd done that, I think I would have took that trade. And that's the full picture right there. See, that's pretty. You had the left shoulder, right shoulder, high or low, came back. Then you're leading out with 3 white soldiers. Okay. It'll take me forever to find that. There it is. Okay, I've had enough of that, I guess. I wanted to see if this wants to break out or come back, and right, if we come back and touch it one more time, we'll hit the 200 and bounce off the 200. And that's what I'm really wanting to see. 57, 20, 63. I'd almost get a put here, but I can't. Not on a 1, 2, 3. You see the 1, 2, 3? 1, 2 bits, 3B right there. One bits, 2 bits, and a freebie, and it comes on up, breaks out, and hits the double top. This here's your shoulder line. So that should be your resistance right there, 5727.03. Just lay your candle on my shoulder one more time. I've been waiting here for a long, long time. You'll see an inverted hammer. If you can count to 3, you can trade with me. Okay. And then my water.
Well, the stock's up, 57% so far this year. It seems like they're inflation-proof, they're recession-proof, maybe they're election-proof at this point. You take a look at, the way that they kind of set up where even if the lower income consumer's not doing well, the higher-end consumer's probably trading down, right? Will the election affect this stock? Probably not. 90% of the population lives within 10 miles of a Walmart. So they've done really well. They pivoted more to the grocery side of the business.
Oh, yeah?
So their margins have stayed firm. Technology's become a big aspect of their business. Also Walmart Plus members, and then throw on top of that advertising. So yeah, the world's biggest retailer, big revenue generator. They've done well. Now, if you look at expectations for holiday shopping, they're expected to be better, right? Adobe came out 8.4% increase in e-commerce sales expected for the holidays. That's November 1st through Christmas. And then also the NRF, National Retail Federation, said that they expect sales overall for retailers to be up anywhere from 2 to 3.5% in 2024. So everything's going right for Walmart going into the holiday shopping season, but they report earnings on the 19th of November. So that's
19th.
A catalyst with the stock up
2 weeks.
so far, so fast over the past 12 to 18 months. Maybe it's getting a little bit over its skis. Valuations at the higher end of historical norms for this company. So they better hit on every metric.
They better.
That's what this trader's setting up for as far as unusual option activity. Because saw a put buyer out in the November 22nd weekly cycle. So you're going to capture that earnings event
It's not a bad
earlier
idea.
in the week during that expiry cycle for Walmart. Trader bought 5,000 of the 82 strike puts, basically at the money. Paid an average debit of $2.15 for 5,000 of these puts.
Which ones?
That takes your break even just below $80 a share over the next 18 days. That's about
November
3.5%
22nd?
below the current share price in there. Well within what the option market's pricing in as far as a move in the shares.
$82?
Put volume is about double normal daily average volume that we're seeing over the last week of trading. So I'm not sure if this is somebody that's just going out there speculating that the stock's going to fall post earnings, or it's maybe a big shareholder that's offsetting some of their long stock position that's done really well by hedging their position. Definitely some downside sentiment here in Walmart ahead of earnings.
Look, and that's the whole thing. Sometimes the earnings can really bring big swings one way or the other.
Yeah.
And they're betting on that, right? And we've seen that. Sometimes even you'll have a double beat and raise guidance and still sell off.
Yeah.
So, because it just wasn't even good enough, So certainly one to watch, and thanks for giving us the date, November 19th of the earnings. That's one to watch for sure.
Good job, cutie.
Snap. I mean, that was one of the names in the social media realm that did well on the quarterly numbers and the ads and things. If I recall, had some nice volume, had a pop up. Yeah. So some thoughts. You found a bullish trade there.
Yeah, last week during earnings, the stock popped 15% the day after they reported after the close. EPS came in slightly better, 8 cents versus 5 cents expected. Q3 revenue came in fractionally higher, but Q4 revenue estimates came in at the low end of prior guidance. But the stock still did pop because it's been weak, off 28% so far this year, down another 3% today. So seeing some weakness after that earnings report. They came out with some, different things, simple Snapchat, sponsored snaps, promoted places. You got to remember, they've got 451 million users on Snapchat. Nicole, the problem has always been with this social media platform is they can't monetize it well enough. So they're trying to make some inroads with AI, trying to make it simpler for the users on a daily basis, but I don't know if that equates to more users on their platform or actually engagement where they can monetize some of the advertising that they have, because they definitely have enough subscribers maybe to grow in the near term. But with the pullback here today, I think we're seeing some people setting up for some upside here in the near term. One trade that stuck out to me was out in the November 15th monthly cycle, so 11 days to expiration. Traders bought over 20,000 of the 13 strike calls. Paid an average debit of only about 35 cents. These aren't high-priced options, so that break even at $13.35 over the next week and a half. That's about 10% above the current share price in there. Now, remember, just about a month and a half ago, Snapchat was about 16 bucks a share. So it definitely has that ability, but this is really short-term positioning by options trader, expecting that, hey, by the end of next Friday, a week from Friday,
No, hey,
we're gonna
me.
see prices higher here in Snapchat.
All right. And last but not least, Viking Therapeutics. We had on the gentleman who runs the Heart ETF, and we think about all that's been going on in the pharma world. And he had mentioned this name some long time ago. And when I take a look here, I mean, you see that it's been 1 year up almost 600%. I really, and I knew it, right? I heard it. And of course, you know, I think everybody else heard it too. A great performance. So what are your thoughts on the bullish trade here?
Yeah, this has been, you know, kind of have and have-nots here today during the session because pre-market, the stock was up over 20%, and then on the open, it was up about 8%. Now it's now fallen about 8% during the session, so it's been a roller coaster. Stock is still up about 260% so far this year, so outperforming names like NVIDIA and others. And this is all based on the reports from their phase 2 trial on their obesity drug that came out on Sunday.
Be right back.
The rivaling, you know what they're developing at Eli Lilly, rivaling what Novo Nordisk is coming out with. If you look at the injectables are led by Novo and Eli Lilly, right?
Yep.
But the pill for weight loss is kind of still wide open at this point. Pretty good results from this recent study. 100 milligrams, patients lost 8.2% of their body weight compared to 1.4 loss for patients on the placebo. Expectations were for only 5 to 6%. So they beat expectations there, but now they've got to take it to the FDA to get approved. So maybe that's why we're seeing a little bit of a pullback, maybe sell the news type of event here in this, but it's been a really choppy trade today. Option volumes on both sides, calls and puts, pretty elevated at this point on the news. But the one that stuck out to me was on the November 15th monthly cycle, so 11 days to expiration. Traders were buying over 4,000 of those 70 strike calls just out of the money to the upside. Paid an average debit of about $6 for those, so that break even of $76 over the next week and a half. That's about 13% above the current share price. Now, in the pre-market, the stock was trading above 80. It opened at about $79, so we've already been above this level for the break even that these traders are piling into on this 70 strike call. Call volume about 5 times normal daily average volume, but even on the slip, we're seeing put volume about 8 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, people are taking bearish and bullish sentiments, but the one that stuck out to me was a little bit on the call side, with expectations that over the next week and a half we're going to see more gains for Viking Therapeutics. JP Morgan, H.C. Wainwright, they came out with some positive notes on the stock after their phase 2 results.
All right, thank you for all of that, Tom White. Great to see you. Options Corner every day with Tom White here on the watch list. We looked at Walmart, Snap, and Viking Therapeutics. Thank you. Looking at options is real trades that he's taking a look at. In the meantime, coming up, I'm joined by the CEO and co-founder of Remitly, discussing the company's third quarter earnings. Saw a pop, saw the company raise guidance. In fact, that stock jumped over 20% and has been a winner of late. In 1 month now, up 40%. So let's find out more. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging. Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with...
Come on, 200.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
We could easily see it.
Stay ahead. Tune in to our election coverage.
Look at
on
the
Schwab
puts.
Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
5720.
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah.
Choices.
I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for our CEO Spotlight, and I'd like to welcome back to the show Matt Oppenheimer, co-founder and CEO of Remitly, ticker symbol RELY. A great quarter where you beat the street, you raised the guidance. We'd love to hear a little more about the company. I know you serve more than 7 million active customers around the globe with digital financial
5720
services. I'd like to hear
put
what those services are, because they keep
$2.90 and $3.
knocking it out of the park here.
Thanks, Nicole. Yeah, it's great to see you again. Our vision is very much to really transform and improve the lives by offering trusted financial services that transcend borders. And the primary service that we offer is international P2P payments, remittances. So think of like a mobile phone and app alternative to a physical cash remittance location. We do that a lot easier, a lot more affordably. And as you said, for 7.3 million quarterly active users in Q3, which was up 35% year over year.
Yeah, that's pretty impressive. 35% gains and volume of 42%. So tell me a little bit about what drives that volume.
Yeah, so 14.5 billion that we sent last quarter. That was up 42% year over year, as you mentioned. And what drives it is the service that we offer. Customers come back again and again.
Okay. The 5720 put PUTS 5720s Lotto $2.90 and $3 are now at $3.80, $3.90, $4. We could go all the way to the 200 SMA. This is the 200 right down here. You didn't tell me that, Jim. Oh, yes, I did. I was in there with Lorraine. Take a little off the table here or sell them. I think we're going to go down here. These might get to $4 or $5. They're at 4 right now. Woo! Up, down, turn. Uh-oh! 490. Now, when you get a big candle like that, what do you do? Now, that deserves a great A+. I'm out of this, suckers. I can't argue with that. I wish every trade was like that. Woo! $6, man. Go ahead, Magnificent. With dignity. With dignity. Don't hesitate. You know what I'm talking about? It's one of them days where you just got to sit back and make a lot of money on scalping this week. Oh, that was beautiful. I don't know if that was luck or what. What do you think about that, Bob? Randy? A+. Whoa. Ricky even liked it. I don't mess around, Ricky. Jimmy said we'd hit the 200, didn't I? Way up here. There it is. The crowd is shocked. Hard to believe. What is that over there? Say what? Oh, thank you. Thank you very much. Thank you. Thank you. Thank you. Thank you. Oh, come on, calm down. Shh. It's all right. It's all right. Just there you go. Thank you very much. Oh, that was pretty. You only have 2 calls. 5. Oh my God. Five would have really done it. If I could sit there and do that all day long, go play a tune, drink a cup of coffee, and then come back and make a fast trade like that.
There's some businesses that have kind of questions of, hey, where are there growth opportunities? For us, there are a lot of growth opportunities in markets we've been in for 10 years, newly launched markets, markets we're in the process of launching, and then adding other what we call complementary services to the customer relationship. And so for us, as we go into 25 and beyond, it's really about focusing where we invest, where the highest return is, and I'm feeling really good about the opportunity.
Yeah, it's great to speak with you. Matt Oppenheimer, co-founder, CEO of Remitly. Thanks for being back on the show with us. We appreciate it, and congratulations to you and your team on a winning quarter. Thank you. Still ahead, Joe Mazzola is standing by from Charles Schwab, and he's here to discuss the October stocks report. So last month, and what did we see? In fact, we saw the biggest divergence from the S&P 500 in the stocks history. What did investors buy? What did they sell? Let's see what the psyche might tell us, the sentiment.
So remember, I used a lot of my willpower on the moving averages. You know, let them tell me a little bit of the story. To gain respect, once we hit the 3 white soldiers, we always, not always, but in most cases, 90% plus more to consolidate, and it did for 2 minutes, and then look what you got. Oh my. It's in 57.35s went up pretty nice right there. Those SPXs. it dropped just like that too. Root. Mr. Pow Pow.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Oliver, don't leave.
Are there any bats? No. Are there any snakes? No. You sure?
Who could this be? Hello, this is Washboardjim, Retail Traders. May I help you? Yeah, Jim. Man, I checked it out here. I was on YouTube, and something you pointed out on that last trade, but you didn't point it out. So I'm going to point it out to you. Well, what do you mean? I said we were going to pull back to the 200 SMA. I said, yeah, you did. You did say that, but you didn't mention one of your favorite chart patterns, Washboardjim. I said, what do you mean? I said, well, me and old Charles, Manson, used to hang down there by the fire, and we used to look at the crows. We got 3 black crows sitting right here that you just didn't pay no attention to. And then it comes out with a big old hammer. Big long leg hammer. We got the 3 black crows and then 3 white soldiers right after that long legged hammer. Big long leg hammer. I don't see it, Jim. You got that other box in the way. Would you clear that, please? You see it now? And then when it touched the 200, that was a trigger to buy that sucker, run it back up to the upside. Jim, could you show us where the neckline is on that? We know where the shoulder line is. Can you point out the neck? Yeah, I did. You're taking this tool right here and run that like that, and that's your neck. Yeah, I wish I was still in this. I wish I'd have took that trade. That's big money right there. Jim, did you get complacent, decide not to take that call after you took that put? Yeah, I did.
The AI, they're still popular with clients.
You're way too loud.
Yeah, you talk about the hyperscalers and the AI trade, which seems to still be alive. I mean, I think people may expect some slower growth sometimes, but
golly, there's $2 right there, 2 something.
We saw the massive spending that is now setting up for AI going forward. You made the point recently when we were together about monetization of AI, and we do see that people bought into Palantir, Amazon, Microsoft, Advanced Micro, Meta. You named some of these already, but what's the theme there, right?
Yeah, so interestingly enough, the data ran through the week prior to the earnings for 5 of the 7, Mag 7. So we didn't get the Amazon, the Apple, the
1, 2, 3
earnings, or the Meta.
Oh, 1, 2, 3.
That time period, or Alphabet as well too. But what it did show.
But how dare you say that in front of a lady? For that, you'll be blocked for 3 minutes. Three more white soldiers, Randy. Plus a 1, 2, 3 bits. Okay. Now, appreciate it if you wouldn't use that word, but again.
We're still looking at 30% year-over-year growth this past quarter for the Mag 7, so pretty good. I think it's just going forward. I think that may be where some of the investor trepidation lies.
Yeah, understood. Also, when I noticed Alibaba was on the for sale side here, I thought about the stimulus that we saw from China. We saw those names get propelled higher. And then there was more stimulus. So you said that they were selling into some strength, right?
Right. Yeah, so they were, we saw a couple opportunities where they were kind of moonshots up, but then, kind of pulling back and drifting back on the way down when you didn't get the additional stimulus package that I think a lot of investors were hoping for. And I think that was the case with Baba. And as I said, with 2 of the other discretionary names, think about what the Disney news was during that period. You saw a new chairman of the board, and then Carnival Cruise Lines. They're reporting good summer numbers, but when stocks get extended like this, to a certain extent, what we see with some of our trader clients is that they like to trim. They like to trim into those moves. Now, interestingly enough, Nicole, when we run our stacks report, and as you mentioned, that's kind of the behavioral version of it. We also,
I don't know if this will help anybody, but someone asked me earlier about rising wedge. Someone explain something here. I don't know if it will make any sense or not. So you want to draw your rising wedge in. Yeah, kind of a rising wedge right there. I'm going to draw another trend line from that one to that one to that one right there. That's a double confirmation, triple confirmation. That could be a solid support. It's either going to bounce now, it has to bounce now, or it fails. Why? Because it's done nothing but show bearishness all the way down here, lower lows. And she's kind of got higher high, 3 higher highs in a way. So you got a head and shoulders right here. It's another confirmation. So you got these, you got 1, 2, 3, 4 different reasons that you could hold this support. And you got number 5 right here. 3 black crows. Where are we here? SPX 5730s. I don't know if I should rush myself into this trade or not, but the setup's there. It's just now we're getting late into close. If I get 205, there's 210, there's 205. There's $2. It's right around in here. Or we're going to have a weekday. We got tomorrow's the big day. I think we wait. I'd almost want to take this trade. I really would. Right now. I could buy one contract, but I don't think it's going to hold. Just because of being in the now. I sure in the hell don't expect a strong close. Period. P-E-R-I-O-D. Agree or disagree? Hey, Bobby's here. Uh-oh. Can't talk politics in the main room. Only I can. Tell me I'm funny. Watch this bounce off this here support level, and I didn't take the trade at 185. Randy. Oh, darn it. I knew it. I called it. We can't take every trade. I mean, I can look at anything and probably take a trade eventually. If I sat here and watched Apple all day. Okay, Jimmy. Type in Apple. Let's see if we get a knife here first. Because I could be gone for a minute and a half. We get a big knife on there and I could catch that knife. Randy, get ready. Has anybody ever ate squirrel in here? Has anybody had frog legs? We're looking at the 5730s right now. Randy, what are you looking at? Lunch lady's taking profit. Ladies and gentlemen, we would like to introduce Bobby. $53. You're going to try the 5300 with me, huh? Uh-oh. What did I just say? Did anybody see anything right there? Thank you very much. I'd still be very, 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 very careful. We're going into a big day tomorrow. Biggest, an election. So you want to, if you take the trade, you want to do it fast. Right now, we're kind of in the middle of a squeeze. It could go either way. It could easily, people just say, okay, I've had enough of this, and just get out right here. It's hard to see, but I want to keep this here line up here. This is what got my attention. That's called a dragonfly. Or yeah. You could have a little bit higher thing up here. Oh, 225. Okay. Now be smart. $225, $230, Randy. Hello, my name's Nancy. I'm the big guy's daughter. May I come in? Yes. Would you like a glass of water and a shot of vodka? Blake it. Don't play around with this game here, because it could easily just... We're saying, okay, we got these suckers right into power hour. Okay, now I'm gonna wait here. I mean, this would be a great idea right now, but dang, I still think we're gonna see the 200. Come back down one more time. 10-4. Randy says he could see 57.15 puts paying as well. 57.15s. Oh. You think you could, huh? Would you see that right there? Did you say that before that big candle? Hey, here's Bobby. Be nice to Bobby Day. Big day for Bobby tomorrow. Ladies and gentlemen, we are waiting for the 200 SMA approach. Jim, you really know what you're doing, don't you? Some days I do, some days I don't. But today I want to get a good grade. I love you. Okay, well, I'll turn this. Oh gosh, that chick again. Just comes natural.
A lot of the best and brightest students, because it is this enormous data set. It is incredibly competitive, and so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
She had a vodka and a Valium.
It's great, but it's not the formula for success.
You need to be able to find out.
Well, it didn't work.
And sift through.
We were supposed to come down here.
Staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Do, 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 do.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No.
The old guard is saying, away off with their heads.
AI feels controversial on it.
Have you set yourself up correctly? It's like Susie Orman going up to you. Have you set yourself up correctly?
In this market,
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Very bad commercial. Very distracting. Have you set yourself up correctly? It could give person nightmares. So far, I ain't had any, but man, I'm waking up to that.
Or left in the day here, stocks off to kind of a slippery start to the week. Obviously,
I might have been right after all.
Right behind it, so perhaps a little nerves showing up.
Look at that.
Surprise. Some of the stuff looks like it could arguably
Oh,
be
my
election
peanut
related,
gel.
Some of it not. Some of it maybe just a little bit of back and forth after. Last week was pretty clear directionally.
Hello, Jim. This is the Confidence Angel. Next time you lack confidence, always remember you can call me at 1-800-566-2323. Watch it come all the way down to the 200. This thing be at 250. We'll run, dude. Yeah, hell yeah, I can come down here. What are you looking at, Jim? It's evident. I know. Major mistake. Okay, I'll have to write you a ticket out. There's your $2. 205. 210. Very impressive, huh? 215. How's that? How's that? Stab your ass in the back right there. That 215. 220. That's it. I've had enough. 225. Yes, just had to do it, didn't you? Miranda. I called another put and didn't take the trade. Look at that. Oh my God. I think that we're definitely not going to close to the upside. If anybody had, history repeats itself. I personally don't think we could have too many mishaps tomorrow. The government might want to clean their slates a little bit. There it is right there. Support 1, 2, 3. So we'll move this over. Oh, I don't know. We still could hit the 200. Like this is probably, this election here is I would know exactly what to do. I did during the Trump election. I got that, nailed that. And we nailed the Biden one. Well, we didn't nail it, but we nailed the trade. This one, I don't know what to do. We could see a 10% correction, just as an excuse. Okay, get ready for the calls. Randy. We're going to jump over here to the 5730s. And I'm going to go in here and I'm going to buy 10 of these hot dogs. 5730 calls. Okay, you can do it, Jimmy. I know you can do this. You're the only one that can do this. If anybody can do it, Jimmy can. Okay, the crowd's going wild. I don't know, man. Something telling me to buy them and something's telling me not to. Could have grabbed him at $1. Oh no. Don't. Let's see here. 57.30s. Not in them yet. There's 95. Jim says, wait. I had a perfect opportunity to get 95. I'm pretty sure it could have got 95. Yeah, I'd be in and out of these already. Shit. There's 30. Oh, $300. $300. $1.30. Maybe we wouldn't have got it. It hit it, but you wouldn't have got it unless you were the lucky one. Randy, have a good call? Don't leave. Don't leave. Bubby. You know a Bobby Edson? I'm dying.
That was the Amazon part of it. So then I do think that right now, when you see the reasoning behind why they shut it down, what I think is the most important is they said this could cause huge ramifications on grid reliability and consumer costs. But also, if you look at any of the companies that are like powering much of the grid, especially in Arizona where so much of the build out is happening, I mean, there's going to be a massive energy crisis. So it makes it, then you wonder if there's like regulatory, if they're trying to like basically prioritize certain energy companies, not others. I then wonder like how deep that goes, but I know that right now, Constellation objectively had good earnings. I think just seeing, unfortunately, this downside momentum with the rest of the nuclear trade.
They did. You know, the thing is that the numbers generally were pretty impressive. So we obviously all know Microsoft is a very unique client of theirs in this case, given 3 Mile Island, but still, the growth is there, and that Microsoft stuff, which is in the 20-year pack, that doesn't even start. They're not even going to kick it off for a couple of years. So you're already kind of seeing the demand. The fact that their regulators were concerned about prices too, because Amazon, all these companies are willing right now to pay a premium.
Sure.
That's where one could argue, like, all right, if the big tech companies
90
like
cents.
infinite cash piles then are going to start paying premiums for energy, would that kind of start driving things up?
And that's why, because they're realizing how much energy they're going to need.
Yeah.
And they're looking at the landscape, and it isn't there.
Right.
And so what's going to trade at a premium is energy.
Yeah.
This country, this world, we're really good at setting up new ideas and forgetting about the infrastructure you need to set up those really good ideas.
Yeah.
We're learning that with EV charging stations.
That's the thing too.
right now, right?
Yeah, it's another good point. Is I would think that like the average consumer is not going to be sourcing their energy from nuclear. If we're literally starting these plants up to specifically feed into the data centers, let them pay the premium.
Yeah.
Like. I don't really get
Especially because the upside is so huge. I mean, like, for example, this proposed reduction that Talon saw last week would have increased their specific capacity by 60%. I mean, that's massive when you're talking about building out these data centers. I mean, for like AWS, I mean, money's there. It's a matter of, is the regulation there? I don't think so.
This world has to think of some energy better than wind and solar. Wind and solar's not going to get the job done.
It's the nukes.
Look at the solar stocks, too.
So we're going to harness the electoral blowhard nature of everybody. We're just going to talk.
We're great at ideas.
Yeah, we need to capture that.
And we're not great at the infrastructure needed for those ideas.
Okay, we're about to the 200 now.
Just redirect it to,
exactly.
to the energy.
Unbelievable.
Anxiety.
If I just would have had the patience to wait for that trade. So we're gonna. I'm still fighting the fact that we're going to have a new president coming soon, and the big day's tomorrow. But we could have another down day tomorrow, and then as the results come in, the market's going to. Well, the market says this and that, and the market knew that this is going to win, and we'll hear all that garbage. You'd be surprised how many bigwigs are for Kamala. Okay, this is it. I mean, it has to hold here. $57.30s. If I was to buy it, I'd buy it now. And I go small. .75. Oh, there it drops. Fuck. I was thinking about this before I bought that. Should I wait and see if it hits the bottom of that loop? So now might sell these real fast. We'll wait. I'll give it a little bit more time, but I think I'm. No. I know I can get a nice little boom boom on it. What time is it? 2:15. Jimmy waits. I made a business decision. Ah. Rate announcement this Thursday. Might have to sell them. Oh. Damn. Oh, that's Tesla. No, it ain't. Whew. Panic attack, Jim. Well. Ooh. Well, I don't think it's going to work. Now that we're one notch out, that slice out of the money, well, we still might get out even. What time is it? I better think about getting out of this trade. Now it's got to break up now or get out. Snap. Oh, what happened here? Break it. Now, this is where I need to get out right now. I still might have time. I think we. What do you think, Randy? Should I sell it? You got a woot? Let's not take too much risk. I wouldn't take too much risk. We have a continuation pattern, but we're so into the late in the day. I want to hold. Ooh. Didn't want that to happen. It'll look good. Schwab.
So market cap weighted, you just take those 7 names out, and the thesis behind that is not that Mag 7 is going to crash or that these stocks are no longer the darlings of Wall Street. It's just that, hey, they've run up a lot, right? And the earnings momentum and trajectory is going to start slowing down a little bit on these stocks. And you already have them. If you own the S&P 500, if you own SPY, if you own thematic ETFs, you probably have a huge level of concentration in your portfolio to these stocks. And what we've started to see this year actually is the broadening of performance across the market. And you have names like Palantir, you have names like Berkshire Hathaway, Costco, Eli Lilly, Broadcom, just to name a few, Vistra, Constellation Energy, that are just crushing the S&P 500 and the Mag 7. And so why not just diversify? It's almost like diversification is the hedge after these Mag 7 names have just run up so much.
Okay, so then how does it generally kind of fit in the portfolio? Because to your point, and it's a very important one, you've already got MAGs in any benchmark equity fund.
Yeah, it's just when you're trying to get into the market and you're trying to increase your exposure to the market or thinking about buying S&P 500 related index funds, why not look at this, right? And you kind of get that extra concentration to the breadth of the market outside of the Mag 7. And this earnings season is kind of playing out to prove that this is probably a really good fund to be in, right? While these names have done quite well and we're kind of getting what we expected in terms of revenues and performance, the outlook seems to be softening on some of them. And of the Mag 7, there's really only 2 or 3, and it was 2 prior to Amazon having decent earnings call. It was really only 2 of them that were outperforming the S&P 500, and that's Meta and Nvidia. Amazon's pretty much in line now, right? And so it's just time, I think, to explore allocating elsewhere.
Okay. And then what kind of do you envision that allocation being in terms of like size? Like, Obviously, part of the beauty of the market cap concentration is it's almost kind of like a destiny where if we believe the market's
Amazon's
supposed to do it's supposed to be an efficient,
nice.
discover value. Is this implying that those valuations are too high in those companies?
Yeah, I think it's just implying that, I mean, the index is doing what it's supposed to do. It follows its rules. It's just overweighted to the top 7 names. So I think, when a lot of investors want exposure to just the market, and we hear this from clients a lot. We hear like, I just want broad market exposure. If you buy one of the S&P 500 ETFs, you don't really have it, right? I mean, you have exposure to
X-Mag.
in theory. And so I think it's just for the investors that aren't in the market right now that, probably already have their Mag 7, their S&P 500 exposure. Like this can just be your new trade. It can complement what you already have. We're not saying to get rid of Mag 7. We're saying to, add in S&P minus Mag 7 for some diversification. And there's a lot of reasons for that, right? Rates are coming down. As we've seen this year, like there are different themes that are coming into play, right? Like AI power is one of them. And so you're seeing some of the, like the Vistras, the Constellation Energies, the GEs of the world take over, GLP-1s and healthcare. So you see Lilly rallying and, Broadcom and diversification of other semiconductor companies. I just think it's a smart way to reallocate some of your new funds to a new ETF product.
Will it have a momentum? So there will still be market cap weight outside of it, right? So you're still going to capture momentum from momentum winners, the way a typical market might function. I'm trying to think of like what your competing product would be, and I guess maybe one would be like an equal weight. If somebody just said, I could do like an equal weight basket or something of the market, and it will accomplish some of that neutralization of big tech, but not to the extent you are.
Yeah, exactly. So I think equal weight's a great way to do it, but this still allows you to, just to your point, to win with your winners, right? You still want the winners to run up. It's just like let's let the next group kind of play in the game here. And then they're winning. I mean, if you look at, kind of start going down the list and you look at the performance of some of these other stocks in the broad-based index, I mean, they are outperforming mega caps. So I always talk about mega caps. You and I talk about mega caps a lot. So still love those names. I think it's just at some point you do want to diversify and, kind of take a chance to have momentum on these other stocks that are performing.
Yeah, I mean, a lot of
we're at a 20-day low.
Stories of their own going. We talked Constellation taking a little bit of a hit today, but obviously a huge winner on the year. You mentioned Costco, I think, in there. Eli Lilly, obviously, the health and obesity stuff that's doing great. So it does give some.
It's a big one. I mean, there's
another one.
Palantir is a big. I know they're having their days in the sun and then they pull back, but I mean, I think these names are the future of some of what we're going to see in AI and tech.
Yeah, absolutely. It definitely is underappreciated, some of these stories compared to the Mag 7. You do got some longs, though, that you like right now. Give us the quick other side of the ledger, Sylvia. Where do you want to put some leverage?
Yeah, I think, depending on perhaps what happens tomorrow, but maybe it doesn't matter since they both kind of like reverted to the meat on this, but there's a chance that you get some crypto rally off of this, off of a decisive election. So one of the reasons we came out with the MicroStrategy ETF was just that, it tends to move 3 to 6x crypto depending on when you look at it over time. And so if crypto gets a bid, this might just be an ETF that shows some performance. And then, broadening out on the semiconductor trade, we really like Broadcom. We think it's another, kind of top player in the AI space, and it's done quite well. It's talked about a little bit less than NVIDIA, but the performance is certainly there. It is one of those 493 that's outperforming the S&P 500, and so good place to look if you want to kind of, leverage up the views on that. And then, of course, like I always love the quantum computing and the 6G. Again, this theme of AI and machine learning is not going anywhere, and supercomputing is the future of this actually working and the data being parsed for it to be effective and actually applicable to other industries and stocks. And so those types of thematic plays still matter.
Great stuff. All right, there we go. And not that the Mag 7 was a short trade, it's a trade of omission, but I like the straight lines too for some ideas. Thank you, Sylvia, as always. Very much appreciate your time. And like the creativity and the fun. Sylvia Jablonski, CEO, Chief Investment Officer, Defiance ETFs. Options, flows, positioning, dealer analysis next. Mr. Kevin Green on deck. 30 minutes left. Stocks are down a little.
Just a little?
Trading at Schwab Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
29 more minutes.
Stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Market On Close. Let's check out some options flows with Mr. Kevin Green. S&P still pretty much where they were this morning, unfortunately. KG, anything to report?
Well, it does look like it's going to get a little heavy here to the downside.
Anything to report?
To the close here, Oliver. That's just what we're looking at right now when you're looking at the put flows as well as just the lack of confidence for a lot of the bulls out there. Not seeing a lot of strength when it comes to call buying. You're seeing a lot of call selling from institutions, but not a lot of optimism or speculators trying to get in, thinking that we're going to get a bounce. So if you kind of look at the pattern here today, we had these levels from this morning. We talked about the 57.35 level, and that was kind of the area of resistance as soon as we opened up the market. And we came down and actually broke through that 5,700 level, only to really recapture. Right now, once again, kind of looks like we're hinging lower. But if there's a bright spot for this chart, which it doesn't look great, we had this channel that actually formed on Wednesday of last week, and it was, I mean, we had just constant selling to the downside. And then on Thursday, we kind of had that breakdown of the market, got out of that channel, and then we kind of got back into that channel on Friday. What's interesting today is that we actually got back into the channel, broke out, and now it looks like we might be touching that upper end of that channel level, which is going to be, was an area of resistance, could now be an area of support. So if you're kind of looking at it over the next couple of days, let's see if we're going to be able to bounce off that channel line and then move higher here. But it's not really that great that we did kind of test and make a new low or intraday low when it comes to the S&P 500 over the last couple of trading sessions here. Once again, just not a lot of buyers really stepping in right now. It's
not right now.
Pressure on the top end.
Okay. All right, but we're also not breaking down. We're not falling through. We found some decent support somewhere around here for now, or how fragile or strong does it look?
For now, you know, it does look a little bit fragile when you're looking at the amount of buyers that actually stepped in around that 5,700 level. It actually did take a little bit of time for us to kind of get a quick reaction or even any type of reaction from dealers out there. So I just feel like, once again, we're just a little bit top heavy. We try to make a little bit of a recovery, but it's fading right now. And going into the close, we're going to get market on close orders in about 5 minutes, 10 minutes or so. If that's going to come out and it's going to be mostly, you know, sell side orders, if you will, that could also push us even lower on the session here today. I'm hoping that 5710 actually holds for the S&P 500, and if not, and we actually do gap lower or break lower than that, then I would say 5700 can be in the cards here. I'm not seeing any type of flows going lower than 5700 that will really capture my attention over the last, let's say, hour or so. Earlier this morning, we did see something around the 5680 level, but I haven't seen anything ever since there. So 5700 is going to be the key area for us to potentially hold here.
looking at your total volume dealer per strike to go to the kind of the histogram version.
There's that
of
first
this,
support.
To your point, 5,700
Shit.
kind of being the biggest exposure down there.
Oh man, Randy, I love it right
Also,
here.
pretty good amount, like 5,710 if you go by volume. Whereas it's a little bit
SPX.
steeper on the call side. It seems like where maybe there's some kind of intermediary levels of support perhaps, whereas like the call side blows out pretty quick.
Yeah, so on the call side, that's really
5720s.
showing you calls that were pretty much sold on the session. So those are collar positions or what have you. It's not really showing aggressive buying activity at those call levels. Just so you have a little bit more
We
context.
still could
On the
drop
put
another
side, it hasn't been as aggressive, but once again, as we continue to go down,
560, 568.60.
levels are going to basically increase. That's just going to show you the amount of
Or we get them here at a buck.
keep that in mind too. The amount of exposure that dealers have to risk as the market moves to the downside. So when this was printed, we were actually kind of back into that channel. If we can bring up that intraday chart, I had this channel that was actually out there to the upside where we were kind of hanging out at, if you will. That's when that histogram was actually being made, which is why you see that skewed in the upside on that for the calls. Now, if we did a new histogram, you would actually see the downside kind of filling out, if you will. So that's kind of the dynamic, and this is how when we're looking at levels, this is how it shifts. It can shift fairly quickly, just based on where the current market is at, and as well as the amount of volume going into each and every one of these strikes.
Okay, good stuff. I like it, and it seems like for now we hover, basically, and we'll revisit these tomorrow to see if there's any last-minute anticipation or positioning going on. Appreciate it, GT, or rather KG. Thanks, man. Kevin Green, 5710 in the S&P right now. We're going to come back, talk some trading with Scott Bauer, looking at that Trump versus Harris trade notion of the coins versus the sun. As the TAN ETF has had a pretty big pop. We're also going to take a look at a beat-up stock that's getting some love in case you didn't see it last week. The wheels are turning again a little bit at Peloton.
Dude.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Welcome back to Market on Close. Let's talk some trades with Scott Bauer, CEO of Prosper Trading Academy. Branching out from our stock conversation a little bit, but where there is some overlap, Scott, is the idea that maybe there are some bifurcated political trades in the market. We've kind of talked about the crypto side of it, which I kind of sympathize as maybe the actual, one of the few actual like policy trades out there.
Yeah, it seems to be a policy trade, Oliver, but I think there's too much already baked in, though. What do I mean by that? If there's a Trump win, you know, the thought process is that he's way more pro-crypto, and analysts are saying we could see 85, 90,000 pretty immediately here. I'd be very, very cautious.
Oh.
On the flip side of that, with
What happened
on the
here?
Harris side, you know, not being as friendly to the crypto space, and the Biden regime, you know, being more hawkish, continuation of that is the thought process that maybe we see Bitcoin down around the 50,000 area.
Randy,
I think that's too severe.
you see anything different there?
The election here, I will tell you that Bitcoin is trading at one of its
Oh, she
highest
dropped.
implied volatilities of all time. It's around 65%. What does that mean?
What does it
That
mean?
means at a 65% implied volatility, the marketplace is expecting
Oh, God.
that volatility.
That's not good.
Bitcoin could move as much as 65% of the current price over the next year.
To the downside.
That's a pretty big number. If you know, we're just to round off Bitcoin to 70,000 or so, you're talking you could see a $42,000, $43,000 move over the next year.
Back
Now,
to 20,000?
that's very unlikely to happen, but anything can happen. But the anticipation is a really, really big move over the next week or so.
That's where it really gets, you know, pretty cut and dry.
145 to 185.
Crypto bulls is whether or not they can break out of this long-term bearish divergence. Since the first time we got into the 60
$2
handle back in 2021, momentum into there was screaming. And then later that year, as we pushed into 2022, we tried the mid-60s, and momentum was a little lower. And then actually, even though we had a pretty big ETF run, this latest push was a little lower momentum too. So if we break out and get this big move that they're hoping for, that would end that series, because that would have to require some big momentum.
75 to 170.
And you know, I don't see that happening, to be honest with you. I think you may see an initial euphoria. If one side wins, you may see an initial sell-off. If the other side wins here, I don't think we're going to see a massive move. If you were to ask me where we're going to be 3 weeks from now, or 4 weeks from now, I'd say that 75 is still a pretty tough level to break on the upside, and 60 is probably a tough level to break on the downside.
Kind of a nasty little candle from last week on the weekly for Bitcoin, giving that long wick, right? I'm not the expert on the charts. I'll have to ask one of our chart masters, but just shows how hard it faded. It's kind of a tough little range to get through now, to your point.
Oh, there's no question about it. You have more people watching it, than ever right now, and I would expect some really, really violent moves tomorrow night, Wednesday night. I mean, the longer, obviously, the election results get protracted out, the more this volatility is going to remain. But I think you might see some pretty big candles over the next couple days.
Yeah. Maybe it's an inverted hammer. That was still technically a green candle, so I'm not sure if that's the definition. All right, so the possibility this thing could stay with the 7 handle might be a little bit frustrating for those looking for like a massive rip. But Scott, when you think about where some of the other trades are laying today, bonds firming up, dollar down, crude stands out to me as a bounce there. WTI up 3%. I'm not sure if that's a one. I mean, I know people will argue energy is like a political thing, but the chart has been so uniquely sort of agnostic to that stuff and just range bound and seemingly supply driven in my mind.
Yeah, I think we have to be careful of any rally here. Whether it's on the delay that we saw of production, or whether it's on the rhetoric that Iran is imminently going to attack Israel. I think we have to be careful of any rally. I am still in fade the rally camp. Not yet here, just because we're up a couple bucks, trading over 71 today. I don't want to fade it quite yet. But this market sure has been a fade the rally rather than a buy the dip market in crude.
Any clear reason why it would change? Is crude just fade every rally dead money right now, or what do you think?
I don't believe it's going to change until the narrative changes about supply and demand. We've got an oversupply and very little demand, especially when you see what's happening out in China. So until the fundamentals change, sure, you can get a shock to the system based on geopolitical events or something else, but I don't see that fundamental narrative changing anytime soon.
Okay. There was some action for natty gas today at 4.5%, but it seems part of the same sort of range-bound conversation. To shift it over for a sec, Scott, because I know you got range. Talk to me about gold for a sec. We haven't talked about it much today. Took a little bit of a backseat Thursday, Friday last week after obviously an incredible run.
It's about the only time it's taken a backseat over the last 9 months or so. And as we've discussed, Oliver, gold to me has been a buy the dip, completely opposite of what we've seen in crude. It's been a buy the dip, and it's worked for a very long time. I do think we will grind higher. And I also think that, come tomorrow night, come Wednesday, if it's clear that we don't have a decisive winner, at least for a few days, maybe a week or so, I think you're going to see gold rip to the upside.
All right, nice. Juicy, love it. Okay, thanks, Scott. Appreciate the thoughts.
You got it.
Always a good walkthrough with market action. Scott Bauer, CEO of Prosper Trading Academy. Jenny's standing by with the latest on Peloton. After a pretty big pop the last couple months, we now get a double upgrade, Jenny. So from a sell to a buy, a hater that was broken or what?
I hate her that was broken. I mean, at this point, this analyst at B of A did have a $3.75 price target. That was 48% below Friday's closing price. So now moving his price target up to $9.
Whoa.
He's just accounting for the fact that but also this is a name, depressed, down 96% over the last 3 years. And we saw some movement on the back of, really just the CEO now taking over for the company. This was a co-founder of Apple Fitness Plus that is now being named the new chief executive at Peloton. So I think that's significant. Stock did trade at a 28% upside on Thursday post that announcement, 15-month high, then retraced about 14.7% on Friday, and now attempting to regain some of that strength. I think that we're looking at obviously a very different Peloton than we were ever at its peak, and that's just the nature of the overall environment right now that we live in. But this analyst did mention that they see this new CEO as well suited to reinvigorate subscriber growth, given subscriptions, hardware, and health technology overall right now are such a valued experience. He did say he was surprised by the much higher than expected underlying profitability in the form of earnings that were basically EBITDA, he said, and they highlighted the upbeat now 2025 guide. Also to see some EBITDA on an annual basis of roughly $400 million, or as possible as $400 million over the next several years, saying that he has right now a lot of belief the company will continue to trim their costs. So I think we all hope that that's the case. I think that Peloton's story has been one where we've seen a lot of disappointment, frankly, as of late, but it was amazing to see that 15-month high. So this name does tend to move, and it's volatile. So, I guess it's one of these names for earnings. I can understand trying to capture the significant upside when they are able to have these rare moments where they do please the street.
Nothing changes sentiment like price. Case number infinite, basically. $3.50 up to $9. Probably has something to do, not to be a cynic, with the stock's rise from $3.50 to $9. 8.92 as of last week.
The classic Monday morning quarterback. That now that we rallied, everyone wants to raise their price target.
Yeah, but these things can add up if the other analysts, their data have to follow suit and kind of have to get a snowball effect going. Sometimes that happens. So something worth watch. Here's Peloton's trying to make a comeback. Thanks, Jenny. Appreciate that very much. And 16 holds still. So a lot of potential haters that can break further. When we come back, our big picture team takes us into the bell. Talk about the Fed and more this week as we head into a close with stocks under pressure. We'll have earnings on the other side. A couple fun names, not exactly giants, but Wynn Resorts is reporting alongside Palantir and NXPI, worth looking at.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
$57.15s went up 100% on that. Nice. Blah.
All right, stocks are slipping a little bit here into the close. Let's zoom out and talk about the big picture. Fixed income, international investing. Kathy Jones and Michelle Gibley join me for the big picture discussion. Kathy's the chief fixed income strategist. Michelle's director of international research. Good afternoon, ladies. Great to have you here on a Monday. Kathy, get us started. Let's talk some bonds. We got a little pushback today in treasuries to the overall selling trend. Anything notable in your mind?
I think it was mostly unwinding election trades. We had the kind of Trump trade going on. People got very enthusiastic about, and now it's time to pull that back and wait to see what the actual results are. So more than anything, it looked like positioning and unwinding those positions going into the actual event.
What about Fed on Wednesday? Is that playing how big of a role? Is it backseat driving or is it like still at home?
Yeah, my impression is that nothing's really changed with the Fed. They'll cut 25 basis points because that's what they've signaled. The question is going to be around forward guidance. Will we hear that they're inclined to pause perhaps at the December meeting because there have been so many revisions to the previous data? They can't get a clean read because of the hurricanes and the strikes. So they may sit back and say, we got this far, we think another 25 is appropriate, rates are pretty high relative to inflation, but really not sure going forward. And at this point, they could skip the meeting in December, take a measured pace, kind of wait and see what the landscape is after December, and get a read on everything that's going to go on in 2025.
All right, and obviously we know that the Fed acts independently of these other events and other central banks too, but Michelle, they're not the only one on the calendar this week. Got Bank of England too, right?
Yeah, that's right. There's a couple of central banks meeting besides the Fed. Also on Thursday, the Bank of England expected to cut rates by 25 basis points. And also Sweden's central bank is expected to announce a 50 basis point cut. And Sweden could cut another 25 in December resulting in a year-end rate of 2.5%. That would be the lowest among the major central banks. Inflation in Sweden is down to 1.6% and falling, and economic growth there is slowing.
So generally, rest of the world, for the most part, on fairly similar paths towards easing. We can paint with a pretty broad brush when we look beyond, Michelle.
Yeah, I would say that inflation is falling a little bit faster outside of the U.S. and most of the central banks started cutting rates sooner, and so that's why they're kind of continuing on their path, and even some of them stepping up to 50 basis point cuts.
Kathy, does that keep the dollar at least stable if the other, even though we're going 25, if everybody else is still kind of clamoring to go a little faster?
Yeah, it probably keeps the dollar pretty firm. You know, it's been in this broad trading range for about 2 years, but as long as you have that wide yield spread, it's really hard to be short the dollar for any length of time because the cost of carry is so expensive. So I think that we'll continue to see, you know, this 200 basis point difference between yields elsewhere in the developed world and the U.S. kind of keeps a floor under the dollar. Now it's probably overvalued from a long-term perspective, but you don't trade valuation that way. So I think for now it puts a floor under it, and we'll just kind of continue this sideways pattern until something changes, till the cycles begin to change again.
Yeah, fair enough. Also on the calendar, Michelle, let's talk China for a sec. What's going to matter this week?
Yeah, China moved its budget meeting typically in October to this week, perhaps to be able to calibrate the size of its stimulus based on the outcome of the U.S. election. And so, you know, details on fiscal stimulus is what we've been waiting for. It's the missing piece of all the announcements over the past month. And so the National People's Congress Standing Committee meeting ends Friday. Markets are hoping to hear a little bit more on the consumer side for some stimulus on that part, but at the same time, confidence has to start somewhere, and restructuring local government debt and help for the property sector could be welcome, but they may wait until either mid-December at a meeting at the Central Economic Work Conference, or potentially even as long as March. But I think at some point, if this is a long, drawn-out process, markets could start to lose patience.
It seems like the China trade might be reflecting some of that. It's kind of stalled out. Maybe a little lack of patience. Good stuff on the calendar, though. It could be a busy week there, too. We got a lot to keep track of. Thank you very much, guys. Excellent setup for us for the week. Kathy Jones, Michelle Gibley. We're coming back for some earnings and our closers panel. 2 minutes away.
1 minute, buddy.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Oh, very good. Well, tomorrow's a big day. It's Tuesday. So make sure you go out and vote. That's where I'm heading now. I wish everybody a great day, and we'll see you tomorrow. But tomorrow, we're going to open red or we're going to open up green. I bet you we'll open up flat. Unless something happens. Depends on, it's going to be one of them news bringing in days, I think. So probably open up flat, and then we'll see what the market how it wants to react. And that's what everybody else will be waiting for. How's it going to react? Scalp until we find out. Today was great scalping day. And I'll catch y'all later.